मुझे Alex को
Thank you so much, guys. It's also that stage of life where you don't want to necessarily be reminded you're getting a year older. But
this was all being done for a return gift of a gold bracelet.
Yeah. Oh, wow. No, have you looked at the economy in the markets lately?
Biscuit is also fine.
Whichever.
Biscuit is fine.
We're at Parle G right now. Please look at what's happening with the markets. But no. Thank you, guys. And hopefully it promises to be a slightly better day by the end of it for the markets, because it's been a dismal and pretty tough run, and corporate results are not giving any kind of support.
Yeah, they are. And by the way, just before we move all lock, stock, barrel to what's happening around trade and all, I don't know if you guys knew, but it caught me by surprise. I mean, one, that the large language models, we're talking about AI and what's happening. By the way, we're also talking about crypto in a big way today. But AI, when you think of AI, the large language models from OpenAI and Google DeepMind got to gold in the International Mathematical Olympiad 18 years sooner than the experts had predicted back in 2021. So it's happening at a much faster pace than what was envisaged. And I wonder that what we are thinking about what AI would do, would AI do that multiple years earlier than what we think?
Yeah. Also, the constant refrain that we thought AI would make our lives easier in terms of drudgery and everyday tasks that nobody wants to do. Not necessarily to write poetry and compose mails and
or get psychiatric help, for God's sake.
And win maths Olympiads. But having said that, quick look at what the global markets are looking like this morning and what the setup is. It was a mixed day of trade in US markets. S&P 500 and NASDAQ closed at record highs with modest gains. You actually had the Dow in the red, while you had the S&P 500 and the NASDAQ up. It is a record high because it's just one more day of highs, but the gains weren't that great. Bond yields have risen ahead of the Fed decision on Wednesday. That's going to be important Thursday morning for us here in India. The 10-year at 4.4. For the world, listen to what Trump is saying, because I think the next big thing to watch out for is going to be what's happening with tariffs. The August 1st deadline is racing through. There are a lot of deals that have been made, not one with India. And even as we wonder what's going to happen with the India negotiation, look at what Trump is saying. And I'm quoting here. He says, for the world, I would say it'll be somewhere in the 15 to 20% range. I just want to be nice. So this is the nice version of Trump, where 15 to 20% tariffs is what you get. Oil prices have, of course, spiked after Trump says he will shorten the deadline to Russia to end Ukraine war. If you're wondering what that deadline is, remember he'd given 50 days, 50 days to Russia to wrap up the war in Ukraine. Otherwise, he said he's going to start sanctioning the oil exports that Russia makes. He's shortened that deadline. He's saying it's going to be 10 to 12 days. So a bit of pressure on crude after that. Brent has risen above the $70 mark. Asian markets are also mixed ahead of the US-China trade talks. There's hope of some completion over there, and you're seeing that pressure coming in. The Hang Seng over 1% down, Nikkei over 1% down, Shanghai also down in the red. Expect some of that pressure on Indian markets as well. Let me pull up the implied for you very quickly. And you're looking like you're going to have a weak start, about 50 points in the red. I mean, this July is turning out to be quite a dampener, I must say. We started off the month talking about how historically July is great, has been a positive month in the last 10 years, not this year.
Yeah, certainly not. And just goes to show that you can't base projections of the future on what has happened in the past, because July has been a fantastic month for markets for years before this one. But let's talk about what happened in trade yesterday. In fact, the Nifty 50 has lost ground for a third day in a row. It has now lost 550 points since Thursday in just 3 sessions. So you blink and you miss it. Foreign institutional investors have remained net seller for 6th straight session, and domestic institutions have been mopping up quite a bit of those sell flows, and they have net bought equity for the 16th straight session in a row. Kotak Mahindra Bank, in and of itself, accounted for a large part of the Nifty 50's fall, 150 points for the Nifty 50, about 50 points or thereabouts because of Kotak Mahindra Bank in and of itself. Bajaj Finance also continued to drop, lost another 3.6%. And by the way, just over the last 3 sessions, Bajaj Finance has now dropped 9%. Wipro, IT as a whole, and I'm talking about the Nifty 50 constituents, saw quite a bit of selling. That is amidst that TCS layoff announcement that took place. The worry, of course, is that other large entities like Wipro, for example, would also lay off employees. Broader markets continue to see capitulation, and you had the mid-cap index that lost another 0.9%, 1.2% lower for the small-cap index, and the market breadth was heavily tilted towards the declines, similar to what you saw in the previous session, 2:9 ratio in favor of the declines. The India VIX also interestingly moved a little bit higher, 7% higher, but it remains subdued at that 12 mark. Most sectors lost ground, but realty by and far was the big loser in trade yesterday, and quite a few of those frontline realty stocks plummeted in trade. Lodha, Godrej Properties losing over 5%, DLF, Oberoi Realty, Brigade Enterprises all losing over 4%. Even Suntech was down over 4%. The question that you might ask is this related to profit taking? Because I was just looking at the recent high, and that was on the 6th of June, and since then the index is down 12% or so. Or is it to do with the worry that layoffs in the IT space will lead to problems and demand might just get a little soft down the road? That's something to debate and discuss. Defense and PSU banks continued to underperform, and they each, as an index, lost 2%. Pharma remained a relative bright spot for a second day in a row, though, and you had 0.4% of gains. I wonder if this sector, again today, will be in focus on the back of results.
Yeah, certainly could be. And a lot of others, or a lot of these sectors will continue to be in focus. But I think one, that there are contrasting forces at play today. One, that the unease of no trade deal thus far might continue to weigh in. And that should be something that everybody should be talking about for sure. Because also remember, it's expiry week. We have the expiry day after tomorrow. So therefore, it is traditionally a very heavy week. Coming in with the FOMC decision just around that time, and earnings season on. So this piece certainly remains in focus. But at the same time, the PCR is at 0.65. Usually from these levels, the market tends to bounce back. There are quant indicators which are in the extreme fear zone. All of this is a perfect recipe for a bounce back. Now, the reason for the bounce back always comes later, but tech indicators, quant indicators kind of indicate that this seems to be oversold. I think we are kind of in that territory now. Whether it happens today, tomorrow, day after, anybody's guess. Whether the trade deal leads to it or something else, anybody's guess. But I think the risk reward, not in favor of very large leverage shorts now at these levels. You want to be careful on very large leverage shorts. There is a chance of a bounce back because technical indicators indicate that. And guys, I mean, we're talking about CDMO all the way through, and then I was thinking about it, right? I mean, yesterday just trying to compare what the price performances has been. Yes, Laurus has been a phenomenal runner and very expensive, but not all CDMO is expensive. And then in the sense, one in terms of valuations, two in terms of a rally. And there could be some value buying being seen. It got triggered, Alex, by the way, yesterday, because me and Taman were talking to a technical analyst who said that the risk reward on Piramal Pharma is very, very impressive. So I was looking at the price rallies. Divi's, the last 1 month, it's down 3.6%. Piramal Pharma is up just 0.55%. Cohance Life, just up about 3%. So a lot of other stocks haven't rallied. And therefore, this buzz around CDMO, even if Laurus were to go quiet or see some profit booking, might well stay alive for some of the others. So keep an eye out for them.
Interesting.
I think pharma in focus also because Torrent Pharma, again, a good set of numbers, and we'll talk about some of those as well. I suppose earnings is going to be on top of mind, Neeraj, and even US earnings. Is that what you want to talk about right now?
Okay, yeah. So, just a quick piece here before we maybe delve onto the domestics as well. And here's the piece. Like yesterday, and in the last 2 days, there are some things that have happened. So, for example, Mike Wilson of Morgan Stanley is on record in an interview with Yahoo Finance saying that earnings revisions breadth or the ratio of companies raising forecasts versus trimming them have rebounded. And the earnings revision breadth is in line with the uptick in the S&P 500. And he goes on to say that this strong fundamental driver is underappreciated or unappreciated by many market participants. These revisions lead actual earnings estimates, by the way. And he says that the current recovery in the outlook is rivaled only by the pandemic era rebound, wherein, he goes back all the way to 5 years when the pessimism was so large. And they believe, or at least Morgan Stanley believes, that the rebound in the earnings revisions helps remain bullish for the next 6 to 12 months. This is in an interview with Yahoo Finance. And separately, I mean, the FactSet data seems to suggest that the earnings in Q2 for the US have grown about 6.4% from 5% seen on June 27. So there is an upbeat move there. And even Oppenheimer has gone out, guys, and said that they are revising the year-end S&P 500 target to 7,100 from 5,950 because they believe that the progress on trade talks remove the uncertainty that weighed on the outlook, and therefore their earnings estimate also goes up. So it's all hunky-dory for the US markets. I wonder if that weighs in on.
You know, which is why I wanted to paint that contrast, because it's a mixed bag for Indian markets. And Goldman Sachs pointed out to that yesterday, a whole bunch of earnings today, and earnings in a lot of companies that are high beta and have a lot of interest in them. So obviously I can't enumerate all of them, but just a few to look at. Amber Enterprises, Larsen & Toubro, Asian Paints is one that I'll be looking out for. Allied Blenders, Star Health, Triveni Engineering, Varun Beverages, just a few of the earnings that are on my radar. Apart from that, it's very clear Indian equity markets are showing weakness. Nifty is entering oversold territory after 3 consecutive sessions of decline. Some technical indicators suggest a bounce, so that's something I agree with you on, Neeraj. But absence of strong positive triggers and persistent FII selling could keep the markets under pressure. You need some clarity coming in, and maybe the trade deal is a big one. I think fundamentally the fact that India was to be one of the first countries to have inked the deal and it's not come through might be a bit of a concern. If 15 to 20% is the new normal for us on imports from the US, and then we kind of have to import more, that's also a bit of a negative from that point of view. Meanwhile, FIIs have been net sellers in the Indian market. Last week, cumulative outflows were upward of 13,500 crores. And July overall has seen outflows of nearly 26,400 crores. This was primarily due to relatively high valuations in India. This sustained selling pressure is a significant negative with the August 1st deadline of reciprocal tariffs nearing and the lack of any progress on this. Analysts predict the index may remain under pressure with the possibility of slipping towards 24,550. Immediate crucial lower support at 24,500. Immediate resistance at 24,800 and 24,950 for the Nifty. Meanwhile, on Bank Nifty, resistance at 56,440, 56,580, support at 56,000, 55,860 and 55,640. So it's a tricky terrain. But yes, on the monthly expiry week, what's the F&O setup looking like? Puneet joining us for more on that.
Well, thank you for that. So consistent selling pressure across the broader as well as the benchmark indices, and we're at a very key level for both the Bank Nifty as well as for the Nifty as well. So as you rightly said, we are currently more closer to 24,500, and that is going to be the new support now. Gone are the days where 24,900 would be the key support, and that's largely going to be driven by the auto numbers in this particular week, where we're going to see the likes of Mahindra and Maruti come out with earnings. So IT has done its bit and not favored the index. Banks were largely supported, but the next leg of earnings will be key for the Nifty, at least for now. The Bank Nifty as well, much closer to 56,000 now, and that's one of the other levels to watch out for. When you look at the foreign investors position, we saw a big sell number across the index and the Nifty options yesterday, and hence that's further put pressure on the index long maintained by foreign investors. It's at 14.6%. For foreign investors, contrary to the market, they've largely maintained a neutral position in the put to call ratio at 0.97 versus 0.65 as you guys highlighted for the market. So essentially for foreigners, they maintained and continue to maintain a short position as a hedging instrument, and that's visible in the index long as well. And finally, the open interest distribution. Now, although 25,000 remains one of the key levels, we've started to see formation at the lower levels as well for the calls at 24,800 and 24,900. And as time goes by, we will see some more consistent increase in open interest for levels below 25,000 and between 24,500 and 25,000, and that seems to be the writing on the wall. For the puts, we've seen the open interest as we are coming close to the expiry lower across the board, with 24,500 seeing the highest open interest. So that seems to be the story of the market, largely driven by earnings of the second leg now. But consistent selling pressure on the Nifty as well as on the Bank Nifty is currently the story that we'll have to accept.
Okay, so consistent selling pressure on the bank nifty may not ease today after IndusInd Bank numbers. That's the first one on my list, and it's a thumbs down. The only caveat here is, yes, the numbers were bad. Yes, NPA provisioning has gone up. Yes, ROA remains under 1%. All of that bad stuff is there, but it was expected. So that's the only, sort of asterisk mark I would put to this, that could you see a bit of a bounce back because the worst is over. Having said that, this is just purely what the numbers look like. Adjusted margins have held up. Provisioning continues to remain elevated. Asset quality has worsened sharply. GNPA up 13% QOQ. Growth is completely absent. Now, some of this would be expected after all of the adjustments that they have done. One brokerage report has referred to it as kitchen sinking, where it's a cleanup act which has taken place. So you're going to see the reverberations of it on the balance sheet of IndusInd Bank. The net interest income was at 4,640 crores versus 5,410 crores year on year. So it's down 14% year on year, but 52% up on the quarter. Operating profit at 2,567 crores was down 35% year on year, sharply up quarter on quarter. Difficult to compare because of all of the action of the last quarter, so keep that in mind. Provisions at 1,760 crores, so that's down 30% on the quarter. PAT at 604 crores, down sharply on the year at 72%. ROA at 0.45% versus minus 1.74%. Now, here's what Morgan Stanley is saying. They've maintained an underweight with a target price of 750 rupees. They're saying the NII was a beat, fee income was a miss, core PPOP, excluding IT refund and others, was 11%. That's the pre-provisioning operating profit. That metric was also below estimates. Slippages remained high at 3% of loans, as did credit costs. They've reduced earnings by 15 to 20% in FY26 to 28. They expect FY26 to be very weak with ROA of 0.6% with a gradual recovery in FY27-28 to 0.8 to 1%. Macquarie has maintained an underperformed target price of 650 rupees. They're saying ROA below 1% looks like the new normal. PAT is in line. Higher NIMs and treasury gains have offset by lower fee income. Slippages remain elevated, leading to higher credit costs. Given the kitchen sinking done in Q4, QOQ slippage comparison is not possible. So overall, I think you have a bit of pain that continues in it. Like I said, the only contrarian bet, if at all you might say, is how worse can it get. The worst is now been factored in terms of the stock movement. But in terms of how the numbers looked, are very clearly a thumbs down. Let's talk about GAIL. Numbers largely in line, I would say. Revenue down 2.6% to 34,769 crores. EBITDA was up 3.7%. EBITDA margin has jumped from 9 to 9.6%. Net profit down 8%. Lower owing to lower other income and higher tax outgoes though. EBITDA was higher owing to lower raw material costs and other expenses. Gas transmission segment is strong while trading. Petrochemical and LPG segment weak, gas trading weak owing to muted demand. Petchem reported losses yet again because of a 23% drop in volumes and weak margins. LPG profitability was lower owing to lower realizations. Macquarie has maintained an outperform with a target price of 215 rupees. They've said it's a muted quarter. Petchem has dragged. Transmission volumes were soft. They believe this should improve. Gas marketing has been offsetting losses for Petchem. They see a reversion here as gas marketing margins moderate alongside reduced losses for Petchem. They have a conference call later this morning, and considering the way the stock has already corrected, you might see a positive bounce back there on GAIL. So just watch out for that, especially when we get more details on the conference call. Do keep it on your watch list. Mazga Dock is the third one, and it's a clear thumbs down because you are continuing to see disappointment here. Revenues are up 11.4% to 2,625 crores, but EBITDA is down 53% from 642 crores to 302 crores. Margins have just crashed from 27.2% to 11.5%. Net profit is down 35% from 696 crores to 452 crores. So You continue to see pain in this space, and you saw that with defense stocks yesterday as well. Doesn't get better for Mazgaon.
Yeah, second quarter in a row for Mazgaon and not looking good. I wonder if there's going to be further profit taking. I've chosen to take two renewable plays in my three stocks, and the first one, let's get to it. Waaree Energies. It's a solid set of numbers. Strong revenue uptick amidst production ramp up. Strong margin expansion also seen on a year-on-year basis. It's flat sequentially, but it's at the highest level that it has achieved. The other income has aided PAT on a year-on-year basis, the PAT growth. Its quarterly module production stood at 2.3 gigawatts, which by the way is the highest ever. Remember that they are currently building up capacity, and they aim to take their capacity, which stood at 12 gigawatts to 21 gigawatts in FY27. The order book is also strong at 49,000 crore rupees. Now take a look at the key numbers. The revenue uptake was close to 30%, EBITDA up 80.5%, the margins standing at 22.5% compared with 16.2% in the comparable quarter a year ago, and the net profit rising as much as 90% or 89% or thereabouts. The other income came in at 171 crore rupees compared with 88 crore rupees. So there is a bit of a buffer that comes through from that, but operationally strong quarter. And so too was the case for NTPC Green Energy. It was a steady performance, strong revenue growth, margins were intact. There was a higher other income that bolstered PAT growth for them as well. But take a look at the key numbers. Revenue increase of about 17.6%. The EBITDA has also increased by approximately that much. The margins look strong, stood at 88.7% and were flat, and the PAT number is up as much as 59%. So between the two, Waaree Energies better operational performance. NTPC Green got a bit of a leg up on account of its other income, which stood at 89 crore rupees compared with 21 crore rupees, but nothing really egregious about that performance operationally as well. I've borrowed that number, as you can tell, from Neeraj Shah. Paradeep Phosphates, strong numbers, thumbs up. And this is another fertilizer company that is doing well. And this, of course, is in the non-urea space. Diammonium phosphate is what they make. And there are a few pricing triggers that are interesting to watch. Of course, a lot of these fertilizer and crop protection companies gained quite a bit of ground stock price wise because of the monsoons and the early onset and everything that took place because of the expectation of a bumper harvest. But the key takeaways from the quarter gone by, it was the third quarter of sustained revenue growth. It saw margin improvement both on a year-on-year basis and on a sequential basis. In fact, it was the highest quarterly profit in at least 3 years. The revenue uptake was as much as 58%. The EBITDA came in at 466 crore rupees compared with 147 crore rupees, and the margin has doubled on a year-on-year basis, a 6 percentage point increase to 12.4%. The net profit coming in at 256 crore rupees compared with 5.4 crore rupees. Of course, if you look at it on a sequential basis, the last 3 quarters have actually been good, and it is a significant improvement from a year ago. It has moved up quite considerably, bear that in mind.
Okay, watch out for one good and one bad, or rather 2 good and 1 bad from mine. KEC is steady as she goes again, right? 11% uptick in revenues, EBITDA margin 7% versus 6%. As per guidance, right? They've spoken about how they will consistently try and move margins slightly higher. Very difficult to move margins in this business very, very high. Keep that in mind with the nature of business that KEC has. And profit after tax up 42%. I mean, not a bad quarter. Chemplast Sanmar is the interesting one. And the reason I point that it's interesting is because it's a stock or it's a business that has been touted by a number of people as being a very interesting one, but the results belie that. So revenues down 3.9% at 1100 crores versus 1145, which is okay. Look at the margin drop, 1.6% versus 10.8%. And the net loss at 64 crores versus profit of 24 crores. Now, why I thought this was particularly important? One, there is a steady deterioration over the last 5 quarters. And there are losses in 7 out of the last 9 quarters for Chemplast Sanmar. And this stock shot to fanfare because Amansa Capital holds 7% stake in the company. In the last 8 quarters, they've taken the stake higher from 4.5% to 7%. So Akash Prakash, noted investor, has upped his stake in Chemplast, and the results have only deteriorated. Now, will they turn around? Hopefully they do. We'll try and get the management as well. But this quarter was very, very shabby. Very likely the stock could get punished. So keep an eye out for this one. And then lastly, Torrent Pharma. Now, the results were good. The reason I'm standing on the note of Citi to highlight this is because, remember viewers, last week Investec upgraded the stock to a significantly higher target price. Citi's done the same. They've not upgraded the rating because they already have a buy, but they've hiked the target price to 4,380 from 4,000. The current price is 3,622. They say it's a healthy and an inline quarter and solid traction across the markets. The adjusted EBITDA margin stood at 32.9. Citi believes this is the minimum level of margins in the coming quarters, and they believe margins will only inch higher. They see operating leverage benefits in the branded segments and potential recovery in the US to aid Torrent Pharma. Watch out for this one. They've done a big acquisition. Brokerages are turning very constructive on this one. So keep an eye out. Torrent Pharma could well be one more pharma stock in the day. Guys, I've taken the liberty of just highlighting one fourth one. The OMCs and could be in focus. One, while because oil prices rose about 2.5% overnight, which is the biggest rise in 2 weeks. But there are murmurs of a cabinet meet tomorrow to finally clear the LPG subsidy. So there is a bit of a positive out there for OMCs, even though oil prices are higher. So just bear that in mind for the HPBP ROCs traders of the world.
So a lot of action this morning, but let's just focus a bit on IndusInd because it's been a pain point. It's reported its first quarter results yesterday. Asset quality continues to deteriorate. Provisions are remaining elevated. We're going to be speaking with Vineet Bolinjkar of Ventura Securities for his view on IndusInd and the banking pack as well. But let me quickly go across to Harsh. Harsh, brokerages seem pretty unanimous in saying this is a bad quarter. But is this slightly better than expectations or on expectations in terms of how dismal it was?
Well, it's a mixed bag. So from a profitability perspective, it's slightly better than what brokerages were penciling in. But overall, it's still a weak quarter. You want to see more improvement come through, hopefully in coming quarters. Let me talk about this quarter in specific. The adjusted margin number fell around 12 basis points thereabouts. And this too is factoring in an income tax refund. So the 12 basis points factors in an income tax refund. If I exclude that, then it's just 1 basis point fall. So that is resilient, but excluding the income tax refund largely is the way to look at this. Provisioning continues to remain elevated. Asset quality has worsened. The GNPA is up 13% on an absolute basis, on a sequential basis, and the CEO appointment is close, is what they say. That's going to be another key overhang which goes away once the CEO MD is appointed. Growth is still absent. You want growth to come back. In terms of how brokerages are viewing it, well, Morgan Stanley underweight. Target price is 750. They're saying that the net interest income is a beat, fee income is a miss, core operating profit excluding IT refund and others was below estimates. Slippages remained elevated. They've reduced their earnings estimates by 15 to 20% FY26 to 28. That really stands out for me. They're expecting FY26 to have a weak ROA and they're expecting recovery only in FY26, FY27 and 28 towards the 0.8 to 1% mark. Macquarie too has an underperform, and you also have a Citi with a sell. So largely brokerages are negative. Let's listen into a slice of what the management had to say with regard to the slippages number.
Slippages, though elevated from normalized levels, have declined meaningfully quarter on quarter. We expect slippages to stabilize by quarter 3, may extend to quarter 4, but the legacy stress subsides and new disbursements continue to perform steadily. Looking ahead, corporate slippages are expected to improve, supported by a healthier early delinquency profile. Our combined SMA1 and SMA2 book has declined to 14 bips from 24 bips a quarter back.
Okay, Vineet Bolinjkar is joining us this morning, HOR of Ventura Securities. Vineet, very good morning to you. On IndusInd, how important do you think it becomes that there is an improvement on ROA, although it is under 1%, NIMs have stabilized to some extent, and now there is clarity that there will be a change in management which will be announced soon. All of that, is it any kind of mitigating factor to the kind of numbers we've seen?
I think the results were a disaster. You would have expected that during the RBI, when they were negotiating with the RBI, they would have, tightened on collections it seems that, no stewardship at the top has led to, bad collections, and you've seen NPAs rise. And, it is notably coming from the microfinance sector. While other people are talking of improvement in the microfinance, they are talking of continued stress. And so that doesn't improve the, outlook even in the next quarter. So I expect things to remain a little murky going ahead. But important is that, they happen to maintain the GNPA. And I believe that, once the new CEO is appointed, there could be some kind of, discipline coming in their lending as well as collections. And that would lead to better numbers from Q3. Lack of growth in AUM is also a little bit of a worry. And, that leaves us circumspect on the immediate outlook for the stock. I see the stock decline. But, for value investors, if you have a franchise like IndusInd available for you, it would be a good time to bottom fish once the selling settles.
But then, hi Vineet, morning. Alex here. I'm just trying to understand at what level, because you don't want to be in a situation where you catch a falling knife. First of all, do you anticipate that there could be drawdowns to that extent, or do you think that a lot is already in the price? And drawdowns, if at all, would be limited from that perspective. And what, according to you, is the price where you start seeing accumulation as a positive strategy?
So I think around 730, 740 is somewhere where I would like to look to buy the stock. Not any time before that. And even then, although I'm giving you as a area where one could be buying a price point, but you should still let the dust settle, because the FIs have increased their stake during this quarter. So we would like to see how they react and whether they come and press the sell button or not. So it is better to take this as a like a likely area, but wait for the froth to settle down.
If you are to buy at those 730, 740 levels, as you pointed out, if indeed that opportunity arises, we need somebody who's getting into the stock right now. What is the bare minimum that they should be willing to wait to get a return on their investment?
I think 3 quarters at least.
Okay. And in the interim, what would you want to see for that ultimate outcome to take place?
So I would want to see the NPAs come under control, and the GNPAs coming down majorly. We would also like to see loan growth happen to grow and the fee income coming back. So these 3 are very vital for investor confidence to come back.
Would there be a buy on any banking stock right now, Vineet? And if yes, which one?
I think HDFC and ICICI Bank. I will not wager on. Kotak was a stark disappointment. So I think these 2 are the only large cap banks that I would go out with. DCB is another one that I would want to look at post the earnings. I believe that high growth will continue out here. So that is the one that I would want to watch out for. I'm not sticking my neck out on that.
Okay, thank you so much for that, Vineet. We'll take a very short break and do look at what's on the profit watch list as you get into that break. On the other side, we bring you the big story and big focus this morning. An India-US trade deal is still elusive. Why is this a concern for the market and what we know so far? All of that coming up after this break.
हेलो
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
All right, the big story this morning, the August 1st deadline for the India-US trade deal is rapidly approaching. Both sides face crucial decisions ahead. 3 distinct scenarios could shape the path forward, and Rishabh is joining in to tell us more.
Right, what we're seeing is about 3 scenarios, Tamanna, that are coming up ahead of this first deadline. Number one, of course, being the fact that India will get a tariff letter. That is something that the US has done with about 20 countries, with the likes of Bangladesh, Cambodia. Now, this scenario looks unlikely given the fact that about 5 rounds of in-person negotiations have taken place. A 6th round is currently scheduled for the 2nd week of August. So again, the probability of this scenario, a tariff letter coming in, a little low. Scenario number 2 is, of course, that if India manages to get a deal before the deadline. The possibilities of this happening also seem to be slightly low, given the fact that you had the USTR, Jamieson Greer, come out yesterday and say that the US-India negotiations will require a bit more time. That is also somewhat similar to the commentary that we're receiving from the Commerce Ministry back here in India. So again, sort of a low sort of probability on this scenario as well. And also, even if we do get a deal, it will be a last-minute deal. It will be a very limited deal, only purely based on goods, some sort of potential market access figures also coming in. The third scenario is, of course, of a deadline extension. Now, we've seen a precedent set in terms of US and China. The US gave China a deadline extension beyond August 1st, and that is something that is looking like a likely probability of happening in terms of India and US trade talks with regards to a deadline extension. And that is something that we could see pan out for the US. That is something also, this would show that there is continued goodwill between the 2 countries, and this would prioritize a broader deal. Also, there is, of course, the fall deadline for the first tranche of this bilateral trade agreement. That is what the countries are also negotiating towards. So the third scenario of a deadline extension looking most likely as we speak.
Okay, Rishabh, thanks for that. Let's get in Mr. Ajay Bagga on this conversation. And Mr. Bagga, thanks so much for joining in. Good morning. You track this very closely, and you track the intersection of geopolitics and markets too. Do you reckon, one would reckon that the markets have been concerned about no trade deal between India and the US. The question only is, if it doesn't go through within this August deadline, is that a negative or have the markets already priced that in?
Neeraj, two things. I think it doesn't go through before August 1. That's more or less now settled. You won't see anything happen. What Rishabh laid out, the three scenarios. Does India get a letter on August 1st of 15% overall tariffs? We don't know. Or does the deadline get pushed? A lot will now depend on what happens on US-China today. We are not hyphenating India and China. China, the trade relation is much bigger. And that's why their Treasury Secretary is sitting in Stockholm with the Vice Premier of China. But what we are expecting today, clarity on postponement with China. South China Morning Post on Sunday brought out an edit that 90 days postponement is happening. If that comes through, that will be a relief. Second, what happens on the Iranian and Russian oil, the secondary tariffs that Trump is talking about. Again, yesterday in Scotland, while meeting the press along with the British Prime Minister, he mentioned that Putin is not reacting to my 50-day deadline. Maybe I'll push it up. So those secondary tariffs is what is roiling the oil market. We saw the oil market react upwards. And if the Russian oil is taken out of the equation, out of 103 million barrels a day, if 9 or 10 million barrels go out, the oil price can be going anywhere. So that's extremely disruptive for the global economy and especially for India. I think those two clarities we'll be seeking today post the US-China. With India, we are not expecting much. Mid-August, the US delegation comes in. Trump is supposed to visit India on the back of the Quad meeting in September. So like in China, he wants to announce a big, beautiful trade deal with China in a personal meeting with Xi Jinping. I think he will hold it for his visit to India to come and talk about a great deal between the two biggest democracies. So I would suspect that it goes to September with August 1st deadline getting extended either a month or by 2 months for India.
Ajay, hi, morning. I'm just wondering whether or not there is any implication for the market or in fact for trade balances if this deal does not go through, because the way that I see it, and the only reason I'm bringing this up is because you talked about China. The trade that takes place between the two and the imbalance there is dramatically higher than between India and the US. And while we're anticipating that trade will go up down the line, it's not something that immediately affects anything. Would you agree, or would you say that it's imperative for us to sign this deal sooner rather than later?
Yeah, I would say the latter. I don't think it's very imperative. The markets have discounted it to a large extent. You saw the reaction to the Japanese deal. It was a 2-day reaction and then again back to earnings and fundamentals. You saw the European reaction. European futures on Monday morning Asian trading were up more than 1%, but the European markets ended down. Because as they're looking into the fine print, these are one-sided deals. Like Europe is giving 15% tariffs, but it's opening its markets to a large slew of American exports into Europe at 0%. Plus, they have to pay. They have to buy $750 billion of US energy, which I suspect they might already be buying. It is just getting added. But the 600 billion more of investments and the defense procurements, that all adds up. So you had the Dutch finance minister coming out in opposition, the French calling it a bad deal. So it is 27 European nations which have to now pass this trade deal. Nobody has seen the actual deal document, so we don't know what all is excluded. We are just conjecturing based on. And again, the European Commission had said something, Trump said something. So we don't really know exactly what the deal contours are. For India, I think we are very low in the priority list For him, it's more China, Canada, Mexico.
Mr. Bagga, agreed. For him, it might be low priority list. My question is, if 15 to 20% is the base rate, which is what Trump has now indicated, and 15% is where he seems to have settled with everyone else, what does that mean for India? Because our tariffs on any American imports, which we might also have to increase as part of the deal, go up significantly, doesn't it?
Yeah, there is a 10% with UK, for example. So India is more positioning itself on the UK deal rather than the 15%. So there is hope, but I would say realistically it will be difficult. Definitely not August 1st, definitely not mid-August. There are too many factors which are stumbling blocks. For India opening, there'll be a quota system. So you will say X thousand cars you can bring in at 10% and Y thousand bushels of almonds and this and that. So it will be more a quota. Making streamlining each other's quality controls will take time. So it will be more directional there. That's where we are stuck. So India is ready with a deal of, again, this is media based. I don't have any insider information, but 40 tariff lines India is ready to sign today. But Trump is saying all or nothing. He's saying at least 70 tariff lines, and which is going to take a much longer time. So even when we signed, say, the FTA with the ASEAN countries in 2009, it's taken us 15 years, and still we have opened 70 tariff lines. They have opened 47. So these kind of things take multiple years. It doesn't happen overnight. And when the bureaucrats sit, they find a lot of stumbling blocks. So it's not easy, but it will be a relief for the markets if it comes in. But mostly it's not coming in till September.
So relief if it comes in, no big hit if it doesn't, is where it kind of stands. Thank you so much, Mr. Bagga, for joining in today. And it's that time of the morning where we talk about all the dealing room chatter. Sumit Sarkar joins us with what the latest is.
Well, yes, firstly, if you look at SBI is one thing that dealers have been indicating. There are buy flows on institutional desks, both domestic and foreign institutions have been buying this counter. In fact, if you look at the share prices of SBI, it is now trading below the QIP price. They had raised around 25,000 crore rupees at around 817 rupees. The second stock on the list is Sterlite Tech, and dealers are indicating there are large buy flows on the HNI desk for this counter, and this has been triggered especially after the Q1 call where the management has shown confidence when it comes to order inflow growth, specifically from US, which was a persistent issue for Sterlite Tech so far. So hence the stock was up 8% in trade. For Mankind Pharma and Exide, there are sell flows on institutional desk, and this is an anticipation of weak Q1 earnings from the company. For Godrej Properties, the stock has been under pressure on anticipation of a block deal soon. Now, what I'm hearing is that one of the foreign investors who had put in money during the QIP that the company had done a couple of years back is looking to exit from Godrej Properties. And lastly, it's Lakshmi Dental, Bharat Rasayan and Hind Rectifiers. Dealers are indicating that there are buy flows on HNI and PMS desk in all these three counters. So keep an eye out for these three counters as well in trade.
Yeah, this is very interesting because we've seen a block deal happening with Invesco getting out of both Oberoi and Lodha last week, right? And now we hear of Godrej Properties. By the way, Sumit, there is one more dealing room chatter. There is a very easy way to get a gold bracelet.
Okay.
Yeah, you just have to...
Yeah, wish Tamanna, right? Happy birthday.
See, now you also get a gold bracelet.
Sumit knows the khabar. His wish came at 12 last night and the bracelet is already in his house.
Yeah, already. Good. So we stand a chance of getting it by today evening.
He's ahead of the curve. That's what you have to remember when it comes to Sumit Sarkar. Thank you so much. Amar Dev Singh with us this morning. So is Sunny Agarwal. Very good morning to both of you. Amar, let's start with your take on what the indices are looking like.
Yeah, very good morning and wishing you a very happy birthday.
Thank you.
So as far as the indices are concerned, indices have been on a, I would say, negative mode for some time. We've seen some selling pressure, and as I had spoken earlier, that's somewhere around 24,800 would act as an important level. Now that has been taken out, and we are seeing that there is still selling pressure, and also I have been saying for quite some time that one of the technical indicators from a short-term perspective has been extremely negative. So higher levels would be sold into, and that's what we are witnessing in the market. And also we've got the monthly expiry coming, and also we've got the quarterly earnings, and there's not much of a positive trigger. And I would say the correction is healthy also post the rally which we had witnessed since March. So if you look at the levels to watch out for, I would say we go back, and on 13th of June, the low was somewhere around 24,470. So I would say that 24,400, 24,500 would be a zone of support for Nifty. But as I have said that one of the short-term technical indicators is extremely negative. So this effectively means is that, again, if there is a pullback, we'll witness selling pressure. Till the time we don't see a consolidation at lower levels, so it could be around 24,400, 500 zone, or maybe 24,300, 500 zone. Till the time we don't see consolidation, I would say higher levels will be sold into, and then we could go in for some choppy trading sessions in the market. And on the upside, it definitely is there that 25,000, 25,200. Now that should act as a short-term top for the market, and the market would find it increasingly difficult to breach that in a very short span of time. As far as Bank Nifty is concerned, Bank Nifty hasn't corrected as much if you look at to Nifty, but here also one of the technical indicators which I very closely watch is extremely negative. So that tells me that, again, higher levels will be sold into. As far as crucial support for Bank Nifty is concerned, I would say that somewhere around the 55,500, 55,600 is almost a 500 points from the current level. That's an important zone of support. But yes, it's very clear that upside now seems to be capped for Bank Nifty as well. And the highs which Bank Nifty had made recently, 57,300 and above, that should act as a short-term top. There's no doubt about it. And we could witness some consolidations from choppy trading sessions. But yes, breaching, say, for example, the 55,500 on the downside, or 54,400 or 24,400 on the downside for Nifty, we could witness a further correction of 300 points in Nifty and somewhere around 500 to 1,000 points in Bank Nifty.
All right. And there has been a little bit of pressure on the PSU banks as well. I wonder, Amar, what are your picks this morning? And, there are still a few pockets where there is relative strength.
I would say definitely there is some good strength, which we are seeing in the pharma space. So I had earlier also spoken about Cipla. So if you look at the pharma space, many of the stocks are doing quite well. Cipla has broken out of a key zone of resistance. So this is one stock one should definitely keep a close watch on. It has rallied, but I would say the rally is just starting because it did form a base around the 1460 levels. Currently it's around 1572. It was up almost to 2.5%. And it had a very crucial zone of resistance. So the current level is very important for Cipla. So sustaining over the 1570, 1580, something which is very important. If it's able to sustain above that level, we could witness some very sharp move in Cipla on the upside. So Cipla is one stock one can look at for an upside target of 1635 and a stop loss of 1517. And the other stock which I want to talk about is from the FMCG space, and that is HUL. So what we've seen in HUL is that the stock did rally from 2250 levels to 2550, and then it has corrected 2440. If I look at the structure of the stock from an intermediate term perspective, that's positive. Long term, I would say it's moving out of oversold territory, but more long term isn't as strong. Short term, we are seeing a pullback from the oversold territory. So this is a second stock one can look at buying at the current levels for an upside target of 2517 and a stop loss of 2387.
Okay. Just a couple of more stocks that I want to talk about. Sunny, let me come to you. IndusInd, of course. What do you make of the numbers? Go Digit, if you've looked at, and Torrent Pharma.
Good morning, Tamanna, and wish you a happy birthday. And good morning, everyone. So IndusInd, again, I think we have, I think the bank has shifted, gone back to a path of profitability. So that's the focus. So there has been a very muted growth as far as advances and deposits are concerned, and the focus is now more on a cost control. Leadership transition is something that is one of the key aspects which Street will be keenly monitoring. MFI continue to remain under pressure, very similar to the entire industry. So I think again, as expected, a muted set of number, but seeing that FY26 will be the year wherein there will be transition year, and then 27 can be a growth year for IndusInd Bank. So again, we continue to maintain a neutral stance wherein We believe the fair value is close to 850 rupees. Trading at a decent valuation, I think less than 1 time price to book. So I think downside is limited, but again upside is capped because of the year of transition which FY26 can be.
But okay, so that's about IndusInd Bank. What about Torrent Pharma? Amar, and the numbers look pretty good, and the pharmaceutical space as a whole seems to be buzzing. Sorry, I meant to ask Sunny.
Yeah, so coming to Torrent Pharma again, yes, as you rightly pointed out, the numbers seems to be decent, and as the pharma is looking decent in terms of the earning growth going forward. So I think continue to remain constructive as far as Torrent Pharma is concerned. But again, would not like to paint the entire sector with the same brush looking at Torrent Pharma number. Again, there can be a stock specific challenges. So as we have seen Piramal Pharma, if you take, optically the number looks weak, but if you take off the one-time inventory adjustment, then the numbers are decent kind of double-digit growth. So again, within pharma, I think CDMO space is something where we are bullish on. So like recently Blue Jet Healthcare has reported a slightly weaker than expected set of number, and now we have seen correction in the stock. So again, we feel that that's a good opportunity to add in the portfolio.
Okay. Well, stay on, gentlemen. Time for a short break. We'll be back in moments from now with the pre-open session.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world.
Welcome back. We're watching India Market Open. It's all about stocks this morning and so many to cover. Let me just talk about BEL. Their results actually came in during closing yesterday, but a whole host of brokerage notes on it, which gives you a sense that this could be a stock that you should have on your radar. For example, JP Morgan has maintained an overweight with a target price of 490 on BEL. They're saying it's a margin-driven beat in Q1. Order wins remain strong. They're not unduly concerned about revenue growth because remember the revenue number was a bit weak. Order wins well ahead of the run rate required to achieve the FY26 guidance of 27,000 crores. Morgan Stanley has also maintained an overweight with a target price of 418 rupees. They're saying it's a strong margin improvement. UBS has maintained a buy, target price of 450 rupees. We're waiting for the BEL rates to hit because the pre-open session is going to start. That's why you're seeing that unchanged over there. So margin at 28%, driven by 780 basis point year-on-year rise in gross margins. New orders at 7,400 crores, up 48% year-on-year. Despite Q1 revenue miss, BEL is on track for FY26 guidance, with 9-month ask of 20% revenue, 9% EBITDA growth. So BEL on the radar when you're seeing, I think the mood weaning off defense completely is sunny. But how are you looking at BEL specifically?
Yeah, again, I think a pretty strong set of number basis on year-on-year basis. Quarter on sequentially should not be compared as fourth quarter is always a stronger quarter for BEL. 1Q is always a lean quarter for BEL if you go back into the history. So I think a pretty decent set of number. Anyway, company is sitting on a very robust order book. So I think again, in line with other brokers, even our fair value is close to 480 rupees. So we continue to remain constructive on BEL from a long-term perspective.
BEL on the charts, Amar?
Yeah, I would say that BEL is definitely very weak on the short-term charts. There's no doubt about it. So what's likely to happen is that there could be a bounce back, but sustaining above the 400 levels from a shorter-term perspective isn't going to be easy. I would say a good level for entry is somewhere around 350, 360 level, because if I'm looking at the intermediate-term trend, that's where the major support for the stock comes in. So that could be a good level for entry because the long-term trend is definitely positive for this stock. But the shorter-term trend is definitely extremely weak. That's the reason we'll see some consolidation, some sort of selling pressure. And towards 350, 360, we could witness some consolidation, which could be a good entry level from a long-term perspective.
Okay, thank you for that, Amar. On BEL, the other pharma stock to watch out for and very early pre-open rates. Keep that in mind. But Mazagon Dock will be on radar. Not a great set of numbers, and you're seeing that downtick there. We'll wait and see where it sits. Even a Zentech not looking great. BEL is still mildly in the positive. We talked about IndusInd Bank. They reported yesterday, and it was, in the words of Vineet Bolinchkar, a disaster. But nevertheless, we told you, is the worst over? So we did give you that caveat this morning. The stock may be perking up because, I mean, how bad can it get? And if you look at it, there is a NIM improvement. ROAs have come up still under the 1% mark. So those are some to watch out for. Piramal Pharma seeming to have a tough morning. Despite expectations that it could be okay, numbers were not half bad. Piramal Pharma were 5% down. I want to pull up Torrent Pharma and Ajanta as well. Let's look at Torrent, let's look at Ajanta and some of those pharma names. Torrent Pharma not doing much at this point. This will all settle, so keep that in mind. And Ajanta about 0.5% in the green. So a lot to talk about. Just one more that I want to pull up before we bring in Nilesh Jain is Go Digit. Go Digit General numbers seemed decent. And that's one that could be buzzing today. Some very positive notes on Adani Green. Keep an eye out on that. It was a good set of numbers on Adani Green as well. Realty may be down in the docks, but not Valor Estate. Valor Estate is buzzing this morning. Nilesh Jain, head AVP Technical and Derivatives Research, joining in. Nilesh, I'm going to start with your picks actually, even before we come to indices, because you're still waiting for the numbers to settle on the pre-open.
Very good morning, Joe. Absolutely. So today, in fact, we are expecting a bit of consolidation to continue, similar to what we saw yesterday. There could be possibility of another day of a downtake, but it's more sort of a consolidation. So I have one segmentation that's in Angel One. The structure is weakened yesterday. It has broken important support of its 2650 mark that was acting as a strong support of 200 exponential moving average as well. So on the lower side, there could be possibility of a further downtick towards 2550 to 2500 with a stop loss of 2660. Angel One is a sell. Apart from that, I have one buy, that is SBI Life. So this particular counter has been one of the outperformer within the insurance pack. We have seen Yesterday as well, a positive tick in this particular stock. It has given a good breakout as well. So a follow-up move can be seen in this particular stock towards 1880 to 1900 on the upside with a stop loss below 1825. SBI Life is a buy on decline.
Nilesh, a quick question on the real estate pack. Would you sell any of the counters? They look a little bit weak based on the last few trading sessions.
So I wanted to cover realty space as well as a sell recommendation, specifically Oberoi Realty. This particular counter has a very weak structure. In fact, across all realty pack, if you see, the structure is looking extremely weak. We have seen a structural breakdown in the Nifty Realty Index as well. So our follow-up move on the lower side may take Oberoi Realty towards 1580 to 1560 on the lower side. As long as it trades below 1680, the structure for Oberoi Realty is looking weak.
The other thing to keep an eye out for could be REC. So bear that stock in mind, could be an interesting one. There are some other numbers, for example, just a Systematics Corporate, small name, but did very well in terms of the quarter. And then Paradeep Phosphates, something that Alex highlighted, did very well in the quarter. So keep an eye out for some of those as well. Paradeep is up 5% as things stand. Let's the rate settle down. And then there are some others. But before you move any further, let's get in, Harsh, for the key brokerage call for the day. And I think CLSA has initiated an outperform on Radico. Harsh, what does the note say?
Well, it first gives a 17% upside to Radico Khaitan, so it's a decentish upside. What CLSA is saying is, and giving some background on Radico, leading manufacturer of white spirits, the portfolio includes premium as well as luxury brands and has a track record for brand creation and premiumization. Now, the premium and above category has done well, even industry-wide, and the prestige and above has grown or is expected to grow from the $3.3 billion number in FY25 to $4.4 billion by FY28. So in the next 3 years, a solid 33% growth is expected. The worry with regard to Radico, though, is profit delivery. So while the potential is large, profit delivery has been a worry, but they're saying that is actually something that is going to be left behind. Recent capacity additions leave Radico well positioned. They're expecting an EBITDA margin expansion of around 2.65% in absolute terms, FY25 to FY28. So the margin should rise to around 16.5% by FY28 is what they're penciling in. Volumes will inch up. That is one lever for margin expansion. The average selling price will also increase given premiumization trends, and the fixed cost growth will be capped, and that will lead to margin expansion is what they're saying. Radico has lower presence in states where governments are set to increase taxes to fund welfare schemes. So that too is a possible downside risk being capped. The value currently at around 52.5 times FY27 earnings is well above the 5-year average is what CLSA says, but the premium is justified given the margin expansion. They're giving the valuation an equal weightage DCF to price to earnings. Price to earnings they're giving 55 times and arriving at the value of 3,098, 17% upside.
Okay, thanks a lot for that, Harsh. And yesterday Allied Blenders, even on a day like yesterday, was okay. Radico today, there's this call. Some of the others, Tilak Nagar, etc., is doing some large acquisition. Sunny, it's an active space currently, and not necessarily because of what UB or United Spirits are doing, but because of what the non-behemoths are doing. Do you like the liquor space, and do you guys have a buy on any of these?
Yes, definitely, Neeraj. I think the entire space is buzzing, and one of the key trends which is visible across all the players is a shift in portfolio towards a premium product, so which is then relatively a better margin product for all this liquor industry. And a few of the guys like Allied who have recently mobilized funds through IPO, they are deleveraging their balance sheet also. So again, among the top 2-3 players, I think Radico Khaitan continue to remain our top pick. So there, again, we believe the fair value is close to 3,000 rupees. So Radico is one of the top picks. Allied Blender basis the recent balance sheet deleveraging. And again, the similar story of shifting portfolio towards premium product. So that's again continue to drive earning relatively better as compared to its peers. So both these players continue to remain top pick. Among the beer, again, United Breweries, I think have posted a decent number. So United Breweries maybe on buy on dip is the right strategy as far as UBL is concerned.
United Breweries and Radico actually have a positive call coming in from CLSA. I want to pull up IEX and Radico Ketan there, the big brokerage call that we talked about. Now perking up in the pre-open session. Watch out for it as trade opens. IEX I want to talk about. Bernstein has put out quite a sharp note. I'm just paraphrasing here, but basically it says pretty much no hope. As far as it goes. It's downgraded IEX to an underperform from a market perform, cut target price from 99 rupees. It says it's a broken model, very low odds of a reversal of market coupling order. They see further negative catalysts in a transaction charge discussion paper. Also see new players come in as barriers to entry now disappear. I want to pull up Ajanta Pharma. The beat is modest on Ajanta Pharma, but a buy call there from Jefferies, because they look at EBITDA margins also growing due to larger investments. When you're looking at mid-pharma and opportunities in pharma there, Sunny, is Ajanta popping up on your list? Sunny? Sorry, I think I've lost that line there.
Yeah.
Okay, we'll wait for that to stabilize. Nilesh, you want to come in on some of the pharma names that we're seeing firing today and anything that you like over there?
All right, Tamanna. So a couple of pharma stocks that we are also tracking. Cipla, Lupin is our preferred bet. In fact, both the stocks have a very strong chart setup. Specifically, Cipla, it has given a good breakout, and back-to-back two positive candles can be seen on a daily time frame chart. And a long consolidation breakout was seen earlier in this particular stock. So we are expecting a follow-up to continue towards 1600 to 1620 on the upside. With a stop loss below 1540, Cipla is a buy. Apart from that, Lupin, we can expect a pullback move to continue towards 2000 plus kind of levels. With a stop loss below 1935, Lupin is also buy.
Okay, so that looks good. Sunny, if you're back, I just wonder, we were talking about some of these pharmaceutical names, but I have a different question. I want to ask you about Paradeep Phosphates. It's turning out to be one of the stocks to watch today. Settled in the pre-open session, up about 10%. Seasonal business, but 3 quarters consistent performance, 50+% revenue growth on a year-on-year basis. And the operating profit margins are seeing an uptick, now at 12% in the quarter gone by. Would you say that this is something to look at closely?
Yes, definitely. I think a very strong set of number by Paradeep, and as we are seeing, most of the agrochemical companies are reporting a decent set of number, maybe on the back of normal monsoon. So that can be, and most of the players have seen a capacity expansion also, so that's also playing out. So again, continue to remain constructive on entire agrochemical space. So Paradeep, no doubt, a very solid set of number. One more company where we have got a buy rating is Dhanuka Agri. So where we believe that because of the recent acquisition of the portfolio and the ramp up of that portfolio, we believe the fair value is close to 1900 to 2000 rupees.
Well, smart moves, and as Alex pointed out, 3 consecutive quarters of this one doing well for itself, so keep that in mind. A stock that has gotten some more leg up today is KEC International. I mean, it's had a phenomenal rally in the recent past, but good numbers today as well, at least on the bottom line and the margins, and which is about a 1.5% uptick here for KEC, so keep an eye out for that. But one that is really sulking yet again is Zen Technologies, down 5% yet again, 1606 currently. Nilesh, any thoughts here? I mean, it's locked on a lower circuit, but do the charts indicate much lower levels than where is it right now?
Right. So yesterday itself, we have seen a structural breakdown. The counter has given a breakdown below its important 200-day exponential moving average that was placed at 1700. So from here, there could be possibility of a follow-up to continue towards the levels of 1500. So that's the level we can expect from a short to medium term perspective. So structure is looking extremely weak. We have already seen a continuation of a lower top and lower bottom formation as well. So it's a kind of a sell on rise structure. Avoid taking any contrabet for any sort of a pullback. That seems unlikely.
Okay, so Zentech seems unlikely. I want to see if there's a contrarian trade there or a short-term trade at all, Nilesh, or an IndusInd. Let's pull up and see where IndusInd has settled after the pre-open, was seesawing quite rapidly. I saw 5% up, I saw 6% down, now about less than 0.5% down or 0.25% down in the pre-open session. Is there a contrarian trade here, Nilesh?
Not right now, because the stock is looking slightly on a weaker side from a short-term perspective. It has continued its formation of a lower high, lower low in the last couple of trading sessions. So we are expecting a follow-up move on the lower side towards 750. So 750 could be a good point to take a contra bet, not as of now at present. So looking weak from a short-term perspective, as long as it trades below 840 levels.
Okay, Nilesh, I'm sorry, I don't know if that was your top call or no, but if not, I'm just wondering, you've seen the pre-open rates. Based on those, what is your top day trading call today?
Within pharma pack, I'm still bullish, and we are tracking Cipla, specifically this particular stock. If you see any dip towards 1560, 1570, or maybe 1550 can be a good entry point. So after consecutive 3 days of gain, today there could be possibility of some profiting. Use that weakness to buy, and on the upside 1590 to 1600 is something that we are expecting.
Got it, Nilesh. Let's wait and watch how Cipla reacts. But pharma, yes, is looking very, very active and amongst the sectors that is delivering good numbers thus far. But here's how the markets are starting off. 0.25% lower, banks similar. IT, I reckon, could be sulking. Yes, it is. Mid caps and small caps really doubt with this kind of a performance would be, but actually they are flat. The mid cap space is absolutely flat. In fact, the Bank Nifty 2 is doing okay. Remember, viewers, PCR 0.65, 0.64. Usually from these levels, market tend to give a bit of a bounce. Wonder if it happens. Let's pull up the heat map and see what's moving and what's not. More red than green. BEL, despite the, or maybe because of the, but brokerages largely have been saying that they are still constructive, but the stock starts off lower. Maybe marginally some chinks in the armor for them. But IT sulks, Wipro Infi down in trade, Shriram Finance, Tata Steel, ICICI Bank. Must say, compared to the last few days, fairly muted reactions on the index, and which is fine. You want the index to stabilize really at these levels. But yeah, that's about the losers. About the gainers, ONGC, crude price uptick may be there. JSW Steel, Nestle, Maruti, Adani Ports. Those are the top movers in trade. Surprise, surprise, HCL Tech is in the green. So that is one interesting name in the top 10 gainers, but not enough gainers really. In fact, slowly creeping up the number of losers versus the gainers, with BEL now really sulking 2% and IT looking wobbly. So that's the morning, Tamanna, at least on the large caps. Not too much of brisk activity.
Well, it's far from brisk. Your top gainers, not even a percent up. BEL, I suspect, would also be part of the larger pain point in defense overall, because you're not seeing defense doing well at all. So Bharat Electronics falling prey to that. I want to see what TCS is doing this morning. About 0.5% down. Media report saying that there's a freeze on senior hirings and a complete pause on any kind of hikes this year. This was a decision TCS said they would take in the first quarter. So you're going to continue to see some pain in IT over there as well. Geofin now rising to about 1% up. But let me look at the broader markets just for a second and see what's happening there before we move ahead. Mid cap completely flat, everything in the red, but not wildly so. Just, I would say, flat to negative right now in terms of mood. 0.25% down on the small cap, 250 as well. Let's pull up the sectoral heat map for you this morning and see what's happening over there. Oil and gas, and this is something that we spoke about right in the beginning. Neeraj pointed it out. Crude jumps because Trump has drastically shortened his deadline for Russia to stop the war in Ukraine. You saw Brent above 70. You'll see some movers there in the oil and gas segment, possibly as a response to that. PSU banks, all right, okay, in the green because relatively today looking okay, but losing steam very quickly. FMCG, thanks to Nestle there. But here is where the pain continues. The Nifty India Defence back in pain once again. IT stocks in pain as well. So are the Nifty Finance moving on in that line. I want to pull up the internals of the Nifty India Defence if I can, because this has been a reversal of the story, pushed also with the kind of results that we've seen. Post Operation Sindoor, a huge jump because of sentiment, all of that seeming to retrace, leading with Zentech. You would remember the several trading sessions in a trot when Zentech was on a 5% socket every single day. upward. It's reversing and retracing that pattern completely. Masgao, the numbers have not been great. Paras Defense numbers have not been great. BEL has seen a drop in the top line, and you're seeing that pain continue through and through. But I want to pull up some other stocks as well, because it's about the results this morning, and that's going to be in focus. IndusInd Bank, not great numbers was expected, but you've seen bad loans increase. You're not seeing any kind of earnings growth as well, but is the worst over? This is something we talked about this morning. If you tuned in at 8 a.m., that is this going to be a dead cat bounce, a reversal, because truly the worst is over, and you have seen NIMs expand to some extent. So IndusInd Bank actually up in the green. Go Digit, decent set of numbers. Torrent Pharma, decent set of numbers. Very positive brokerage notes as well on both Go Digit and Torrent Pharma. Not so much for IndusInd, but there is a reversal of a trade here clearly taking place, all in the green. Moving on, Masgao Dock we talked about, that's not doing well at all this morning, seeing about 3% drop. Vari Energy is good set of numbers. 5-star, 86% increase in impairment. The street is not liking it at all. Let me pull up Piramal Pharma as well. Take a look at there, what's happening there. Paradeep Phosphates, Ajanta, all of them in terms of results. Paradeep Phosphates really could be quite the stock of the morning, unless it's competing with PNC Infra, which comes up next, but that's 10% up. Ajanta, not that great. Piramal seeing a downtick today. CLSA has positive calls on Radico Khaitan and United Spirits. Radico Khaitan was our big brokerage call of the morning as well. That stock is 1.5% up. United Spirits not doing much. IEX I wanted to pull up. Bernstein has given a target price of 99 rupees. The stock about 2.5% down now. PNC Infra we talked about, 2,957 crore order win. That stock about 3% up. But I think one of the big winners this morning is Paradeep Phosphates.
Certainly the biggest mover, but I see an interesting move in Tata Chemicals as well. Remember, the numbers were posted earlier, and the stock reacted yesterday as well, but it's up about 4% today. We spoke with the management yesterday, and one of the takeaways, Sunny, for me, was the fact that he anticipates pricing to more or less remain stable in the rest of the financial year, no improvement in pricing. One of the levers that he spoke about is the reduction in debt, and thereby the reduction in cost on financing that is anticipated. And I'm just wondering whether you have a view on this one. Would you buy at this stage? It's not a stock that has moved very dramatically in the recent past.
Alex, I would like to skip this stock because ultimately soda ash business is something Tata Chemical have across the globe, and in case the pricing environment is muted for soda ash in a global uncertain environment, I think would like to remain neutral. The only trigger which I see for Tata Chemical is I don't remember the exact holding which they have in Tata Sons, and in case Tata Sons is planning for an IPO, that can lead to a big value unlocking for the Tata Chemical shareholder. So that's something which is on anvil and under discussion also. Let's see whether that goes through or not. But coming to core chemical business, I think soda ash anyway is struggling in terms of there is an oversupply, and I don't think so any demand outstripping the supply in a near term, and that will lead to an increase in pricing.
So point well taken. On the fundamentals, it may not be the trigger that is moving the stock, and the Tata Sons IPO could well be that trigger. But Nilesh, on the charts, from the 500, this is one of the top gainers, if not the top gainer, up about 4% at this stage, 4.5%. Is there a trade here?
Yes, Alex, it's a buy because if you just pull up last 7-8 months chart, you can clearly see the stock has formed a good rounding bottom formation. And in last couple of weeks, we have seen a good consolidation, and today it has given a good breakout as well. So structure-wise, looks strong, and we can expect momentum to continue towards 1,000 plus on immediate basis. So it's a buy at current level, buy on decline, keep a stop loss at 950. And 1,000 to 1,020 could be a short-term target. Position target comes somewhere around 1,050.
Okay. Just want to get a view on some recovery that I'm seeing on real estate stocks. So one of the big losers yesterday in trade, but look at a Lodha. Look at a DLF, a Prestige, Godrej Properties, not huge upticks, but definitely recoveries over there. Nilesh, is there something that you'd look at favorably, considering they've come off a fair bit when it comes to real estate.
See, Ramana, it has been 5 consecutive days of decline for the Nifty Realty Pack, and yes, after such a sharp sell-off that we have seen, there could be possibility of a dead cat bounce, or I would say a pullback. But it's not advisable to chase this pullback. Better to stay away for the time being till time we don't see any strong reversal signs. It is merely a pullback, looks like to me. And this pullback in the Nifty Realty Pack may extend towards 930 to 940 on the upside. Currently, it is at 916. But I would still wait and watch for this pullback move. It's not a buy as of now.
Pull up IndusInd as well. And Nilesh, I asked you this question before we started trade on whether there is a short-term contra call. It's looking like perhaps there is one.
Yes, we are witnessing a strong pullback in IndusInd Bank as well. So again, it has fallen in last 4-5 sessions. So usually we see this kind of a pullback move. But again, it has a major resistance at 935. So till the time it doesn't crosses the same, there could be possibility of some bit of profit taking at the high levels. But as of now, yes, it's a strong pullback. And this pullback may extend towards 825 to 830. And with the stop loss below 800, if somebody is already holding the long position, can stay put, but avoid creating any sort of aggressive long position in this particular counter for the time.
Leasing is down about 8%. Lakshmi Organics, we marked results reaction down 6%. But the one that is interesting is IEX. It went up on Friday. It was out of the FNO ban. It was in the FNO ban, got out of the FNO ban, and the last 2 days is back to losing ways. So down yesterday and down another 3.5% today. Now, Sunny, for a lot of people who have IEX in the portfolio, they have seen last week some mutual funds go out and buy the stake as well, right? My question to you is, if a retail investor, for a retail investor who's not a mutual fund, can swap between an IEX and some other stock, and if the person has IEX in the portfolio, at this price, now that it has corrected, is it still prudent to swap out of IEX into something else? Or would you stick with an IEX in the portfolio?
I think, Neeraj, it's better to swap the position of IEX with some other better counter. The reason being that with a market coupling, I think in case some other exchange is able to gain the market share, then going forward the profitability will come under pressure, and at current market price, even I was looking, the market cap is close to 12,000 crore number, which is pretty expensive at a current juncture. So I think it makes sense to move out of IEX and move to other better counter which are performing well. So I believe few sectors which are doing well in terms of financial performance are like hotel industry or asset management companies, hospitals. So these are the few sectors where I feel that there is a decent upside potential from the current market price also. So it's advisable to move out of IEX and shift to a better name.
A stock that is building on some gains this morning, Waaree Energies, on the back of its numbers in the first quarter, looked pretty good actually. And there was an element of bolstering from an other income increase on a year-on-year basis, but everything looked quite sanguine. Nilesh, the question is, does it hold this momentum and carry on beyond that 3,300 mark, which seems to be a place where it stops short almost every time it hits it?
Absolutely right. So the stock is gradually inching higher. It is on the verge of a breakout as well. That breakout zone is placed somewhere around 3,300 to 3,350. So if it clears out that particular resistance zone, then I think it is heading towards previous all-time high mark of 3,600 to 3,700, which seems likely from a near-term perspective. It's a buy in a staggered manner. Keep a stop loss below 3,050. It's a positional buy. It looks like it is likely to test 3,600 to 3,700 in the near term.
Okay, all right. Stay on with us. Very quick look at what is buzzing at this moment, because while the markets overall are truly dull, there are some buzzers in early trade, and Varsha is joining us with that list.
Thank you so much for that. Few stocks which are buzzing on the back of earnings. Let me start with Torrent Pharma, wherein if you see in line set of numbers the company has seen, there was a strong performance when it comes to branded markets, and the India revenues were up almost 11%, which was led by outperformance in focus therapies. If you see the Brazil revenues again up 11%, and Germany revenues were up 9%, although which was impacted by supply disruption, and a company remain subdued for the next few quarters. US business revenues grew almost 19% year on year. Next on the list is Waaree Energies. Again, good set of numbers. The growth was led by sharp rise in the solar PV module sales, of course, and they've achieved highest ever quarterly module production of 2.3 gigawatt. Revenue from solar PV modules were up 22%, while EPC segment revenues were up 160% year on year. Order book stand at around 49,000 crore, and they've maintained their FY26 EBITDA guidance of in a range of rupees 5,500 to 6,000 crore rupees. Next on the list is Paradeep Phosphates. Again, very good set of numbers. Now, one of the reasons why you're seeing a massive jump when it comes to revenue and net profit is because of the higher DAP prices, which Paradeep is a largest producer when it comes to DAP. Other income and lower tax have aided net profit for the company, and that's the reason huge jump when it comes to net profit. And the EBITDA margin expansion that you're seeing is led by the operating leverage, because there was not increase in cost, but because of the revenue increase, you have seen this operating leverage. Last on the list is Mazagon Dock. Weak set of numbers that the company has seen. EBITDA impact that you're seeing is led by provisions of rupees 540 crore due to account. They have maintained this provision on account of anticipated losses for 2 fixed price contracts, and order book as of March 25 stand at around 32,260 crore. So these are the few stocks which are in focus on the back of Q1 FY26 numbers.
We're sticking with buzzing stocks here this morning, and I just want to quickly talk about Tata Chemicals before I go to Go Digits. So there's a Morgan Stanley note on Tata Chemicals. Could possibly also explain what's going on with the stock. They've upgraded it to an overweight from an underweight and hiked the target price to 1,127. What they say is that the earnings trough is now behind us. We benefit from higher volumes from expanded capacities in India. The see turnaround in UK operations evidenced in Q1. See stronger contribution from Rallis as the global agri-cycle normalizes. Peak capex for Tata Chemicals now behind us. China soda ash prices are near cycle trough. So Tata Chemicals buzzing there. So is Go Digit actually making some smart moves in early trade post the Q1 numbers. The profit before tax in particular showed a strong growth. Harsh, what is working for Go Digit?
Well, yeah, so more positives than negatives, especially from the numbers. As you correctly mentioned, the PBT growth has been strong in this quarter. We've seen a 59% expansion in PBT. Why PBT and why not PAT? Because there are certain tax normalization which has happened in Q1 versus the base quarter, and therefore not a comparable where PAT is concerned. Incurred claim ratio has fallen, which is again a key positive. Let me highlight the number for you. The loss ratio, which was at 72.8% last quarter, has come in at 70.3% this quarter. So your loss ratio has fallen. You've also seen your combined sequentially going down. The combined ratio is a measure of profitability. The loss ratio is nothing but your claims which get incurred this quarter versus the premium which has been earned. And therefore, on the combined ratio front as well, you're seeing a sequential fall, 109% to 108.6%, 109.3 to 108.6. So that also a key positive. The other positive is with regard to the market share. The market share has gone up across all the businesses which Go Digit does. Motor growth was 5.5% versus 5.3% industry. Motor third party also grew much faster, 21% growth versus 11.5% growth industry. Health, travel and personal accident grew 13% versus 10% growth industry, and fire grew at 41% versus 17% growth industry. So all of that tailwind carrying the stock up. Last off, just one likely negative. When I'm looking at the combined on a YOY basis, it's fallen. So there's some bit of improvement required, especially on expenses of management. That's probably the one piece which is weighing down on the numbers. But outside of that, it's a solid set.
Okay. So solid set there. Sunny, thank you so much for joining us this morning as we take you through all the numbers that have come in. But let's go across now to a conversation with Amrendu Prakash of SAIL, where he addresses the revenue decline we've seen mainly due to Bhilai and ISCO steel plants.
What has happened? I mean, a miss in terms of the overall numbers, a significant decline in terms of profitability, and a downtick in terms of margins as well. And whatever has not worked this time around, is that expected to continue in the coming quarters as well?
That I'll want to draw your attention to. Thanks for having me. If you look at the direction in which the company is going, I will say it is going in the right direction. Quarter over quarter, numbers have declined, which is expected in a steel market where typically quarter four is always the high. And quarter one and quarter two goes towards maintenance activities of the plant, which brings down the number a bit. Two things have worked right. One thing is our cost efficiency, which has been a focus area for us, has gone well. We have also increased our production. CPLY, our production has increased by almost 4%, which gives us hope that we have targeted a 8% growth in FY26 over FY25. So if we look at quarter one FY25 to quarter one FY26, there is a growth. Revenue has grown. Also, the markets have stabilized, market prices have stabilized, which has led to revenue growth, apart from cost efficiencies. The reason you see a gap in the numbers is purely on account of the stock valuation. As you see, as we have worked on our cost and brought down our cost, we have marked the inventory to market. And as a result, there has been an inventory valuation hit of almost 1,000 crores if I compare from Q1 of FY25, which is a one-time accounting hit and not really reflects the physical or financial performance of the company. This one-time accounting hit will no longer affect us going forward. So we are confident that the numbers are going to be good for the overall financial year.
Okay. So with all of that said and done, how are you looking at the outlook from here on? What's the growth you're expecting in terms of FY26?
So as I said, the Indian markets are, the consumption in the market is growing at upwards of 8%. When the world is actually slowing down, the world figures were minus 0.5%. So India remains the main consuming market in the world. We are also aligned with that. We have planned production increase of 8% in this month. Markets pricing has been stable after the safeguard duty. What we need to watch out for is that the government continues to work on this. Because if you look at the world market, every single country has come up with safeguard duties. Indian government also announced 12% safeguard duty in April, and they're looking at analyzing that to finalize the duty structure. That will ensure a level playing field for Indian steel industry players. And we believe that both the strong demand as well as a stable pricing mechanism will help us in coming up with better results.
Okay. Apart from that, the decline in revenue growth is mainly because of Bhilai as well as the ISCO steel plant. So how are you expecting that revival from that aspect?
As I mentioned, quarter one and quarter two, being also monsoon months, as the monsoon starts coming in, early monsoon hit the country in June. So as you see, the steel plants take their maintenance activities in Q1 and Q2. That is the reason that you see a decline quarter over quarter four of FY25, quarter one of FY26 is bound to be low. This is expected, and this is the trend for the steel industry itself. Nothing structurally wrong with it. When we compare Q1 25 to Q1 26, you see a growth of 4%. In fact, saleable steel has grown by 11% Q1 over Q1. So there is nothing fundamentally wrong with that. And as I mentioned on the financial numbers, we took a valuation hit of almost 1,000 crores. Even if I say 500 crores of that is part of the business. So you add another 500 to the profit numbers, you will see it is actually an improvement.
Okay. Okay. And what's the outlook with regards to steel prices and the view in terms of safeguard duty? Will that increase?
The government is analyzing this. It will be wrong for me to comment on that. But if you look at the numbers across the world, US has already put in 25% duty, plus there are other duties, hidden duties inside that. If we look at Canada, we look at Mexico, EU, so much so you look at Vietnam and Indonesia also have come up with duties. So we are confident that the government will take a fair view. And this duty structure is not to protect ourselves from competition. This duty structure is there just to offset the kind of subsidy that is offered to the industry in other countries like China and some of those countries.
Okay. Apart from that, your coking coal price decline, how are you looking at it in terms of benefits to be passed on to the government for railway pricing?
Rail pricing is cost-based pricing. So we look at our costs and it is vetted by the government agencies, and based on that, the final price is decided. So we don't see the margins changing there in any way. It will be similar.
Okay. Apart from that, in terms of the product mix optimization, which is between long and flat, how are you looking at that aspect and its impact on the blended net sale realizations?
New capacities are not coming up right now. That's why I mentioned 8% growth in volumes that we are looking at is primarily coming from debottlenecking of old assets itself. In our push for cost optimization, we are working on debottlenecking our older assets to produce better efficiency as well as better volumes. So that should give us a push in terms of volumes. Long and flat mix will broadly remain the same, except we are currently also doing some contract manufacturing with NSL. So that should give us a push in terms of slightly the flat volume should increase, and thereby NSR realization may be better. Though last year, as you saw, long products had better NSR as compared to flat products.
Got it. In terms of the capex, 7,500 odd crores is what you've said you will be spending in FY26. What is the funding aspect, debt or internal accruals, and how much?
Most of it will come from internal accruals this year. 7,500 is not very high. We did 5,900 last year and still reduced our debt, if you see. So even in this year, the push to reduce debt will continue. Our expansion plan of 15 million ton till 2030 is getting into on the ground. So in fact, capex will start rising from next year. But we see for the FY26, no rise in debt, practically a debt reduction only.
Okay, so that was the story with SAIL. Stock mildly in the red. But I think what is hurting today is all of IT for a second day in a row. And also perhaps because of more pain for TCS coming in. It's not the top loser, recovered actually from its lows. But there are media reports now saying that there is delay in onboarding of recent employees. More importantly, a freeze on senior hirings. Puneet, I thought that was crucial, because if mid and senior people have been removed simply because they want newer skill sets, then why is there no fresh hiring of people with those skill sets?
Well, essentially, there is an absence of growth, and that's clearly indicating from the multiple developments happening in the last 2 days. So as you rightly said, there's a freeze now in hiring of experienced personnel, and a pause on annual salary increases globally as well. It's something that TCS had said at the end of Q4 that they will be delaying the wage hikes, which generally happen between April to June of every year. Now, that is also under pressure and could be a contention of how long would that delay happen, because while delays have been a key aspect of Infosys and Wipro in the past as well, this is the first time for TCS to do that. The other aspect which analysts are also mentioning is that TCS's move may be adopted by the other companies and increase the headwinds in the sector. That was the key update. The other one is the onboarding delays for those with experience is now exceeding 65 days for TCS. This generally happens between 35 to 40 days. So we've already seen a delay there, and it goes back to what happened during the pandemic in sometime around 2022 when excess hiring was done, and people were given offer letters, but they weren't onboarded, and we seem to be going back to that time now because of the absence of growth. Finally, we've seen a multiple updates coming in from brokerages as well. Jeffries had mentioned yesterday that it's a canary in a coal mine, which essentially indicates that we could see some pressure on the other large cap players, and hence we're seeing the pressure on stocks like Wipro as well as Infosys majorly over the last 2 days, probably anticipating a similar move from those companies as well.
Okay. Thank you for that, Puneet. Staying with the Tata Group, Tata Chemicals in focus, and the stock is actually soaring. Tata Chemicals I'm talking about, because Morgan Stanley has upgraded the counter to overweight from underweight. In fact, a hefty target price hike as well, from 839 rupees to 1,127 rupees. Varsha joining in to explain why.
Yeah, thank you so much for that. So according to Morgan Stanley, the reasons why they've given overweight, or they've upgraded to overweight from underweight, is now they believe that the earning trough is behind them, and because Tata Chemicals have expanded capacities in India, and now they're going to see the higher volumes on the back of the expanded capacities. Also, they are also seeing turnaround when it comes to their UK operations, which was evidence in Q1. In fact, they closed one of their facilities in UK, which actually helped Tata Chemicals earnings for Q1. And they're also seeing stronger contribution when it comes to rallies as the global agri cycle normalizes. Now, in fact, over in the agrochemical space now, you'll see the increase in the volume growth, though there are some pricing pressures still persist, but the volume growth has been increasing across all the agrochemical companies, and that is true for Rallis as well, and that's one of the reasons why Rallis numbers were good on the back of higher volumes that the company has seen, which will benefit Tata Chemicals as well. And they say that the peak capex for Tata Chemicals is now behind, and China soda ash prices are near cycle troughs, and even management told us that now the China soda ash prices will be in a range bound, and then they are not expecting more pricing pressure when it comes to soda ash. So all these reasons have made Morgan Stanley to upgrade from underweight to overweight, and also have hiked target price.
Thanks for that, Varsha. And very interesting, some of these agrarian names. So Tata Chemicals is one, but almost all fertilizer companies as well, Tamanna, right? I mean, Sharda Cropchem, Paradeep, Mangalore Chemicals, all of them in the last 3 months or 4 months have given some exceptional returns. Tata Chem was the lone ranger which is stuck to the ground. And not exactly similar, but there is certainly some strength out there now.
So soda ash prices, one big mover, Tata Chem to watch out for. I'm wondering what's happening with the Sona BLW stock, because that whole story turning out to be such a family drama. Yes. There was a statement yesterday from the company that we reported as well, in which they made it clear that the company is not a family-run company. They reiterated that Rani Kapoor, the mother of the late Sanjay Kapoor, has nothing really to do in an executive capacity on the board, etc. Now, even as this fierce power struggle has erupted within the Kapoor family following the death of Sanjay Kapoor, the chairman of the Gurugram-based auto component giant Sona Comstar, the battle, of course, is over his 30,000 crore rupee legacy. Sanjay's mother, Rani Kapoor, has spoken out after the letter that she penned to the members of the board. She's alleging that certain family members are attempting to seize control. Listen in.
I still don't know what happened to my son. I'm old now and need closure before I go. I may be old and frail now, but my memory of being with my husband when Sona was set up is strong. I remember the early days of Sona, built with care, sacrifice and love. I am here to remind the world that our family legacy must not be lost. It must be passed on as my husband always wanted to be. Given my health and my age, I will not be making any further comments. My legal team will address everything necessary.
It's actually heartbreaking, because this is an elderly woman who's trying to make her voice heard, and it's not boding well for the company if this public spat comes into the fore. The positive point is that it's a well-run company otherwise, from a shareholder perspective.
And doing some very remarkable things on the EV side as well, 75-80% book EV. So Interesting, but yeah, this, as Tamanna said, doesn't help the case for the minority shareholder or any institutional shareholder in any fashion whatsoever as well. Let's hope it all gets settled down soon. But, well, you could be constructive or not constructive on Sona, but you have to be constructive on India. That's the word coming in from Hartmut Issel, Head of Equity and Credit of the APAC region and Chief Investment Officer at UBS Wealth Management. In a conversation that we had with him, he outlines the reasons why he believes India has to be at the center of your thought process when it comes to a portfolio construct in the APAC region. How do you view this this very critical week, if I can use for the APAC region, simply because if the last few days are any indication, Donald Trump seems to be in a hurry to close some of the deals. Japan has happened, EU may happen, some of the others have happened. Is that a net positive for at least the outlook that an investment manager like you can take?
Generally speaking, it is positive because what it really does is it takes away uncertainty, and that is probably oftentimes the biggest stumbling block that we would normally see. So I wouldn't actually assume that markets had maybe priced in a really, really bad outcome in the first place. So therefore we see a bit of uplift, but not also too much. But nonetheless, right, you can make progress. You can look at earnings again. Before that was a bit more tricky. So I think that's what's happening. Of course, every market more that comes in Asia, we have now 4 basically. That will also be slightly, at least a mild positive, I should say.
Got it. Let's assume that some of these deals get struck, Hartmut. I'm now making a hypothesis because that's what we can make. But there is some bit of uncertainty that still remains. I mean, classic Donald Trump strategy, that some uncertainty might still remain. How do you approach risk assets then? Because despite all of this uncertainty, we've had a bit of a, how do I say, an uptick, right, in equity markets since the March-April lows. So what happens next for the, let's say, the last 5 months of the calendar?
I think one thing that we're watching, and by the way, is not just our region here in APAC, but especially also the US among them, like that GDP probably in many regions comes down a bit. Why do you see a bit of softer data probably here and there in the second half? So that is certainly something we're watching. And if at the same time, we're also looking at how much markets have also recovered, places like the US, for example, but also here broader in the region, we call it Asia ex Japan. We have a neutral view, so not necessarily negative, but quite a bit of that has already happened. However, within that, I should also mention this, for example, the Asia ex Japan region, we do have markets such in India actually still on attractive, so we see a bit more upside maybe than for the region overall.
Sorry, am I hearing you say that you believe that there could be some more upsides on India? Because that's a rare view coming in from a global voice, only because almost everybody keeps on complaining about the valuations in India.
Look, it's from a valuation point of view, I'll admit, right? Is it extremely low? No, it isn't, but it hasn't been for quite some time, especially in the last 10 years. You can always make that argument, but I would look at it from a different perspective. And so if you look at the US markets, for example, or how over many, many years, right, these markets, both the US and actually to some extent also India have done, right, they have outperformed most of the other markets. And if you get that kind of also earnings growth or that certainty in the earnings, a better outlook, then naturally you would also pay a higher multiple. Plus, as I always also cite, if I look at this market, right, so what do we have for India? We have earnings growth that probably starting from this quarter, we'll see, but this is my assumption, we're going back to double digits. We think this is going to last for 2 years, sort of by Indian standards would be the fiscal 26 and would be fiscal 27, right? So 2 years in a row where we get very likely double-digit growth, and we're coming from a low base. We all know that the previous fiscal Nifty growth, for example, was only single digits, right? So how many other markets do we have? But on top of that, we have falling rates, also in India, of course, right? So we think the 10-year goes easily, probably by mid next year to, say, 5.9, so below 6. And when that happens, it also stabilizes your valuation. You can argue whether it should shoot up or not, but it shouldn't come down really in this kind of instance where you have GDP next year improving in India, you have the earnings side improving, and you have falling rates. You cannot ask for much more than that.
And maybe a relatively stable currency as well, considering that the macro ratios, the current account deficit, etc., in India look fairly stable now relative to what they were maybe 10, 15 years ago.
Yeah, and it all comes also from the interest rate side. Right? So for the Fed for the next 12 months, we think there's going to be 100 basis points down, right? Or say 4 rate cuts, basically, if you want to call it that. Right? India, RBI is already somewhat further advanced, right? Let's call it maybe a 2 cuts, right? So compared to the US, actually, there would be more. So it would be difficult to construct a case where the rupee doesn't at least stay stable. We think actually probably goes towards mid next year, maybe 84 or so, so even also strengthened a little bit. So in that kind of environment, it's also not a worry that keeps me up at night.
It shouldn't. So, Hartmut, let's assume, I mean, and we were doing a small exercise of the valuations that, let's say, for example, India has traded in this decade. Since post-COVID, the average multiples have been 24 times. We are currently at 24 times. So you could argue that maybe we are not that expensive relative to the averages in the last 5 years. But let's work with an assumption of what you said, that the multiples will probably not correct too much because of all the reasons that you gave. And if we see double-digit earnings growth, let's say 12%, 13%, what have you, you reckon over the next 18 months, the markets could compound by that kind of earnings growth numbers. So let's say maybe for 2 years we collectively grow about 25-30%, then does the market, the Indian market, have that kind of an upside?
You would expect that kind of an upside, right? And also maybe one more point on valuations. This is typical. Right? So when you come out of a relatively low earnings cycle, right, or period anyway, such as Nifty also did, right? So we had that also in India in the fiscal 25 anyway. And you're accelerating. You will always see the multiple move first, and then you get upgrades and all these things, right? So again, multiple isn't as high, or the multiple isn't as high as it may seem even, right? Because you are in that phase where in any market on the planet, but including also, of course, in India, you would expect this at this early part of the recovery, of the earnings growth recovery. So again, that is not something I would be too hung up on at this point.
Got it. Just before I get to maybe some thoughts around whether actually let me finish that and then I'll come to competition, right, across the world. So one is, Hartmut, the common view has been that, or at least for a global investor, maybe you look at the safety of and the liquidity of the large caps, but a common view around the domestic guys out here in India, which are also now fairly large, is that the earnings growth will be very, very sharp in a lot of sectors that have gotten created in India in the last 5 years and which may not be present in the top 50 stocks. I mean, it could be the EMS or electronic management companies, it could be energy transition, etc. They are not present in the Nifty 50, where typically foreign investors would flock to, but they are present in the other 450 stocks, which is the top one of 450 or the remaining 500 stocks. How does a global investor think about that?
It's actually a very common setup, right? Typically, you have that rule that small and mid caps, at least over a longer term, tend to outperform, right? Their base is also lower. So that is not so unusual. And this is also the situation we have India in. Then again, valuations, of course, is a different matter, right? So we're seeing some also in the league sort of below the Nifty 50, right? That also recently, also in part, we already have seen the earnings, right? This quarter or last quarter. And just need a little bit of maybe cooling off, and then these stocks correct quite a bit, right? So this is also part and parcel of what you have. So what I would say is, whether it's a global investor or somebody from within India, is do a bit of both, right? Have the larger cap in the big index, right? And they're well established, they're blue chips and all these things, and they're a bit also cheaper, relatively speaking, in terms of valuations. But certainly, right, if you want to round it out a bit, there's nothing wrong with also putting a couple of mid and small caps within it, because yes, over a number of years, they tend to grow faster given their lower base. So there is a room for both, in my view.
The other thing is, there was a lot of conversation around technology leadership being in the US and raw material and manufacturing powerhouses being China, for example, and therefore a lot of other markets could suffer as well. Now, India has got its own strengths, but no technological leadership, as well as the critical mass of rare earths or critical materials for batteries, etc., stay with China and maybe a couple of other countries. how do you then think of the rest of the Asian pack? Do they still find favor, or would people give undue importance to such leadership between US, China, or some of the other nations?
There's a room or place for every market, right? So the rare earth parts that you in particular mentioned, it looks very much like it's part of the negotiation on the trade side more than anything else. So when China and the US come together, and it looks like next week we're also getting more negotiations, etc. I think if there had been really something brewing, we would have known by now. So even here we could say that they're going to agree on something, whatever that final number is, right? But is it going to go back to 145%? Probably not. And so that is happening, and rare earths is part of that. So if there is a whole package that gets solved, then rare earths should also be in it. Now, coming to India, even though some of the, also tech leadership, etc., this is not necessarily the sectors where India has a very, very strong foothold. But if I then look at GDP around the world of the big economies, right, nobody comes even close to what India has. So India is a different characteristics. Right, so you don't go there because you have maybe a technology leadership like you have maybe in some corners of the US. You go there because you have growth that you don't find in other places, and so you diversify out your portfolio. So India plays a very strong role from that angle.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest
Welcome back to India Market Open. The markets have turned a little bit, marginally in the green, if you will. So is the sentiment turning? Remains to be seen. But it's a great time then to coming out with an IPO, and Shriram Finance opens for subscription today. The issue price has been set at 150 to 158 rupees. Sajid Johnson to tell us about this company. Sajid, interesting name by the way, Shriram Finance. But tell us a bit about the company.
Okay, this is a NBFC which primarily operates in the central India, which is Rajasthan, Gujarat, Madhya Pradesh, Chhattisgarh, and UP. So it's basically looking into MSME loans and secured vehicle loans in that area. 80% of its loans come from MSME, and so it's basically a tier 2, tier 3 kind of of a lender for many of these MSMEs there. If you look at the total issue size, it's basically 165.2 crores and OFS of roughly 89 crores, so total size of 254 crores, and that gives a company a market value of nearly 825 crores at the upper end of the price band. On the financial point of view, it's been growing at a healthy rate of 35-36% CAGR for the last 2 to 3 years. Net interest income grew by nearly 43% in FY25. It had a PBT growth of 38% and NIMS at a healthy 9.73%, which has grown from 9.23% in the previous year. ROA of 3%, which is a good ROA in this industry. And if you look at the gross NPAs for the company, it's around 1% and net NPAs at 0.33% there. What's the weakness which is there for the company? It has seen in the last 1 year credit loss increasing in FY25 to 0.99%, and that's something a worrying thing. And also the exposure to MSME segment is also a worrying thing, because we've seen a lot of banks and NBFCs talking about the stress coming in there. The positives for this is the strong ROA at 3% and the price to book value at two times, and that gives the company a reasonable valuation at the current IPO price of 158 rupees.
I think the negatives in terms of the timing might be a bit of a concern, Sajid, but we'll see what the response is as per the size of the IPO, because the largest of the large are talking about pain in exactly these two segments, MSMEs and vehicle loans. And that's where their strength lies. But in any case, best of luck to all the new issues that open today, including Aditya Infotech. So this IPO opens as well. The price band is 640 to 655 rupees per share. The IPO size is about 1,300 crores. It's a combination of a fresh issue of 500 crores and the rest is an offer for sale. So quite a sizable chunk is an offer for sale. Now about the company, it offers range of advanced video security and surveillance products. So that's essentially what the company does. All right, let's start our big market conversation this morning. Prateek Agarwal, MD and CEO of MOAMC, joining in. Prateek, always a pleasure to have you on the show, and thank you so much for your time. Since we've been talking about all of the new issues opening, and it's a buzzing week for IPOs, I think 14 issues and 12 listings, or 12 issues and 14 listings, one of the two. But it's the primary market definitely on top of it. Is this something that you're looking at all? Do you see value in some of these, and should value investors actually look at some of these issues very closely?
Some of them are good. So each house looks at a space differently. We are finding some of the issues attractive, and you would see us participate in a few years.
I mean, obviously you will not tell me which ones, and I will not ask you which ones, but what is the kind of criteria that you're applying?
We are growth in earnings focused managers. Now, in our house, we work through themes, spaces like the pharma, GLPs, retail, where you are seeing unorganized to organized moves, online, new tech, are spaces that we believe will offer longevity of growth. And if there is an offer in that space and valued okay, then I think we are interested.
Prateek, good morning. I wonder if the quarter one season thus far has given you glimpses of there being growth at a reasonable price or growth in India Inc. for Q1, either the quarterly results or the commentary? Did they?
No, so, okay, if we are talking index and you see our portfolios, we are practically not there. So, large banks, IT, X of one or two exceptions have mostly disappointed. But if you see the composition of our portfolios, we are very light there. Of the names that we are invested in, most have delivered good numbers, especially in the renewable pack. We have had disappointments in a chemical company, for example, that we hold. But by and large, till now, so our companies will now start to deliver results. The larger ones, IT, banks, etc., have done more of the hitting till now. So we'll come to know, but that bit was expected. We have been negatively surprised in two names actually, one defense, one chemicals. Otherwise, it's been good.
Okay. Prateek, so what happens in a scenario wherein the US ecosystem or the US earnings season is looking good, India is looking okay, for lack of a better word? What can drive the markets higher after the markets are already trading at 24 times?
So, one thing about index is that it keeps changing composition, and with it, valuations also change. But if we look at our index over last 1 year, index has gone nowhere, while earnings have expanded 8%. And this has happened while you have got 100 bp of rate cuts, much improved liquidity, all at the same time. So it is surprising. We should have done better, but we hence stay hopeful for the next period. In the market, it is almost never that things go lockstep. Maybe then the next period springs up. Yes, something like a US-India trade deal does work on the mind. In some spaces, it can open up a large opportunity. Does very little in the listed space in the immediate term, but can, let's say, change the outlook of the country over the medium to long term in terms of Make in India. So that is something to be seen. We are hopeful that there will be a good outcome. While they, for us, is the world's largest market opening up, we, for them, in many categories, may also be the world's largest market. While as an economy, we may be the fourth largest. So I think both should look at each other's, what they bring to the table, and we stay optimistic that a deal would happen.
How much of a negative is it, Prateek, if the deal comes in at maybe a 15 to 20% tariff and lack of clarity on it through? Trying to understand if a positive bend to the deal with a 10 to 15% range will be seen as an upside, but maybe 15 to 20% in terms of the final tariff, not so much of a downside. How are you seeing all of the scenarios panning out?
Yeah, so there are a few deals which have happened. Okay, now there is one with Japan. Japan and us, in terms of size of economy, are neck to neck. Okay, in terms of where we would be next year, we may be larger. Okay, there is something which has been done with EU, there is something which has been done with Indonesia. Now, if you're looking at trade and what one brings to the table, I would believe for us, the range then becomes sub 15%. Now, and if they want to put a 10% on everything, I think we would also insist on imposing some tax on them. Because, let's understand this. In many categories, we are 140 crores of us. We may be fourth largest market, but If they want to export food, we would be the largest market, right, in many categories. If they want to export defense, we would be the largest market. If they want to export oil, we would be the largest market. So there are many where we would be the largest. So and there are many where they may be the largest for us as well. So it would be nice to have a deal which makes win-win on both sides, because lose-lose on both sides just because one guy is more stiff than the other doesn't make sense. And I would say this: there is a way which we, Easterners like to be treated. दादागिरी करने से नहीं होता है.
I think that should be the motto of the Indian negotiating team. दादागिरी करने से नहीं होता है.
I think they are showing it.
They're showing it in our own fashion. Thank you so much, sir, for speaking with us. We're going to have to close this conversation a little earlier than we would have hoped, because Bank of Baroda is the next conversation that we're focusing on, and Harsh is joining in with all the numbers that we should look at ahead of that conversation.
Well, yes, so Bank of Baroda came out with numbers. The slippages number was a bit elevated. The credit costs were also a bit elevated, and all of that impacted profitability as well in Q1. The broad commentary post the numbers seemed to suggest that a couple of one-offs is what has led to this slightly jittery number. But otherwise, what really stood out and what was really impressive for me was the fact that the margin decline was very, very limited. Let me go across. Devadatta Chand at this point joining us, who's the Managing Director and CEO of Bank of Baroda. Sir, great having you. Good morning. Let me set the context. Let me start with slippages first. Try and understand what's led to that spike with regard to slippages, and what will the full year FY26 number be? Will it be materially different from what you were penciling in?
If you look at the slippages for the bank for this quarter, it's slightly around 500 crore higher than the last quarter. And our average run rate on the slippage is almost 2,800 to 2,900 crore per quarter. And this time it is slightly higher by 500 crore because there is an international account which has slipped this quarter. And other than that, suppose I exclude that, my slippage ratio is at 0.99, which is better than the earlier quarters. So just to give a color of this international account, this account was restructured during COVID time and subsequently upgraded because of the conduct of the account, but then it was showing some kind of a sickness therein. And in that international territory, this account has gone to some kind of a resolution process called CNC. So, I mean, the outcome of the resolution would be known in 210 days maximum. But as on today, we have provided almost 40% of the outstanding as a provision therein. So this account is a secured advance. So as far as the recovery is concerned, we are expecting a full recovery. So there is no concern on that. So excluding that, the bank's book is very robust, strong. The asset quality is, resilient and also showing a good quality of asset as on today. As we speak about the collection ratio being better than the last quarter. On the credit, the SMA book is also contained. So in terms of slippage, all the segment of the slippages like retail, agri, the ratios are much better. So the asset quality of the bank is quite robust and strong. This international account which has slipped has given bit of elevated slippage, but I think there is a recover. We can recover the full amount therein going forward.
Right, sir. So how quickly do you get to know what happens to this account, and when do you get that visibility? Give us that perspective.
So as I said, it has gone to some kind of a resolution program. So in 210 days, we'll get to know the outcome of that. But since the asset coverage is quite strong on that account, so I think in this after 200 days, maybe in the Q3, we'll have a full color on this account.
Okay. So with regard to recoveries, Q1 was slightly on the softer side, partly due to seasonality is what I understand. What happens with regard to full year recovery? Give us that perspective. And second, what happens to credit cost therefore? What should that number be? Will that be a little bit more elevated for the full year? Give us that perspective.
So if you look at the credit cost, as I said, on this account, we have made 40%, the international account, we have made a 40% provision therein. So excluding this 40% provision on the international account, the credit cost is a 0.47, which is in line with our credit cost for the earlier quarters. So this is only a one-off on the international account. The book is quite robust. We track the SMA book in international and also all other parameters international. The book is quite strong and robust therein. So this one-off has slightly put the credit cost elevated, but otherwise we are well within our guidance of below 0.75. Rather, the credit cost excluding this would be at 0.47.
Okay, sir, we'll switch focus. Actually, sir, with regard to the recovery, give us that perspective. Slightly muted recovery this time around. Give us that perspective for full year. Full year guidance was around 10,000 crore. What happens to that recovery number?
You said right. We have a full year recovery target of 10,000 crore. And this quarter, otherwise that means the average recovery per quarter will be 2,500 crore. This quarter marginally lower than that because of the seasonal factor. This is the time when movement do happens and there's a slack season. Rather, the slippage that happened for this quarter, as we speak, there is a lot of pullback already happened over there. So going forward, the recovery would be much stronger than the Q1. And our guidance of almost touching 10,000 crore or exceeding that, we are going to do that. And last year also we are almost at the 10,000 level, although the kitty has come down. But I think as far as the target is concerned, we will be in a position to achieve that.
I'll switch focus to margins, and especially on the yield number. The yield number has come off by 12 bips, largely due to repo, or has there been a change in strategy? With regard overall also to margins, what's aiding margins this quarter? It's actually done fairly well. It's held up well.
As I said, the margin would be under pressure for Q2 also, and precisely for one reason why, because of the repo rate cut, we have passed on the benefit immediately. On the non-repo portion, which is MCLR, we have only made one cut in the MCLR, but external linked benchmark rates, there is a great bit of repricing going to happen in Q2. Although some impact has happened in Q1 also, but not for the full 3 months. So going by that, there is going to some impact because of on the yield side for Q2 also. But on the positive side, the peak rate of deposit we have reduced, and as you know, the deposit got repriced with a lag time, and we are expecting almost 70% of the deposit getting repriced by end of Q2. So I think there is a lot of benefit going to come in this quarter. Q2 also on the interest expense side. So net to net, what we are looking at, as you said that, as you know that the liability is one of the strong point of the bank at cost of deposit at 5.05, at CASA at 39.33. We are expecting a 15 to 17 BPS moderation on the cost of deposit in Q2. So going by that, our normal estimate that will be operating in the range of 2.85 to 3% for the full year. This is what the guidance. And because of the lag time in the liability repricing, there is obviously going to be an impact. Some impact has taken in this quarter, and another bit of impact is going to have in next quarter. One of the strong points that you would have seen when we declared a net interest margin of 2.91 for the global book, although domestic continued to be at 3.06, the cut is only 7 BPS as compared to what we read in newspaper with regard to the industry cut of average 17 BPS. So that talks about the liability management and the profiling of liability, which is again one of the strong points as far as the bank is concerned.
No, sir, I give you that credit. The margin number is indeed impressive in terms of the hold up. So let me talk a little bit about growth. Sequentially, there's been a degrowth. Is that only due to the higher base? What's the full year outlook like? Can you come back strongly for the rest of the 3 quarters?
See, as far as the advance book is concerned, we gave a guidance of 11 to 13% growth last year also, and continue to have the same guidance this year. And if you look at the overall book growth in advances, this quarter is 12.6%. Whereas the RAM segment has grown almost 18% this quarter, one of the strong growth we have in many quarters. But the corporate growth has been muted at 4.2%. The RAM continue to be one of the strong growth driver for the bank on the future quarters also. Talking about the corporate growth, I think a lot of seasonal factor has played in. And if you look at the June 24 also, our YY growth on the corporate was 2.5%. But in a full year basis, we could achieve 9 to 10% growth in corporate. And this year also, considering that on the liability side, we are very well positioned, I think we'll be in a position to achieve a 9 to 10% corporate growth also. And that puts me on an overall basis almost at 13 and higher than 13% growth on the advance side for the full year. Deposit is going to be, again, continue to be the focus area. We'll be continuing our focusing on the low-cost deposit like CASA and also on the retail term deposit more. As in this quarter, we reduced the bulk deposit to the extent of 23,000 crore. So our liability management is one key factor which drives our both growth and also the profitability. And we'll continue to have that journey going forward.
So, plenty of moving parts, right? So, where does that leave you with regard to ROA for FY26? FY25 ROA was 1.16%. Can you perhaps exceed that, or will that be really the benchmark you look for?
Even with the contraction in margins?
So it slightly difficult at this stage, but our normal guidance on ROA is to have ROA in excess of 1. And last 12 quarters, we are posting ROA in excess of 1. I think for the next 3 quarters also going to have the same trajectory. But ultimately, see the Q3 and Q4 will be much better in terms of the NIA and also on the NIM side. As we said that Q2 would be a bit of under pressure. But considering that scenario, I think, our ROA guidance of more than 1 will continue to guide the market in the same way. Whether we can exceed that of the last year, only time would tell on that.
Thank you so much, Mr. Chand, for coming in and speaking with us and giving us all of that perspective with regard to Bank of Baroda and its Q1 FY26 numbers. And viewers, completely out of time on India Market Open with regard to this one. So stay with us. Ask Profit will take all the action forward.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew, and with me as always is Mahima Vachharjani. Good morning, Mahima.
Good morning, Alex.
And very good morning to all of you, as I said. Let's take a look at where the markets are right now. And you have declines once again, but they're capped at about 0.2% for the benchmark Nifty 50. It's been 3 days, 3 sessions in a row of losses for the benchmark Nifty 50. And for the month as a whole now, the Nifty 50 down about 3.5% or thereabouts. If we can pull that up. Yeah, there you go. So close to 4%. After, if I'm not mistaken, 4 months of gains for the benchmark, you are losing about 3.5 to 4% at this point. And it's quite interesting because if you look at the performance of the Nifty 50 in July's over the course of the last several years, then you will notice that there are gains in most of them. The average 10-year monthly return for July is better than any other month. It's at 3.5%, but we're looking at declines for the month of July. But let's take a deeper look at where the markets are right now. And the mid-cap index just about flat right now, recovering from the low point of the day. You have the small-cap index that's down about 1/3%. And so I'm curious about the advanced decline ratio, or the market breadth, where in trade yesterday it was very, very sharply tilted in favor of the declines. It's been a chop and churn today, where you've seen that pull and push and the tug of war take place between the advances and the declines. Let's pull up the sectoral movers very quickly and talk about what's moving today. Realty, which was a stark underperformer in trade yesterday, is up about 1% in trade today, and the defense pack continues to lose ground. Of course, today Mazgon Dock shipbuilders is one of the stocks that is underperforming on the back of numbers. You have Paris Defense as well as Zentech, Mazgon losing about 4.5% or so, and quite a few stocks reacting to numbers as well.
Absolutely, and for Paris and Zentech especially, it's the second day of trade where they're seeing significant pressure. Paris Defense was locked in lower circuit yesterday, down by about 10% yesterday, today down almost 6%. Zentech also down 5% there. Some other counters that are also buzzing in trade. If we can try to pull up the BSE 500 and see, Zentech locked in lower circuit, as I mentioned earlier. There you go. The counters like Lakshmi Organic on the back of earnings, Home First down 5%. IEX still seeing pressure. There was one day of good gains because of earnings probably, but seeing pressure down by about 4%. Tata Chemicals, good set of numbers, up 5%. Rallis, JB Chemicals, GSFC are some of the counters doing well in trade
beyond
today.
that as well, there's one stock that I had pointed out this morning that looked really good. Of course, it is seasonal. Paradeep Phosphates, and it's up 13%. What a strong set of numbers that this company, 14% at this point, and 3 quarters of strong performance is what this company has posted. Remember, it is in the fertilizer space, but in the non-urea space. So as the name suggests, it is a manufacturer of diammonium phosphate. Apologies, so that's some DAP is what it's called. It is the pricing of DAP has actually been something of a focus point for a lot of researchers heading into this season, and that bodes well for this company as well as a couple of others. Let's get in our experts. We've got Asa Jain, who's a senior research analyst at Haim Securities, as well as Swati Hotkar, AVP Technical Research at Nirmal Bang. Ladies, thanks so much for joining in. Good morning to you. Swati, I'll very quickly come to you, because we've seen quite a bit of selling pressure come through over the last few trading sessions. I'm just wondering whether you see that some base is forming, there is a possibility of a bounce back from this point. Have we reached oversold zone, and specific stocks that you see opportunities in right now? Swati, you're on mute.
I'm really sorry. First of all, good morning, all of you. Yes, from the last 3 days, we was continuously witnessing a selling pressure on the Nifty as well as on the Bank Nifty front. Now, if we look towards on a larger degree on a weekly chart, if we draw the retracement from the all-time highs towards its previous lows, then we have retraced already 61.8%, which is the golden ratio of the Fibonacci retracement, and the support is formation at around 25,540, 500 level. That is a very strong support levels, and Nifty has almost touched that level, and we are witnessing a bounce back rally. I believe 24,500 will act as a crucial support levels, and we will see some turnaround back towards to 25,000 levels, which will hit the 50 days moving average. So up to that levels, we are likely to witness a bounce back rally. So this is the very quite decent levels to build up the long positions. So my view is definitely positive, and buy on dip strategy should be implied in these particular markets. Stock specific, yes, definitely 2 counters are really looking very positive on the technical front. One is the Hero MotoCorp. Already we have seen a very huge sell-off in this particular stock, and on the larger degree on the weekly chart, the counter has given the formations of the rounding bottom, and after the rounding bottom formations, we have seen a consolidation phase. So the risk reward ratio is really favorable at the current market price. 4,300 is the rate as of now is going on. I believe the stock has a potential to reach up to 4,400 to 4,450 levels. So this is the one counter definitely one should keep eye on it. And another counter looks positive on the technical front is the Asian Paints. Yesterday, the counter has shown a very strong formations nearby its 50 and the 100-day moving average. It has maintained a positive closing about the same levels, and we are likely to witness the up move rally towards to 200, which will take a counter towards to 2,400 to 2,440. So these 2 counters looks very positive, and one can definitely keep on radar.
All right, so Asian Paints also in focus on the back of earnings as well. Keep that in mind. But primary markets are they are on fire, because a new company which will make the D Street debut, Shriram Finance, is something that my colleague Sajit Mangat is talking to the management about. And let's cut across and listen to what they have to say.
With 158 touch points where we open our branches directly, we hire our own sales team and onboard customer directly through applications which we use for onboarding customers.
Your operations are primarily in the central India and I think western part where Rajasthan, Gujarat, Madhya Pradesh, Chhattisgarh, UP. How do you see the financing environment in these states, especially with respect to MSMEs? Because we've seen large banks, private sector and public sector talking about a stress which is there in this segment. And since 80% of your loans or assets are into the MSME sector, how do you see that?
See, we are into rural and semi-urban areas where we take documents as a security from them. So we are 198%. Our book is secured by collateral. So these collaterals are like residential or a commercial properties, which we take from the customers as a security and keep our LTV to 45 to 50%. So our credit checkpoints, our risk management, and our way of credit is very different. And our customer base are very, you can say, small ticket size loan taker who use this money for end uses for business expansion. So we take Udyam Aadhar from our customers who that shows that they are MSME customers, and that is the consumption of money is for business expansion. So in this rural and urban areas, so these guys are like Parchun ki dukan, tent house, stationery shops, sweet shops, and dhabas. So these are the guys who are taking these who are taking from a loan from us and for the business expansion and this and getting the complete family into the deal. So still in rural areas when you fund, that's the best part कि अभी भी वहाँ पे joint family system है. So a complete family like father has a two son, their wives, mother, everybody has comes into the deal and everybody is contributing towards a EMI. So.
All right, so that's the management of Lakshmi Finance. The IPO is currently open. Watch out for that. And there are 14 IPOs that are going to be open this week and 12 listings that have been lined up for this week. And so what Mahima said is exactly right. The primary market is on fire. But let's focus on the secondary market. And we've got the first question today from Pavan Kumar, who's writing in from Bengaluru and asking about Texmaco Rail, bought at levels of 156 rupees per share, 755 is what he's holding. He's wondering whether to hold or sell at this point, and if the recommendation is to sell, what would you suggest that he go into otherwise? Asa, what's the view here? And good morning to you.
Hi, good morning to you. Indeed, Alex, it's a busy week for primary markets because so many IPOs are coming. So you're absolutely right. Now, talking about Texmaco Rail, yes, what we believe that it is a hold from our side because we find that the order book is strong and going ahead might be we can see some sort of improvement in the margins, not maybe in this quarter, but I think over the period of a time of 1 or 2 quarters, the company will be able to post strong margins. So my idea here is to stay invested in this counter, at least for coming 2 quarters, that is 6 months time horizon. So hold is a strategy from my side for this counter with a price target of 180 at the initial levels.
Okay, hold is the view on Texmaco is what Asta is saying. All right, the next question is on Indian hotels. Now, Soumyadeep Chaudhary from West Bengal is writing in and holding 500 odd shares bought at 749 a piece, sitting on a loss of 2,000 odd rupees right now. Wants to know if we can continue to hold for the next 3 to 4 odd months. Swati, I'll come to you on the charts.
Yes, Mahima, one should definitely hold on at the current level because I believe that the stock has already seen a very strong retracement. It has formed a double bottoms in nearby 720, 730 levels, and we are likely to witness a more rally towards at least 200 DMA, which will take a counter to 770. So one should definitely hold on the long position by keeping a strict stop loss of a 720 for a target of 770.
Okay, all right. So that is a view on Indian hotel. Seema has got the next question asking about JSW Energy. She's bought 50 shares at a price of 707 rupees and asking whether it can be averaged at the current market price. Is this a good pick in the power space or should she shift to something else? Asa, there are several names in the renewable energy space and there are more names beyond this as well, even in the ancillary space. What is your view on JSW Energy though?
So the JSW Energy, I think the results will get announced on 31st of this month. So our view is positive, at least till 31st, one should definitely hold this counter because what we believe, and this is what our expectation is that the results going to be strong for this counter. Now in the energy space, what we are seeing that this company has got a very, very strong execution capabilities. And in fact, what we are seeing that this company has got, some sector leading achievements. So my idea here is stay invested or hold this counter at least till 31st, because what I'm seeing right now is the 31st is the date on which the results will get announced. So wait till the 31st, and definitely a hold from my side with a price target of 550 to 570 if results they deliver will be on the expected lines.
All right, so continue to hold JSW Energy. Viewers who are tuning in, you can also call us on the numbers that are flashing on your screen right now, the landline number as well. All right, the next question is from Tarun, who's writing us and wants to know about Jupiter Wagons. He's sitting on a loss of 6% is what he's saying. He's holding around 150 odd shares and wants to know if he can continue to hold or sell at this point. Swati, I'll come to you on this one. What are the charts indicating for Jupiter Wagons?
This particular counter is already trading in the nearby the oversold zone, and we are continuously witnessing some sort of a selling pressures. But I believe this is the probably it will find out a support nearby 330, 325 levels, and we can witness a turnaround. So not to book the losses at the current market price, definitely a bounce back rally can be seen towards at least 370 to 380. So sell on rise strategy should be employed at the current level. You can definitely hold on the counter.
Got it. Okay, so let's take the next question. It's from the Realty Pack, which has been under a little bit of pressure. It's bouncing back today, as I pointed out at the start. It's one of the top gainers, and Oberoi Realty is one of the top gainers, gaining about 1.7%, but quite a bit of ground lost over the past few trading sessions. And Gerard Joseph, who's writing in from Chennai, is asking about this. He's bought Oberoi Realty at a price of 1,889 rupees, so losing a little bit of ground right now. He's bought at elevated levels. He's looking to hold for another 2 months, so wondering whether to exit at this point and book his losses. Swati, what's the view? It's lost quite a bit of ground very, very quickly, but is there potential for a bounce back?
Sure, Alex, because already we have seen a profit bookings at the higher level of 2,000 and up to 1,600 we have seen already a downfall. Now the counter has entered into the oversold zone, so the downside is limited. Maximum up to 1550 levels can be seen, and there onwards we can witness some bounce back rally. And the bounce back rally is likely to be continued towards to 1,800 resistance provided by its 20 DMA. So I believe one should definitely hold on the current long positions at the CMP. Initial targets will be 1,800, and beyond that levels 1,860. 1870 levels can be seen. So you can hold on your long positions.
Got it. All right. We've got a caller on a stock that has been absolutely trounced in the recent past, and that's because of a change in the regulations that have come through. Rajesh is calling us from Hyderabad. Rajesh, very good morning to you. You're talking about IEX. What would you like to know?
Yeah, will it grow or it will be stand on this line only? That is what I want to know, because it is suddenly got down like anything, no?
Yeah. Did you by any chance read the update on market coupling that was announced on IEX?
Yeah.
So that is the reason, Rajesh, why the stock has been hammered in the recent past, because the interpretation of that is that the pricing control that IEX has had in the power trade space is going to be taken away, and so therefore that could have implications on its operations. And the most recent brokerage note, I can't remember exactly who, this morning had a note out with a target price of 99, because that coupling issue is something that has, according to them, broken the model for IEX. But I wonder, Bernstein was the one that said that 99 is the target price that they have with a sell recommendation. But Asta, on the fundamentals, it's already given up quite a bit of ground. He's bought levels of 231. Is this a broken model, or do you think that there could be a recovery from this stage?
I don't think so that recovery will be there actually sooner, because what we are seeing is now the company has got certain issues, and now some pending results will be there. Definitely they will be challenging the order, etc., etc. So for the time being, I think this stock is not looking so great, and there is uncertainty. So my idea here is just to make partial exit, not at the present level. Maybe in any case, if the stock rises till the level of 140, 145, then make partial exit and invest in any other good quality stock, although he will yield some losses right now by exiting from this counter. But definitely, I think there are a lot many options in the secondary market which can definitely yield good profits to him. So start making partial exit from this counter, because even I also feel that coming months will not be great for this company, because they will challenge the decision, and definitely all these things will take a lot of time and uncertainty will prevail.
Thank you so much for that, Astha. Just to add to that, we were just discussing, because if you've been holding IX from a short-term perspective, that's I think 15 months, if I'm not, no, 12 months. 12 months, then short-term capital loss will be applicable, and that you'll be able to set off only against short-term capital gain. Short-term is only both. Okay, short-term and long-term capital gain. And if you've been holding it from a longer-term perspective, then you'll be able to set it off against your long-term capital gain. So you'll have to keep that in mind as well. And of course, up to 1 lakh of your capital gains are non-taxable. So keep that also in mind. All right. So that's with regards to just a quick detour on talking about how you can manage your taxes as well while selling your stocks. But moving on, the next question is from Ajit, who's writing us from Cochin, and his question is on Paras Defense. Astha, I would want to come to you on this one. He's holding 91 odd shares, bought at 860 a piece. It's interesting because the earnings came out in the last minutes of Friday trade. The stock did not react much on that day, but Monday we saw it was locked in lower circuit. Today also it's down almost 6% as we speak. What is your reading with regards to where the numbers stand, and what do you think? Should he continue to hold?
So yes, what I think that right now, I mean, this quarter is not so good for all the defense companies, and majorly what we are seeing is that the results are not up to the line, or they are not at the par. But I think going forward, maybe 2 quarters down the line, these companies will able to post strong numbers. The reason being the kind of order book they have now started getting in, that will act in a favor for these companies, especially when they will post their financial performance. And going ahead also, I believe that the industry tailwind will also be there. So my idea here is that yes, due to the poor financial performance, this stock may see further downside. But in the longer term, one should remain invested in this counter, because I believe that defense is the space which is a long-term story. Maybe in the short term, we can see some sort of downside momentum. So stay invested in this counter for the longer period of a time. And the price target which can be set for this counter at the initial level is 700 to 720, because the results are not up to the mark. So we will not be able to see a major upside, at least for coming 2 months.
Okay. Okay, so that's the view with regards to where Paras Defense stands. Our next caller, Sanjay, is calling us from Bengaluru. Sanjay, hi, a very good morning to you. How can we help you today?
Hi, ma'am. Good morning, ma'am.
Good morning.
Ma'am, KPIT technology in 400 quantity, in average price 1,300. Correct loss, ma'am, 40,000 loss, ma'am. Short term 3 months, ma'am. Please technical analysis, ma'am. Sheller word, ma'am.
Okay. Okay, Sanjay, I got your question. I'll take this up with Swati quickly. Swati is sitting on a loss of almost 42,000 odd rupees. What are the charts indicating for KPIT Tech? Is there a chance in the next 3 odd months he'll be able to recover his losses or some of his losses?
My view is a little bit cautious in this particular counter, because from the last 3 months, we are continuously witnessing a formations of a low top, slow bottom, and we are hitting the resistance of 1400. I believe more downfall can be seen, which might take a counter to us to 1100. I will not suggest to book the losses at the current market price. If possible, try to average it out whenever the counter comes nearby 1100 or 1050 levels. You can average it out so that your buying price will come down. And again, the pullback rally or the bounce back rally can be seen, and which will take a counter towards to 1300 to 1400. So the longer term view is definitely positive, but for the short period of time, 1 to 3 months, my view is little bit cautious. So you should hold on this particular stock. Let the stock find out the support nearby 1100, and you can average it out, and you can book your profits nearby 1300 to 1400 levels.
Okay. All right. So our next question is on Bajaj. I'm just going to pull this up. If I remember correctly, it's not a very it's a recent listing, right?
No, it's not a recent listing, but recently it was in news on the back of a major order win. I'll try to pull that up till you answer.
In the meanwhile, let me read out the question. We've got Shailendra Gautam, who's asking about this. He's bought at levels of 322.8, which is elevated levels. So he's incurring a loss at this point. It's 2,600 crore market capitalization company, and I'm just pulling up the quarterly results. It's yet to post its numbers for the June quarter. I'm just wondering, Asta, if you have any coverage on this stock, and if so, what would the view be?
I think this is a Bajaj Group company, if I'm not wrong, but I don't have a coverage on this counter, so I'm sorry I cannot express my views on.
Okay. No, you have something more?
Yeah, so it's interesting because the kind of revenue it clocked in 2025 was around 2,500, 2,600 odd crores. But in the past few odd months, it's received its order book has totaled to almost 1,000 odd crores. So that's why it was in focus very recently.
Shall we take a technical view then? Swati, on the charts, is there any opinion that you would have if you bought at levels of 323, which is elevated levels? What would your strategy be?
Yeah, Alex, looking towards the chart setup, the chart setups are really not doing very well. We're hitting a very strong selling pressures, and I believe that the stock has a potential to come down up to 200 level. Up to that level, we are likely to witness a selling pressure. So sell on rise strategy should be employed, because whenever we see the uptick rally, which takes the stock towards 250, 260 levels. So at the current level, my view is a little bit cautious to bearish. Whenever we are getting any high towards 250 to 260 level, you should exit your long positions.
Okay, so that's the view with regards to where Bajaj Project stands. With that, it's time to slip into a very short break, but we'll be right back answering all your queries on the other side, so do stay tuned.
That's huge. That is a biggie. It's out of
Gold Plus Clear Glass. पार हो या नियर, सब कुछ दिखे क्लियर.
हेलो बोलिए मैडम. डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Welcome back. You're watching Ask Profit, and let's dive straight back into the questions that you've sent us. And by the way, if you're tuning in for the first time today, you can call us on that number, that number, and you can send us a message there. Let's talk about Chambal Fertilizers, and one of the stocks of the day today is Paradeep Phosphates, also in the fertilizer space, and I'm wondering whether the benefits will accrue to Chambal Fertilizers as well. It has not yet posted its Q1 numbers, and Ramesh from Chennai is holding at levels of 555 rupees. He's ready to hold it for 6 months and he's ready to add more. Asta, what are the prospects for this company in the earnings for the first quarter as well as for this financial year?
So we are liking this company because what we are seeing right now in the fertilizer space, the results are coming out to be very, very good. That is what we have seen in the other counters. So my idea here is that this company will definitely going to post very strong side of a number, especially on the margin front. We can see some sort of an uptick. And in fact, we are expecting this company to post the growth of more than 10% in their top line as well. So on that basis, we are positive on this counter, remain invested in this counter. And if everything goes well with the results, then definitely this counter is poised to move till the level of 580 to 590.
Hold is the view on Chambal Fertilizers is what Asta is saying. Our next caller, Samir, is calling us from Srinagar. Samir, hi. A very good morning to you. How's the weather in Srinagar?
Yeah, good. Fair enough.
Okay. Okay. What
but Samir, the fair enough in Srinagar is going to be much better than the fair enough in Bombay. So we can only dream about being where you are.
No, comfort. Yes. Climate is comfortable.
Very good. Good to hear.
All right. Go ahead with your question, Samir.
I've got Elecon Engineering for 500 shares. at the rate of 600.
Okay.
Uh,
Okay, and you want a fundamental view?
I need know from Asta ma'am.
Astha. Okay. Okay, Sameer, I got your question. Astha, your view on Elecon Engineering. He's sitting on loss of around 15,000 odd rupees right now. What's the view like?
So view is quite positive because we know this is the company which is into the industrial gear solution, and the kind of the results they have posted, they are coming out to be very, very strong. More than 30% rise in the top line. In fact, the bottom line was an exceptional performance. So I think, and I believe that this counter has a potential to move more upside from here. Right now, it is quoting at around 569, 570, and it can move till the level of 650 in the medium term. Hold is the recommendation from my side for this counter.
Okay, hold is a recommendation on Elecon Engineering. Sameer, hopefully that answers your question, and I wish that our weather was as comfortable as what you're experiencing, and hope that continues through the rest of the year as well. Let's talk about let's talk about BSE, and this is a question from Jatin, who's writing in from Patiala in Punjab, and you all know what Punjab is famous for. Let's talk about BSE though. 1,200 is the buy price and 50 shares is what he's holding. He's wondering whether to book profits. What's the view, Swati, on the chart? You're on mute again.
My view is definitely positive on this particular stock, but at least partial profit should be booked at the current levels because the counter is trading at a higher levels, and I believe that 24,000 is the cluster support zone. But if it's breakdown, then more selling pressure or the profit booking is likely to be intensified, which might take a counter towards to 2,200 to 2,000 levels. So up to that level, we might witness some sort of a depth. So at the current market price, you can book your partial profit. Second partial, you can hold on with a trailing stop loss of 2,400 rupees. Upside rally can be seen smoothly once it manages to give the breakout of 2,550 levels. If it's break that level, then the smooth rally can be extended towards to 2,900 to 3,000 levels. So the view is positive. Hold your partial profits by keeping a strict stop loss for 2,400 levels.
All right, so that's a view on BSE. And the next caller is from Indore. Naman is calling us. Naman, namaskar. How can we help you today?
Yes. Good morning, sir. I have a question from Astha, ma'am, actually.
Okay.
I have purchased 183, 1624 quantity of Irida, and at the average price of 183 rupees. And I am ready to wait for 1 year, sir. I just want a feedback from Astha, ma'am.
Okay. All right. And why IREDA and not REC and PFC?
Actually, I have purchased that, but I have done the SIP in that stocks.
In REC, PFC?
Yes.
Okay, and this is part of your long-term portfolio?
Yeah, sure.
And so therefore, why is Irida only 1 year, Naman?
Actually, I have purchased because last time in other channel, Astha ma'am has suggested to buy it. That's why I purchased it.
Okay, all right. And I'm glad that you came to our channel to clarify. So,
Yes.
Astha, the question is therefore to you, and there is context. I'm glad that Naman shared that with us. 183 is the buy price. Would you hold for a year?
Surely, because when I recommended it, it is definitely for a longer term horizon. We have seen a strong growth in their order book. I think around 20% rise what we have seen. And what I believe that it is a pure play, green financing NBFC. So this holds quite a good importance. Secondly, their ratings are very, very strong. So I believe that in the longer term, this counter can move till those levels. I mean, more than 180 to 200, but it is a long-term story. So idea here is to extend the time horizon from 2-3 months to 6 months at least, and remain invested in this counter.
Is the view on IREDA is what Astha is saying. All right. The next question is from Gautam Shinoy, who's writing us from Bengaluru. He's got 300 odd shares of Bajaj Finance at an average price of 910. He wants to hold the counter for 1 odd year and wants to know as to what should he do next, because in the last few sessions it's seen a downtick, as Alex was mentioning, 9% in the past 3 odd sessions, and this is on the back of its earnings. But Swati, on the charts from a 1 year perspective, do you think he should continue to hold?
Yes, for the 1 year perspective, definitely you can hold on. But for a short term period of time, my view is a little bit cautious because the counter is on the verge of giving the breakdown of the cluster supports level. Already the counter is trading below the 900 rupees, which is a cautious sign on the technical front. And the selling pressure can be extended and which might take our stock towards to 830 to 820 levels. Up to that level, we are likely to witness a selling pressure. Positive momentum can be seen only if it manages to give the breakout of a 940 levels, which is acting as a very strong resistance levels. But for the longer term horizon, definitely my targets open up for at least 1150 to 1200 levels. So if you don't need of any capital and you have a patience to hold on for a 1 year, you can definitely keep a hold to your long positions. And if you're getting any dips towards to 7700 levels, you can add on the particular palm stock.
Okay. All right. I believe our next caller is from Andhra Pradesh. Shravan is calling us. Shravan, very good morning to you. How can we help you today?
Very good morning, Alex, and very good morning to the analysts as well. Yeah. So I have a sale. I am holding 100 shares of 136 rupees. So I am getting a loss of incurred loss of 1100, 1300 rupees. So can I hold it or can I sell it?
First of all, am I getting your name wrong? Your name is Shravan, right?
Shravan Kumar, yeah.
Shravan, okay. So I was pronouncing your name wrong. Apologies. So you want to know whether to hold. By the way, in case you're interested in sale, do have a look at the interview that we did with the management. Just confirm, would you like to hold this for the long term?
No, I haven't seen that interview with the management.
But you can find that on YouTube.
I will file.
But I'm saying, do you intend to hold sale for the long term?
Not for it's for short term only. I have purchased, but
understood. Okay,
so I need to understand that.
Yeah, let me go across. Yeah, please go ahead.
And Alex, one more thing.
Yes.
So I have asked for the Pondy oxide analysis as well, but the market cap is very less. But it's a good company, right? So NDTV has some criteria. I think panel has said that. Yeah.
Not really criteria. It's just that
market capitalization.
Yes, it is difficult to get you a view on companies that are below a certain market capitalization. But I see that it's about 3,250 crore odd market cap. Pondy Oxides and Chemicals manufactures lead metal and alloys and other non-ferrous metals. So I can check, Shravan, I can check if Asta has a view. Asta, Pondy Oxides and Chemicals, do you have coverage?
No, not for Pondy Oxide, but for sale I can express my view if required.
Please.
Yes. So for sale, we are positive on this counter, although he's yielding some losses, but that are just due to the market conditions and nothing wrong with the fundamentals as what we have seen that the bottom line has seen a surge in the quarter by that is of the Q1 of FY26. So the results seems to be good. And we believe that going ahead also we can see increase in their EBITDA per ton. So we are positive on this counter for the medium to long term. Remain invested in this counter. Definitely it will yield some good profits to you in the longer term, and hence our price target is 150.
Okay, so continue to hold sale. The next question is from Sudhir, who's writing us from Mysore. He's holding 761 shares of RVNL, bought at 467 a piece and sitting on a loss of around 85,000 odd rupees is what he's saying. Wants to know if you can continue to hold or exit at the moment and book losses. Swati, on the charts, what would you recommend?
At the current level, I will suggest to hold on because the counter is really trading at a lower levels, entered into the oversold zone. So the depth is limited on the downside. No use to book the losses at the lower levels. I will suggest to hold on. If you're getting any rise or the bounce back rally towards to 390 to 400 levels, at that level you can definitely exit out because it is acting as a very strong resistance zone of 200-day moving average. From the last 3 to 6 months, we are continuously witnessing that the stock is unable to give the breakout of 400 levels. So that is acting as a strong resistance level. So sell on price strategy should be implied in this particular counter.
Okay, all right. So that's with regards to where RVNL stands. Our next question is from Neeraj, who's calling us from Kolkata. Neeraj, hi, a very good morning to you. How can we help you today?
Hi, madam. Hi, Alex.
Hi.
So I'm holding. So I'm holding 5,000 shares bought at the rate of 117.
Okay.
In the year 2015. So I just wanted to know from Astha man or the second analyst that whether it can touch 1,000 by coming Diwali.
By coming Diwali, okay, that is an ambitious target, I must say, Neeraj. But congratulations, because 24 lakhs is huge profits to make, and you've entered the counter at the right levels. The stock is currently trading at 603. So congratulations on that. Just before I go on to Asta, what was your thinking behind buying Ambuja Cements? Hi Neeraj, can you hear me? Okay. Yes. What was the thinking behind buying Ambuja Cements?
Ambuja, actually, madam, at that time, Congress government was there, and at that time also there was a lot of capex and all that.
Achha.
So I just went and bought down 5,000 and did a 117.
Okay.
So I took a risk.
Okay, Neeraj. Got your question. I'll take this up with Asta then. Asta, your view on Ambuja Cements. Should he continue to hold or book some profits now?
And is 1,000 possible by Diwali?
Yeah.
I think नीरज का इरादा ये है कि वो सीमेंट का स्टॉक बेच के घर खरीदे.
No, I'm already having.
Second house, यार. Neeraj, you can have one more house. More than enough. Okay. So but is 1,000 possible, Asta?
So if I talk about the fundamentals of this company, what I believe, yes, 1,000 can also be achieved on this counter, but in the longer term, because in the shorter term, my targets are limited to 700 to 710 odd levels. Now, talking about the fundamental, they have got a very strong exposure in the South India. First of all, so that is really working positive for them. In fact, the company has got a very strong traction from the industry also. This is what we are seeing. And now their synergies with the Adani group is also, working in the favor of this company. So almost, I think the company is looking to set a very strong numbers going ahead also. This is what we believe, because numbers they have not announced as of now. Maybe on 31st, I think, if I'm not wrong with my dates, it is 31st of the July, then this company will be announcing its number, and we are expecting good set of numbers. So initially, one can set the target of 700 to 710. But yes, 1,000 is also possible in the longer term horizon, and I think Swati is the right person to tell the time frame. But I think 1,000 can also be achieved maybe 2 to 3 quarters down, 2 quarters down the line. That is 6 months.
Okay. All right. So that's the view on Ambuja Cement. By the way, Motherson Sumi has come out with its Q1 earnings, where the revenue and EBITDA saw an increase, but the margins took a bit of a dip. We had a conversation with the Chief Operating Officer, Anurag Gehlot, and here's what he had to say about the delay in execution of the Gujarat plant. Listen in.
EV will take some time to come in India as the ICE is there. Ease of driving ICE in terms of infrastructure, in terms of worrying whether this car will be able to drive me 250 kilometers far from this place to my hometown. Most of us work in a migrated locations. All of us. We unless and until you are living in metropolitan and you get a job there, which is a very small rate to have that. So most of the people are migrated, and when people are migrated, car is a second home. Everybody wants a car, want to live in that with family, wife, children, and whatnot. So car is something which is very near to your heart. So, and if you are not confident of infrastructure at this point in time, whereas a lot of things has been done. It's not that it's not been done. If you see like road infrastructure or things like that, which is coming up very nice. Last 1 decade, I can say, never been like this in many, many years.
Right, Motherson Wiring and wiring harnesses, by the way, is what they manufacture. They were spun off from Motherson Sumi, and they're an ancillary player in the automotive space, of course, but they cater to a wide array of automotive companies, including electric vehicle manufacturers, which is what is interesting about it. Their margins took a bit of a dip, though. Let's see if that changes down the line. But we were speaking about Ambuja Cements before we went to that interview, and Swati, the question was whether 1,000 is possible by Diwali. It's just a couple of months away, so that would require a very significant run-up in the stock. Is that likely, and what are the more realistic targets?
Frankly speaking, 1,000 levels will not be achieved in this Diwali. 750 to 800 levels can be tested as per the extension, whatever I draw on the time cycle. It shows a target of at least 750 to 800. Up to that level, we can witness a positive momentum. But 1,000 levels can be witnessed in the next financial year and so. At the current level, view is definitely positive. The person can definitely hold the long positions.
All right, standard disclaimer here, Ambuja Cements is part of the Adani Group and so is NDTV Profit through the NDTV Group, as you know. Our next caller, Mohan, is from Karnataka. Mohan, very good morning to you. How can we help you?
I have 15,000 shares of Federal Bank, bought it at 214.23.
Okay.
I just wanted to have view on that.
What is the, okay, so it's a significant quantity that you've bought, Mohan. Did you buy it for the short term or the long term?
In fact, I bought it for short term only.
Okay. And is this a significant portion of your portfolio or is this a small part, less than 10% perhaps?
It's about 30+%.
Okay. So bear in mind that you need to reduce concentration risk, Mohan, especially if you are looking for short-term trading ideas. Do not use a very large portion of your equity portfolio for trading purposes and have a long-term portfolio. So what I will do is, let me get you a view from Swati on the charts, but I will also get you a view from Asta, because if the suggestion is to hold for the long term, you're incurring a loss of about 1 lakh or so. If the view is to hold for the long term, you can then take an informed decision. Swati, on the charts, he's bought at levels of 214. What should he do?
My view is a little bit cautious on this particular stock because from the last 2 weeks, it's continuously trading in low top, low bottom formations and facing a very strong resistance of 210, 15 to 20 levels. Downside, the immediate support lies at 200 levels provided by its downward sloping trend line that will act as immediate support level. If it's break that level, then more selling pressure is likely to be seen and which might take a counter towards to 185 to 180 levels. So view is a little bit cautious. I will suggest to hold on the long position at CMP, but place the strict stop loss of 200 rupees. Positive momentum can be seen if it manages to give the breakout of 250, that is acting as a 20 days moving average resistance levels. If it surpasses that level, then again the trend will be changed for a shorter period of time, which will take a counter towards to 240 levels and so. So at the current market price, view is cautious. Hold the long positions by keeping a strict stop loss of 200 rupees.
And Asa, very quick view because we're running out of time. Federal, is it a hold for the long term on the fundamentals, or are there better prospects in the banking space?
I think he should remain invested in this counter for the price target of 225 to 30 at the initial level, because we believe that management is setting very strong credit growth figures of around 14 to 15%, and they are looking forward for increasing the CASA ratio also, which will increase their return on assets ratio. So I believe going ahead, management's focus will definitely help this bank to move upwards from here and hence remain invested in this counter.
Okay. The next question is from Tushar, who wants to know about Jamuna Auto. He's bought 1465 shares at 103 a piece. Your quick view on this, Asta, should he continue to hold and should he average at the current levels?
I think hold is a better strategy for this counter. So we recommend a hold on Jamuna Auto because we believe that the auto sector is well poised to move more upside from here, and Jamuna Auto is one of the players with a price target of around 102 to 105. One can remain invested in this counter.
All right. It's time now for the rapid fire round, and this is where we throw as many questions as possible at Asta as well as Swati. Ladies, I hope you're ready. The first question is on IndusInd Bank, bought at levels of 838. Sujay from Jaipur wants to know whether a hold or book his losses. Asta?
Hold. We are recommending hold on this counter with a price target of 850 to 860.
Okay, Sigachi Industries is the next counter. Wilfred from Navi Mumbai wants to know if you can continue to hold the counter. He's been holding since the company is listed. Your view on this, Asta?
Sigachi Industries is again a hold from our side for the price target of 42 to 44.
Tejas Network is the name of the counter. Average price of 676. Moses wants to know. No, Dev wants to know. Writing from Chennai. Swati, would you hold?
Yes, I would like to hold the long positions for immediate target of 640 to 650 levels.
Sudhakar has 50,000 available and wants to invest in blue chip stocks. like Reliance, L&T, Infosys. One of these counters that you like, Asta, what would be the entry point?
So I think L&T is a good counter to invest in this, and hence we recommend investment in the L&T.
Okay. PI Industries, Pakshal from Ballari wants to know, bought at levels of 4,097, holding for 2 years. View for the next 12 months is being sought. 5,000, is it possible? Swati?
Yes, definitely. Those are the targets can be seen, but initial target will be 4,500. Beyond that, 5,000 levels can be seen. So it's a hold from my end.
Okay, Axis Bank is the next counter. Shiva Kumar has been holding 100 shares at the price of 741 since 2022. Wants to know if you can continue to add more, considering Q1 was bad and stock is tanked. Asta, your view?
Add more, but not at the current level. Maybe at the level of 1,020 to 1,030. One can add more this counter.
Okay, Hindustan Aeronautics. I hope I'm right when I say that the buy price is 750. Hanumantu wants to know whether to hold or sell at this point. Asta?
Hold. Maybe it will take some longer time to see the more upside from here. But yes, one can remain invested in this.
Okay, all right. Well, we've taken quite a few questions. Asta, Swati, thanks so much for joining in today and for answering all of them. Pleasure as always having you.
Thank you.
All right, that brings us to the end of this edition of Ask Profit. We've had some interesting conversations with some of you today, and it's always something that brings a smile to our faces. Up next is Know Your Company, and from Mahima and myself and the team that put the show together, thank you so much for watching.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the Hello and welcome. You're watching KYC. I'm Harsh Saita. Today we're going to look at an interesting company from a perspective of stock price performance. It's been up 2x since the 2nd of May of this year. So it's given stellar returns to investors. Been a fabulous rally in the stock. What's leading to that rally is what I'd want to first off know. Second, we're talking about Sterlite Tech and therefore the optic fiber business is going to demerge and we're going to try and understand, or rather the optic fiber business is going to be the existing business of the company and we're going to see a demerger of its global services business. Now what does that demerger essentially lead to and what are the opportunities now with regard to that demerger is what I'd want to explore. Is Starlink a potential client? That's going to be a big one if that is the case. So you want to understand whether that is actually the case or not. The other one is the opportunities. There's a BSNL contract as well as BharatNet, which is a large investment which will come through. Both of those are big opportunities, but given this demerger, how much of an opportunity is that for a Sterlite Tech and how much for the demerged company Sterlite Networks, which is yet to take shape and take form, right? So I'd want to know what the opportunity on each of those individually looks like. In terms of the optic fiber business, there has been a build-up in inventory in the US, which has led to some bit of tepidness with regard to the numbers over the last maybe year or so. Is that unwind actually happening? Are we seeing that unwind? How real is it? What could the impact of that unwind be and what could the timing of that unwind be? And therefore, how does Sterlite Tech take opportunity from that? The other piece is with regard to India. The capex cycle now likely at the fag end. So you might well see a slowdown in the India business. What does this lead to in terms of numbers, and how is Sterlite Tech placed to actually deal with that? There is also a huge debt which has been a drag on the numbers. We'll look at the numbers and I'll explain what the debt picture looks like. Now, in terms of that, what is the glide path with regard to debt going forward, and what is the impact of the debt falling on both EBITDA, maybe not on EBITDA, but more so on bottom line, which is on profit after tax. Now, the last one is this: growth and margin guidance in the optic fiber business. Found it difficult to actually find that kind of guidance. There's very generic guidance available. We'll try to quiz management on specific guidance if they have any. So all of that and more on today's KYC. Let me start off, as we always do, with what the company does and give you a quick snapshot of that. It's a global leader in the optical fiber and cables business. So that's what Sterlite Tech does. In terms of manufacturing, it has manufacturing facilities in 5 countries and sells to over 100 countries. The key focus area, of course, is telecom, but outside of that now, data centers could be the new lever. Digital networks is also the other lever. The recent demerger, of course, of the services business, we spoke about that, is now going to be demerged to STL Networks. How quickly does that demerger come through is the other question which I would have. In terms of product, and we'll break this down. You have the optical fiber cables, which is the core product. It's around 22% of the top line of the company. Optical fiber, which is raw glass fiber, is around 14% of the turnover. Copper or telecom cables is around 18% of the turnover. And optical interconnect, which is connectivity solutions, is around 12% of the turnover. Has a slightly higher return on capital employed. So any positivity on that business will lead to a bit of an uptick with regard to ROC. And then there's a relatively smaller business called STL Digital, which is software, cloud, AI. It's got a smaller revenue size in comparison to some of the other core products which Sterlite Tech does. In terms of the business model, it manufactures, as I said, in 5 countries, including India, USA, China, Italy, and the like. You also have it selling not just domestically but also internationally. 30% of the top line comes from international, and of course it will have a whole plethora of clients. It's highly integrated in terms of raw material to finished goods, fairly integrated process, but copper could be the one big variant here or variable factor here. Of course, key competitors among others is Himachal Futuristic, but also an HFCL, for example. And then there are lots of Chinese players, and global competition is quite high in this space. And that leads to a little bit of pricing pressure as well in bad times globally. So whenever there's a global slowdown in terms of capex on the telecom front, you start to see the pricing start to chip away, which also impacts margins. So it's a cyclical kind of a commoditized kind of a business, largely because you have a lot of Chinese players and global players present. And therefore, any slowdown, cyclicality causes an impact with regard to numbers. Now, in terms of raw materials, the main raw material, of course, is copper, but you also have silicon. That's the other one. So the sourcing happens globally. It's LME linked, so and therefore highly commoditized. The price or availability risk is high. It's mitigated, of course, by local sourcing, and there's some active risk management which the company also does. There is some, of course, commodity risk which is very, very evident from the kind of raw material sourcing that happens. Pass-through, of course, is a challenge because that depends on what I just explained in terms of how the global competitive landscape is playing out and how pricing is playing out there. So it's all about scale in this business. If you can scale it well, then you're well placed with regard to the margin levers that you have are far greater in comparison to some of the other competitors. And Sterlite Tech is one of the top 3 players in this space and therefore has that advantage, but also has certain disadvantages. And for that, we have to look at the key metrics. And let's quickly break that one down. let's understand first off, starting with the income statement. We'll thereafter look at the balance sheet, the cash flow, the return ratios, as we always do. Thereafter, we'll look at shareholding, street cred, valuations, and outlook. We'll cover all of those on KYC for Sterlite Tech. Let's start off with the income statement. And you'll have to take this with a little bit of pinch of salt, and I'll explain this. FY23 is the combined business number on the top line, so is FY24. FY25 of 3996 crore is just the optic fiber business. So if I were to take a comparable number, and that's why we've not given a CAGR number as you can see on your screen, but if you were just to take the comparable number, FY24 versus FY25, it's a flat line with regard to the top line, right? So that's how the top line is evolved. Margins are largely 10%. So FY25 is now the new base with regard to where the numbers are concerned. I also want to highlight the one possible key positive here is the fact that your interest payments in FY25 was 241 crore. So that negative net loss or net loss of 123 crore, if I can call it, largely driven because of that interest cost being extremely significant. And you look at the interest coverage ratio, so which is the interest over EBITDA, that too is quite elevated, because what you're seeing is the interest cost is so high, it's virtually covering 50-60% of the EBITDA, and which is not a healthy sign. But that's FY25. FY26 will show us a slightly different picture in that sense. And let's pull out those numbers, and that will give us some perspective. The FY26 income statement, or the Q1 FY26 income statement, is largely driven by a 17% top line growth. The EBITDA has shot up substantially from 64 crore, it's up to 132 crore. Margins have inched up as well. And what you're seeing on profitability is also quite strong. It's a 10 crore profit. So from a loss of 120, it's come to a 10 crore profit. The question will obviously be how sustainable. You don't want to look at those QOQ and YOY numbers with regard to profit, because the erstwhile number is actually a loss, and therefore you want to remove those. In terms of the margin trajectory as well, let's pull that up. There you go. So you're looking at margins which were sub 13% in FY22. They fell to 10% in FY24, FY25, and have now rebounded towards the 13% mark. The question is, there is an aspiration to increase margins. The question is, how much can they do that? How much bandwidth and how many levers do they have to actually increase the margins and therefore increase likely profitability? We've given this a neutral because it's a fast evolving environment at this point, both on the top line as well as on the margin number. You're seeing so much variability, it's difficult to quantify exactly where it will go. The other question also is that how sustainable and what kind of a sustainable number can we arrive at where the margins are concerned. So all of those questions we'll try to get answered and get a better perspective on that. But let's quickly move to the balance sheet. And you're looking at an equity raise which happened last year of around 1,000 crore, which is what has led to the bump up in the equity capital, which you can see on the top line. Other equity book value also there. What you're also seeing is a borrowing number of around 1,800 crore even now. That is likely to go down, and that is significant given that the company has a market cap of around 6,000 crore. The debt to equity is nearly 1:1. So not looking pretty even from that perspective. But we've given this a neutral given the fact that there is a thought process to bring this down sharply. There's an intention to do that. How quickly, how sharply is of course the question. Therefore, again, difficult to rate. We've given this a neutral. Cash flow. Now, very quickly on the cash flow, you look at cash flow to EBITDA. FY23, there was inventory build up, there was receivables build up, all of that building up has led to that kind of number. So there's variability on this as well. How stable can the cash flows be going forward will again be the question, but largely last couple of years has been okay. Again, the payables spiked in FY25, we saw receivables spike as well. Or rather payables fell in FY25, receivables spike as well. All of those adversely impacted the operating cash flow in FY25. So that's how it's played out. Your ROE numbers not looking healthy either. So your ROE numbers have been volatile. Can there be more stability is the question, but clearly that one's also a thumbs down. When you're looking at shareholding, now shareholding has been above the 50% threshold. They've diluted a little bit and brought it down to 44% now. And that is only because of the QIP that they've done. So really no selling per se from the promoter group. But what you want to see is more stability, lesser dilution happening. So some color around that will help as to how funding is happening with regard to the debt which they are planning to service and how quickly can they service that. Now let's look at street cred. This has been fabulous and this has been very interesting. You look at the 1 month stock price performance up 19%. The 2 month stock price performance, it's a two bagger. 6 months is up 21%. Year to date up just 8.5%. And the 1 year stock price is actually down 15% and 5 years is also down 15%. So you've given this an absolute neutral. It's given the quantum of variability with regard to stock price performance. But of course, recently the stock price has done very well. Whereas over the longer term, it's been quite a dampener in terms of returns for shareholders. Now let's look at valuations. This is a very tricky one. Frankly, viewers, all these metrics have been extremely tricky to kind of deal with. So want to keep it out there, put it out there. In terms of current EBITDA, it's at 416 crore. We discussed this. EBITDA as per Nuvama estimates for FY26, I'm talking about now, 694 crore. The enterprise value currently sits at around 7,500 crore. Mind you, this is basically price to EV broadly is how it is dealt with in terms of the valuation. EV to EBITDA is what they deal with in terms of the valuation. So at current, EV to EBITDA is around 18 times. 1 year forward is around 11 times. And if I were to roll this forward to 2 years at a 15% margin, then you're roughly trading at sub 9 times EV to EBITDA. Question will only be, is that doable? Is that sustainable? Can the top line grow at the rate at which we're penciling in terms of our estimates? But broadly, that's the thought process. Let's look at the outlook. There's no numerical PAT or revenue guidance which has been given by management. The growth levers, North America, India demand, capacity utilization going up, data centers and AI, all of that is likely to drive demand going forward. But how much can the top line grow by is really the key question. Margins, EBITDA is likely to improve again by how much and what is the aspiration? How quickly do we achieve that is the question. Geographic risks, US and EU tariffs is a big risk on the books. Want to know as to how will that impact the numbers overall. And profitability, well, they aim to turn PAT profitable. They have done that in Q1 FY26. Sustainability of that will really be the question. Very, very difficult to tackle all of this. No absolute clear guidance, and maybe we'll get that as we speak with Ankit Agarwal, who's the Managing Director at Sterlite Tech, who's going to join us in just a minute. Let's wrap up on the ratings. Now, probably the only company where we found it very tough to put out a rating, but we've done that nonetheless, and that's how it all stacks up. Overall, it gets no thumbs up. That's the one key negative. 3.5 on 8. And mind you, viewers, we've been cautious about this. So I want to put it out there that we've been super cautious with regard to our rating on this one. But it's an interesting one. And therefore, let's go across to Ankit Agarwal, Managing Director, Sterlite Tech, joining us. Ankit, great having you. Let me first start off with what the levers are with regard to growth. You've been at around the 4,000 crore top line number last couple of years. Do you start to see growth come back significantly this year? And I won't talk order book, I'll just talk execution. Give us that perspective.
Yeah, thank you for having me on the show. So I think definitely in terms of the levers that you touched on, the primary one that we look at is how do we improve our cable demand. And as we've been guiding, we want to take this from about 45-50% utilization towards 70% plus utilization. We see that happening as our order book continues to grow and we execute on that. And probably towards Q3, Q4 of this year, we'll move in that direction. If you look at our own numbers from 2 to 3 years ago, when we have broadly run our factories at 70% utilization, we moved towards that 18 to 20% EBITDA margin from currently around 13%-14% margin currently. So that's really what we are focusing on. We've also been working towards improving our cost structure over the last 18 months. And you see that now in terms of our numbers as well. So I think this is the primary focus. On top of this, we are seeing two other areas. One is our connectivity, which we are clear that we want to build in terms of cable and connectivity, improving our attach rate. Currently, that's broadly around 20-22%, and we want to see how we can grow that. And the last part is in terms of data centers. That's a very important growth segment for us. We've been looking at how do we build our portfolio, and recently we've launched our portfolio as well. We're already in conversations with various data center players in India. And as we are all aware, data center capacity in India is expected to go from about 1 megawatt to almost 3 megawatts, 1 gigawatt to about 3 gigawatts between now and 2030. So that's basically the focus area for us as a company.
Okay, so Ankit, point taken. Likely the stock price rally is because of that guidance that you're going to try and hit 70% capacity utilization closer to Q3 onwards. How likely is that? What are the levers of you getting there? Is it the robust order book that gives you confidence? Is it the demand pipeline that's giving you confidence? Is it the pricing, which also you are largely seeing to be okay? Is that what's giving you confidence? Give us all of that.
Yeah, I think, our focused markets continue to be US, Europe, and India. And across all three, we have good reasons to be positive. As we've been sharing, we had about 18 months period where actually US demand was very strong, the deployment was very strong, but there was excess inventory across the system. A lot of that has now got reduced and depleted. So we do see fresh demand coming from our customers, particularly in the US. And this is also a positive sign for us. We've also been early to the business in terms of setting up our facilities in North America. And now we have a state-of-the-art factory which can serve the customers locally. So I think we're well set up for that. In Europe as well, we have a state-of-the-art manufacturing in Italy. And we're well set up to serve the markets, particularly UK, Italy, Germany, which are very fast-growing markets in the Europe segment. And India as well, while we've seen the market being steady, we do expect some growth in India on the back of BharatNet Phase 3, where some of the projects have been awarded and the balance will also get awarded in the coming months.
Right. So, and US, do you see that inventory unwind happening, Ankit, at all? And how quickly can we see that happen? Because that will be one key lever. Anything with regard to geopolitics affecting your business? I know you have capacities everywhere and therefore unlikely that it will impact your business, but does it at all? Give us that perspective.
Yeah, I think on the first point, as I said, we have seen that inventory substantially reduce. And if you look at our peers as well in the US, they're also seeing increased demand, both from the telecom segment as well as from the data center segment. Our own view is that the US itself will continue a healthy deployment of fiber over the next 4 to 5 years. So that's something that we're quite excited about, and we want to increase our market share in the US. In terms of our attach rate as well, we want to grow our business, particularly in the US as well for this. In terms of, the geopolitical environments, I think it's positive that we have a free trade agreement signed with the UK. So I think to that extent, our business continues to be healthy in the UK. In Europe as well, we are well set up with majority of our supply into Europe coming from our factory in Italy. So we are well, protected out there. And similarly, in the US as well, we have a state-of-the-art factory there, which serves the US requirement. And to some extent, we manufacture from India and supply to the US. To that extent, we are looking at what could be the possible tariffs that get announced. And we're looking at various measures to mitigate that.
Now, let me understand India. You have BSNL, you have BharatNet. How much of these opportunities does Sterlite Tech take? How much of it is Sterlite Networks opportunity? How do you break up these opportunities? How should one look at the 2,631 crore order which you already have between both these entities? Give us that breakdown.
Yeah, so at a macro level, important to appreciate that India is less than 5% of the world optical market. So while we're excited about the growth, really from a major impact to our bottom line, it really comes back to Europe and US markets. India is important for us. It's our home market. And we're excited to connect every village in India with optical fiber. STL, the networks business, has taken up a project in Jammu Kashmir, which is a combination of CapEx deployment for 3 years and then maintenance for 10 years. So that's largely the project that's been taken up by that business, which is under the brand Invenia. In terms of the optical fiber cables and connectivity, that's typically in that range of 5 to 7% of the value of the capex. Is what ultimately would come to Sterlite Technologies. But equally, we have given our MAF, which is our right to partner with various other bidders who have currently won some of the projects, and there are other bids which I mentioned are on the pipeline.
Sure.
So basically, our focus in Sterlite Technologies will be the supply of our products, both to Invenia, which will be at arm's length, as well as to other companies as well.
Right. Ankit, I have 3 minutes and I have 3 quick questions. Starlink, is it a potential client?
Starlink will be interesting. I think it's very interesting where I think the technology will be useful for, say, remote and rural applications. I think the cost structure, the latency and the speeds, they will struggle in your main cities, etc. But certainly if there is an opportunity to partner with them on some of the connectivity requirements from the satellite, from the link at the home into the house, I think those are areas we could look to partner with them or the other satellite providers. As I said earlier, our main focus is on the fiber and the fiber connectivity. And for that, the primary requirements are around 5G, fiber to the home, and now increasingly data center requirements.
Got it. Ankit, as you go from 45-50% capacity utilization to 70%, where does your top line go? FY26 give us a perspective, FY27 give us a quick perspective.
I won't be able to give any quick perspective. I can only share that we do see that our margins will improve as our utilizations improve quarter on quarter. And I think we're just really focused on our large clients in our global markets, looking to secure long-term contracts with them and really look to support them with both our cable and connectivity as a combined solution.
Okay, all right. I take your point. Ankit, debt reduction, how much and how quickly?
So we've guided that already, that it is important for us to reduce our debt. I'm happy to share that we've done majority of our capex over the last several years. So from a cash flow perspective, whatever cash we generate, a good portion of that will be utilized to reduce our debt. And our target net debt to EBITDA is to bring it down further to 2 times by end of the year. So which we believe is a healthy position to achieve, and we're confident of that.
Okay, thank you so much, Ankit, for coming and speaking with us. Out of time on this edition of the show. Appreciate all the replies that we've got. So thanks for coming and speaking with us. Viewers, completely out of time on this edition of KYC. Thanks so much for tuning in. Stay tuned to NDTV Profit. More action just on the other side.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बार खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release.
Nifty trades below 24,700 in a choppy day of trade. Most sectors trade in the green. Realty metal lead gains. Tata Chemicals up over 6% in trade today. Morgan Stanley upgrades the counter to an overweight, hikes the target price as well to 1,127 rupees. And it's the entire defense pack that is under pressure after a weak set of earnings in the first quarter. Masgordog Zen Technologies declined nearly 5%. And TCS is back in focus, this time on media reports mentioning a freeze on hiring of senior employees as well as a pause in salary hikes. Is more trouble brewing or the tech giant is just being prudent? We'll find out. And it's a weak set for IndusInd Bank in the first quarter. Margins fall, asset quality worsens on a quarter-on-quarter basis. Provisions as well continue to remain elevated. And a trade deal between India and US hits a roadblock. Trade teams from both nations currently involved in negotiations. Good afternoon. You're watching Markets at 12 with me, Shreyansi Singh. First things first, let's take a look at the markets, and Nifty currently trading sub those 24,700 levels, as you can see on your screens as well. So that's the handover as far as Nifty is concerned. A choppy day of trade is what you're looking at this point in time. So you do have most sectors that are holding on to, in fact, a tinge of red at this point in time. So it's defense, like we mentioned. that is leading losses. So Masgao Dock, BEL, all of those counters down anywhere between 4.5% to 5% thereabout. And you do have on the flip side the realty pack, pharma as well as metal holding on to a little bit of resilience. But like I mentioned, let's take a look at the top losers from within the Nifty 50 pack. So it's BEL that makes it to that list, down about 2%, Axis Bank, Eternal, TCS as well as on the back foot. And other than that, let's also take a quick look at the list of gainers as well, because you have Geo Financial Services, Bharti Airtel, JSW Steel, as well as Coal India. Those are some of the counters that are in focus. But tell you what, let's take a very closer look at Varun Beverages. They've come out with their earnings for the second quarter. In fact, Mahima is joining in with just that update.
So, it's a muted set of numbers. Overall revenue has seen a downtick of around 2% and this is because summers were shorter this time because of unseasonal monsoons, and that is the reason that has, overall impacted the top line at around 7,000 odd crores. In terms of the EBITDA, the growth is, it's almost flat. It's hardly 0.4% up to that almost 2,000 crore mark. Margins have slightly improved. I'll tell you the reasons as to why margins have improved, a couple of points there. In terms of margins, they've improved to 28.5% versus that of 27.7%. Net profit has seen a growth of around 5%. Now, in terms of what has aided the overall bottom line, there's other income which has gone up quite significantly. It's gone up, it's almost doubled in terms of where it stands. In terms of the overall expenses also, the other income that I was talking about from, around a 444 odd crores to around 77 odd crores. The cost of raw materials has seen, it's almost flat, but overall the finance cost has gone down. So that's a significant one because they've paid off their debt, and it seems that they paid off further debt in this quarter as well. Changes of inventory, not much change there. Depreciation has inched up, and this is because of the kind of capex that the company is doing. Other expenses has come down, and this is something that has overall aided the margins as well as the bottom line, because that's come down from 1,440 odd crores to around 1,270 odd crores, and that's something that's probably worked for the bottom line. But overall, stock not doing much. If we can try to pull up the stock, it's been hovering around that 0.4, 0.7 to negative 0.6% mark. Was in green, did dip slightly into the red, but has come back to the green, but almost flat in trade as we speak.
Well, absolutely, not much of a reaction as far as the stock at least is concerned. But tell you what, let's also take a closer look at TCS on that note. Let's move on from this one. Take a look at TCS, because that's the one where you have more trouble brewing as far as TCS employees are concerned. We now have media reports as well that are indicating that the recently hired employees are facing delays in onboarding as well. Puneet is joining in with more details on that one.
Well, essentially, there is an absence of growth, and that's clearly indicating from the multiple developments happening in the last 2 days. So, as you rightly said, there's a freeze now in hiring of experienced personnel, and a pause on annual salary increases globally as well. It's something that TCS had said at the end of Q4 that they will be delaying the wage hikes, which generally happen between April to June of every year. Now, that is also under pressure and could be a contention of how long would that delay happen, because while delays have been a key aspect of Infosys and Wipro in the past as well, this is the first time for TCS to do that. The other aspect which analysts are also mentioning is that TCS's move may be adopted by the other companies and increase the headwinds in the sector. That was the key update. The other one is the onboarding delays for those with experience is now exceeding 65 days for TCS. This generally happens between 35 to 40 days. So we've already seen a delay there, and it goes back to what happened during the pandemic, sometime around 2022, when excess hiring was done and people were given offer letters, but they weren't onboarded, and we seem to be going back to that time now because of the absence of growth. Finally, we've seen a multiple updates coming in from brokerages as well. Jefferies had mentioned yesterday that it's a canary in a coal mine, which essentially indicates that we could see some pressure on the other large cap players, and hence we're seeing the pressure on stocks like Wipro as well as Infosys majorly over the last 2 days, probably anticipating a similar move from those companies as well.
Well, absolutely. Thanks, Puneet, for getting us that roundup. As far as TCS is concerned, so even the note coming in from Jefferies also highlights some of the weak demand environment for the sector, the headwinds that we're talking about. But let's also take a look at Tata Chemicals, because on the flip side, you have that particular counter soaring in trade upwards of about 7%. At this point in time, on the back of a Morgan Stanley note, they've upgraded the counter to an overweight rating from an underweight rating. They've also hiked the target price to over 1,000 rupees. In fact, Varsha is standing by with the key takeaways.
The reasons why they've given overweight or they've upgraded to overweight from underweight is now they believe that the earning trough is behind them, and because Tata Chemicals have expanded capacities in India, and now they're going to see the higher volumes on the back of the expanded capacities. Also, they are also seeing turnaround when it comes to their UK operations, which was evidence in Q1. In fact, they closed one of their facilities in UK, which actually helped Tata Chemicals earnings for Q1, and they're also seeing stronger contribution when it comes to rallies as the global agri cycle normalizes. Now, in fact, over in the agrochemical space now, you will see the increase in the volume growth, though there are some pricing pressures still persist, but the volume growth has been increasing across all the agrochemical companies, and that is true for Rallis as well, and that's one of the reasons why Rallis numbers were good on the back of higher volumes that the company has seen, which will benefit Tata Chemicals as well. And they say that the peak capex for Tata Chemicals is now behind, and China soda ash prices are near cycle troughs, and even management told us that now the China soda ash
अड्डों को चूर चूर करने का काम किया। वो घटना पर जो बहस हो रही है, इसमें हिस्सा लेने के लिए मैं खड़ा हुआ। माननीय अध्यक्ष जी, सबसे पहले पहलगांव में जो नृशंस हत्या की गई निर्दोष नागरिकों की, धर्म पूछकर उनको मारा गया, इनके परिवार के सामने मारा गया और बड़ी बर्बरता के साथ ये हत्याएं की गई। इसकी मैं घोर निंदा करता हूं और जो मारे गए हैं इनके परिजनों के साथ अत्यंत हृदय की गहराइयों से मैं संवेदना भी व्यक्त करना चाहता हूं। ऑपरेशन सिंदूर के जवाब में पाकिस्तान के हमारे नागरिक ठिकानों पर गोलीबारी की, इसमें भी कुछ नागरिक हताहत हुए। गुरुद्वारा भी टूटा, मंदिर भी टूटा। जो भी नागरिक उसमें घायल हुए हैं और जो हताहत हुए हैं, वो सभी के प्रति मैं पूरे सदन की ओर से गहरी संवेदना व्यक्त करना चाहता हूं। माननीय अध्यक्ष जी, कल से यहां पर पक्ष और विपक्ष दोनों की चर्चा चल रही है और स्वाभाविक है, जब इस तरह की नृशंस घटना घटे देश में, तब इस पर मुक्त चर्चा भी होनी चाहिए, चिंतन भी होना चाहिए। आगे न हो इसकी व्यवस्था की भी चिंता होनी चाहिए। माननीय अध्यक्ष जी, मैं विषय पर आने से पहले आपके माध्यम से सदन को और सदन के माध्यम से पूरे देश को ऑपरेशन महादेव जो कल एक हुआ है, इसकी जानकारी देना चाहता हूं। माननीय अध्यक्ष जी, कल ऑपरेशन महादेव में सुलेमान उर्फे फैजल जट, अफगान और जिब्रान, 3 आतंकवादी सेना, सीआरपीएफ और जम्मू कश्मीर पुलिस के संयुक्त अभियान में ऑपरेशन महादेव में मारे गए। और माननीय अध्यक्ष जी, ये जो सुलेमान है, ए श्रेणी का लश्कर तोयबा का कमांडर था। पहलगाम हमले में और गगनगिर आतंकी हमले में वो लिप्त था। इसके ढेर सारे सबूत हमारी एजेंसियों के पास है। अफगान ए श्रेणी का लश्कर ए तैयबा का आतंकवादी था और जिब्रान भी ए ग्रेड आतंकवादी था। और माननीय अध्यक्ष जी, मैं सदन को और सदन के माध्यम से पूरे देश को बताना चाहता हूं, जिन्होंने बैसरन घाटी में हमारे प्रवासियों को, नागरिकों को मारा था, ये तीनों आतंकवादी ये थे और तीनों मारे गए। और मान्यवर, मैं आज इस सदन के माध्यम से सेना के पैरा 4 सीआरपीएफ के सारे जवान जो अभियान में शामिल थे और जम्मू कश्मीर पुलिस के जो जवान थे, वो सभी को सदन और पूरे देश की ओर से बहुत बहुत साधुवाद देना चाहता हूं। माननीय अध्यक्ष जी, मैं इस ऑपरेशन महादेव के बारे में थोड़ा डिटेल में बताना चाहूंगा। ऑपरेशन महादेव की शुरुआत
Alright, and there you have it. That's the Home Minister talking about an important breakthrough for the Indian Army with Operation Mahadev, where 3 terrorists were in fact gunned down. But tell you what, let's shift focus then to Shriram Finance, because that's the one that is in the spotlight after the company reported its first quarter's numbers. Profitability largely in line with estimates. In fact, we have Vishwanath, who's in conversation with Umesh Revankar, who's the executive VC at Shriram Finance. Let's go across and listen in.
That to kick off from the budget, that is February. It was picking up, but early onset of monsoon, I believe, postponed it. Okay. So post August 15th, typically that's a time where infrastructure spent or infrastructure projects kick off and start. That should give additional pickup for the credit demand. And that should help us, because one is the rural being good, rural demand is likely to be better in the second half. The other one is this infra, because once the infra projects come in, big scale, the steel, cement, all infra-related demand goes up. So you need bigger vehicles, you need construction vehicles and equipments. There are so many demand, the secondary demand come into the picture. I feel if all things come together and kick off, then we should be able to reach by this year end.
Okay. Quick question around the combination or the constitution of your loan book at this point in time, right? Specifically around gold loans. There, you've seen a degrowth. Now, this was one of those businesses that was being heralded as the next big thing because it's secured, but it's also easy access to cash, good for the lender. Has there been a change in that thought process for you?
Yes, I do believe gold loan can become a larger part of our overall book. We have drawn certain certain plans to make it big, and that's falling in line. Last 3 months, our disbursements were very high. In fact, we have grown disbursement by 20% year on year. But portfolio have not grown because some higher maturity, because it's a short-term maturity. 3 to 6 months is the maturity of the gold loan. So there was some higher maturity. I think we will be able to grow 20% year on year by the end of this year. So we do have a big plan for gold loan. And as we increase the reach, because gold loan is basically reach. You need to be near to the customer. And we have sufficient number of large customers, in the sense large number of customers who are taking gold loan from the outside. Correct. That's what, when we looked into their credit history, credit record, through all the bureau records, we do realize and recognize that our customers do take gold loan from the other players in the market. And there will be a large number of people who will be taking from unorganized sector, which that may not be reflected in the bureau records. So we would like to address that and probably help the customers to walk into the Shriram rather than going to the unorganized market. And probably benefit out of it. So that's going to benefit the customer. And gold loans are typically short-term working capital loan, which is the easiest part or the cheapest part of working capital for our kind of customers.
Okay. Coming to the asset quality picture now, of course, your gross NPA or the stage 3 has actually been relatively okay. But stage 2, that has shown an uptick. And alongside you, retail commercial vehicles for banks have also started showing higher delinquencies, higher slippages. Are you seeing any pressure building up for the future at all?
I don't really see that because we have seen these cycles going up and down. And since we lend to mostly assets, that is earning assets, we can always take back the asset. And so we are moving from stage 1 to stage 2 doesn't really bother us much. It is a temporary cash flow mismatch. And I do attribute this to early onset of monsoon at the end of June because normally the rain comes post June 15th in many part of the country. This time it has come in the last week of May. That would have been unsettled some of the transactions or some of the activities. And that would have created a little higher delinquency, stage 1 to stage 2. I don't read anything. And most important thing is we all lend to individual retail customer whom we are in touch with.
Correct.
We don't outsource our what call sourcing of business. We don't outsource the collection. We don't outsource even the if at all we need to take back the asset. We normally do it in house. So we are quite confident that our business is very stable and our customers are quite comfortable with the environment. I have not really seen stress. And I did mention to you that in the Q3 last year, we did see certain stresses building up in certain rural area. That is addressed now.
Okay. So a lot of people tend to look at Shriram Finance as a proxy for the rural economy. And if the rural economy is doing better, Shriram Finance is doing better, that sort of bodes well for the broader sort of economic momentum for India. I wanted to get your sense as to, is that the sense that you're getting when you're looking at the rural economy? Is there a general sense of optimism, of growth that you're seeing amongst your customer base?
Yes, largely yes. When I say rural, I covered semi-urban also because semi-urban and rural, not big difference in their behavior. Most of their income comes out of the agri economy. Okay. So I do really see this because what happened is even if you take beyond the grains cultivation, you take a plantations like a rubber, coffee, cashew. These are all cash spices. They are all doing well. And they are able to export. So India's exportability has gone up significantly.
Right.
And coffee, especially the other major producer is Brazil. They are having a challenge of, I think it is mostly drought there and they have a problem. So most of the produce which India can produce additionally, I think it has a good international market. That is also a big plus for earning additional income for the agriculturists.
Right.
So generally, I think the environment is quite positive.
Okay. I'll come to the operational metrics a little bit on specifically around the cost of funds because that's slightly still elevated and the rate cut will sort of slowly come into the picture and it'll start benefiting you. But what is the outlook looking like? At what point do you come down from the 8.8 to say 8.3? Because the 50 basis points will come in for you.
Yeah, I see in the book we have improved from 8.96 to 8.85 in the last quarter. And gradually, at that rate, maybe around 10 basis points per quarter, there should be improvement because incremental cost of borrowing is 8.34 now. And we also have cut the deposit rate by 40 basis points from the first week of August. I think gradually it will fall in. Every quarter, if I see a 10 to 15 basis point cost decrease, that will get added to the net interest margin to some extent. So that should help us. 15% of our total borrowing is floating. 85% is fixed.
Okay.
So the 15% benefit will accrue faster because banks will pass on to us.
Correct.
Maybe a month or 2 or 3. But when the 85%, it takes time because
you'll have to replace the borrowings. Yeah.
So it takes around 18 months time to do that full cycle. Hopefully the rate cut keep happening and also maintain at this level. In between there can be some event and rate cut can stop and it can go up. We do not know.
We don't know at this point in time. But generally, are you expecting more easing from the regulator?
I think so, because see, inflation threw up very surprising numbers, because 2.1 is something unheard in the last 6 to 7 years, and that's really helped, because on average we expected, and the central bank, RBI is always talking about 4% as a benchmark or the comfort line. So anything below 4 should give comfort to the RBI. Maybe there will be more to pass on. And liquidity, I think, is a one-time event and it already been announced. I don't think that there will be further announcement on the CRR done. But as far as the rate is concerned, there is a scope as long as inflation is under control.
But isn't inflation falling also a problem for your customer base, who wouldn't be able to have that much of a pricing power, who then won't be able to pay you?
Agriculture commodity, because of MSP, they are assured of certain rates. But there is an advantage here, because inflation bites rural much more than the urban.
Correct.
Because inflation travels to rural. In the past, inflation never used to go to the rural. Today, it passes on immediately, because everybody is consumer of the producers. Like even soap, shampoo, all those things, they are all consumed by the rural area now. So it travels. So I think they are having a little surplus today than what they have maybe a year back or 2 years back. So that surplus is the additional money, what the rural people can invest, spend, consume.
Okay. One question around the margin situation, because 10,000 crore excess liquidity that you're carrying on your book, that is bringing down the margin at this point in time. Are you confident of Q4 it's sort of normalizing this 10,000 crore?
Yes. Okay. As I was telling you, I'm hoping for the infra, what you call spend, that is going to create additional demand. So Q2, Q3, Q4, we should be able to consume. I think by Q3, we should be able to consume that additional liquidity. Then Q4 should be a normal quarter.
All right, and that's the word coming in from the management at Shriram Finance, talking to us about the outlook for financial year 26, as well as telling us a little more about the rural economy, as well as what they expect going forward as well, because that's what they're talking about in terms of the stress that they've seen in the third quarter as well. But that's all the time that we have on the show. Thank you so much for tuning in.
That's huge. That is a biggie. It's on.
Gold Plus Clear Glass. Far हो या near, सब कुछ दिखे clear.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
Hello and welcome to NDTV Profit. A very good afternoon to all the viewers here watching Profit Buzzers. I'm Hiral Datia. With me is Puneet Javeri, and we have Varsha as well, who's in the studio to take the discussion forward with regards to Waaree Energies on the back of earnings. But let's quickly take a look at what markets are doing at this hour. If you pull up Nifty 50 on the screens, the kind of gains that we were seeing, again, it has cooled off right now, but from the day's lowest levels, the recovery has come. And what's interesting is that we're still hovering around the 24,700 mark. Yesterday, those were the kind of levels that we hit in intraday's session. Apart from that, if you see in terms of Bank Nifty as well and the sectoral heat map, it's defense which is on the lackluster side, 0.1% lower in terms of Bank Nifty as well. What's gaining is Nifty real estate. So after those 2 consecutive sessions of declines, that's Friday and Monday, you're seeing some buying interest that's coming in with regards to real estate. Pharma and healthcare is doing pretty well. Infra is up in trade. Metal, energy, oil and gas, auto, all seeing gains upwards of 0.3%. Defense is the one which is down almost 1.3% in trade, and this is mainly on the way the earnings have panned out. Nifty IT has been trading under pressure as well. Consumer durables is down in trade, as well as the private banking space, which has been trading under pressure. Very quickly, if we can just get a heat map of Nifty 50 as well to understand what's happening on that front, that is going to be interesting as well to see. Geo Financial Services, the top gainer. JSW Steel is another one. Bharti Airtel, Coal India, a few of the gainers in trade today. Axis Bank losing out. BEL reacting to numbers. Eternal trading under pressure as well. So that's what the heat map is looking like in terms of Nifty 50. But it's time for an NDTV Profit exclusive. With the tax filing deadline approaching, authorities have launched a major crackdown on bogus exemptions and deduction claims. My colleague Shrimi, who broke the story, tells us more. Shrimi, what are you picking up?
Yeah, hi, Hiral. So, in a strongly worded directive, the Central Board of Direct Taxes has instructed tax investigating officers across India to identify and act against taxpayers suspected of misreporting income or claiming fictitious deductions. So this directive calls for an immediate preparation for a list of taxpayers who have filed returns with bogus claims, both on deduction and exemption. And in such cases, the Income Tax Department is instructed to kind of halt the processing of those returns until the investigation are concluded. So this is huge because they are going to suspend your return filing if there are evidences of bogus claim. Now, in instances where, returns have already been processed and refunds disbursed, the department has been asked to initiate recovery proceedings, and the move is, aimed at preventing revenue loss and deterring taxpayers from attempting to exploit the loopholes. Official also tells NDTV Profit that this action comes in the response to a noticeable surge in suspicious exemption and deduction claim filed this season, and sources now indicating that several such cases under scrutiny involving misuse of lesser known sections and inflated deduction figures without adequate documentation. So this is the part of the nationwide crackdown, which is expected to plug the revenue leakage and send a strong message ahead of the tax filing deadline.
That's an interesting story. Thank you, Shrimi, for that. And, as Shrimi was mentioning, if refunds that have already been issued as well, recovery action will follow. So absolute cleanup drive that the tax department, that the government is undertaking as well. And this is absolutely for the good, because anything that has been with regards to bogus deductions, those are the loopholes that will be filled in from here on. But moving on, Waaree Energies is the stock to focus on in today's session as well on the back of the earnings. Or if you see in terms of what's happened this time around, a strong set of numbers that has been reported. And this is, again, in consonance to the ramp up that they've seen in terms of production as well. The stock seeing gains of upwards of around 3%. Amit Baithankar, CEO and whole-time director at Waaree Energies, joins in. Amit, good afternoon and welcome to the show, and always a pleasure to speak to you at NDTV Profit. A strong set of numbers, so congratulations on that front. If you could help us understand what has worked this time around for this set of numbers, and are you expecting this growth trajectory to continue for the coming quarters as well?
Sure. Well, thank you very much for having me. It's always a pleasure to be on NDTV Profit. Yes, a good set of numbers. We do expect that to continue, and I'll deconstruct why or where does the confidence stem from. As an organization, we are actually concentrating on three pillars: sales, production, and projects. So from a sales perspective, if you look at our order book, it's very strong. It stands at 49,000 crores, 25 gigawatts. And we see a pipeline of 100 gigawatts ahead of us. And so from a demand perspective, it's very strong. Also, last quarter, we got 2.23 gigawatts of order from the US, clearly showing that US is continuing to be extremely buoyant as we expect it to be. Production perspective, we have had the highest quarter for us at 2.3 gigawatts. It's a quarter where we have broken all our previous records without really any major capacity addition at this point in time. Of course, a lot of capacity is being added, which brings me to the last point, which is projects. And so we have several projects where we are building new capacities. For example, our 10 gigawatts of solar cell factories coming up at Und, which is in Gujarat, a 10 gigawatts ingots and wafers factory, which is coming up in Butiburi in Maharashtra, and several others. So all of these projects are well on the way and are being commissioned at the right period of time. And so therefore, this is a three-pronged strategy that we have, and that's what is bringing success to us. And I think in the long run, this is what is going to yield success.
Right. Well, hi Amit, Varsha this side, pleasure to have you. Amit, you have highlighted an order book, robust order book, I must say, of 49,000 crore. Just wanted to ask, what is the expected revenue recognition timeline from this order book that you're expecting?
Right. So, there are three broad segments in that 49,000 crores, right? There is a US segment, which is of utility markets. And then there is India. And of course, retail is a very small part, but that's, it keeps in and so book to ship timelines for the retail orders are very, very short. The India orders typically are fulfilled within 8 months to, I would say, one year, 2 months or something of that sort, right? And the US orders are a little long term. I would say anywhere between 1.5 years to 2.5 years. So that's the sort of revenue recognition period that we are talking about.
I understand that you have a decent order book in hand that is, going to be executed in FY26 and 27 as well. But wanted to understand from you, what kind of order inflows, are you expecting from India as well as US? Are you facing any, challenges in terms of new orders that will contribute, let's say, from FY27 onwards, or, order inflow is still going to be the decent one that you were expecting?
It's a great question, Varsha. I would like to say that, the two markets that we operate in, US and India primarily, are very secular in their demand. The energy demand from both of these markets is because of some very fundamental reasons. In India, of course, a growing economy, GDP continuously on the rise, and of course, new industries coming up. So there is a broad-based reason why, we have a voracious appetite for energy. In the US, there are three reasons, I would say, primarily. There are several more, but three primary reasons is artificial intelligence and the data centers that go along with it. There is also reshoring of jobs or manufacturing jobs, which would mean that there is a manufacturing ecosystem that is coming up in the US, and also electrification of transportation. So all of that taken together, for both the key markets that we operate in, the demand is really very, very secular. And so that will keep propelling a strong demand, which will obviously translate into a strong order book as we are evincing from quarter to quarter.
Amit, interesting point that you made about the markets that you operate in. US, I think 15 to 20% kind of exposure is what you have on an overall basis. The US policy uncertainty, how are you looking at that aspect from here on? Because clearly, we did see questions arise in terms of what should the taxation be, what should the tariffs be in terms of Indian solar imports. How are you looking at that aspect? Because we are pretty much around the corner right now. Tariffs could be announced soon as well.
Right. I'm just trying to paraphrase your question because there's slight problem with the connectivity here. But what I understand you're asking is, in face of the policy uncertainty, what's our outlook of the US market and how do we navigate it?
Right. Correct.
Perfect. So the key way in which we look at the US is, of course, a very, very important market for us. And the best antidote for policy uncertainty is making sure that our strategy takes care of it. And the primary element of that is the global footprint. So we have a very strong manufacturing base in the US, which is only growing. We are almost doubling our manufacturing capacity in the US here in the next few months. And depending on the way in which the policies develop or evolve, we can actually dial up our manufacturing in the US or take any other measures, even in India, from a supply perspective. We are also closely observing the BTA that is being negotiated between India and the US. And so based on all of the manner in which this evolves, we will decide, what should the manufacturing footprint be. The important part is in the US, be local, be manufacturers in the US, and make sure that you take care of certain amount of policy uncertainty that is thrown open because of the changes that are going to happen.
Amit, does this mean that because you would be locally manufacturing with the existing footprint and the addition that you're going to do, the impact will be absolutely zero even if tariffs are allocated to the segment?
So that will certainly be our approach to the problem. I try to negate it to the extent possible. But depending on finally what the numbers come out in terms of tariffs, in terms of now from an ADD perspective, we like I said, having a footprint on the US side of the equation really helps us in anti-dumping investigations as well. And to top it, we are an Indian company listed on the stock markets with strong profitability requirements out of us from our investors. And so it's a very transparent P&L that we have, which is auditable. So from an anti-dumping perspective, we don't really have any predatory pricing, and that's quite evident. So we should be, in a good position to defend that. But we'll see how does it all evolve. So you're right. Our intention will be definitely to try to keep any changes that happen in the policy landscape impacting us to the minimum.
Okay. And Amit, with regards to the EBITDA target for FY26, you're looking at around 5,500 to 6,000 odd crores. Now, taking that aspect into consideration, and if you have to look at the global markets from a supply perspective, your PV module prices have been slightly on a declining trend. So how are you looking at that aspect? Because there is overcapacity globally.
Right. So our order book, and I think Varsha asked this question earlier, is already set for the year. We are completely set, right? So we have the pricing already baked in. The whole P&L is set. And so therefore, our confidence on the 5,500 to 6,000 crores of EBITDA is very, very strong.
Amit, also, beyond modules and cells, Awari is also investing when it comes to, green hydrogen or your battery energy storage system. What is the long-term vision, for these new segments?
So we would like to be a global energy transition company, a company which helps all of our customers, governments all over the world to move towards a world which is cleaner and greener from an energy perspective. And therefore, we will be putting in place all the necessary parts and pieces that are required to move in that direction. You talked about electrolyzers, that's a part of it. Battery storage is going to be extremely important to stabilize the grid as more and more renewables get onto the grid. So that's also a very important part of our strategy. We are coming up with a 3.5 gigawatt hour factory in Gujarat, and that should be also online by 2027. We are getting into inverters and several other components that are required in the whole energy transition ecosystem.
Amit, a very good afternoon to you. Thanks so much for joining in. It's Puneet this side. Just one question on green hydrogen as a follow-up. You mentioned that you want to address this space as well. But for India, how long do you think the transition happens from grey hydrogen towards green hydrogen? And how do you see Waaree being one of the key beneficiaries of this transition?
So, a hydrogen market is actually at its infancy, and it has to develop. So it has to develop from a policy perspective. It has to develop from the perspective of even the customers' demand. So all of these aspects are evolving, and they are evolving in the right direction. And so I would say in the next 2 to 3 years' time, hydrogen will become an important component of decarbonizing hard-to-abate sectors.
Right. Amit, a quick question in terms of the solar cell ALMM, the new clarification that has come in, which will be mandatory from the 1st of June 2028. And for government projects, it becomes mandatory 1 month after the list is published. How does this really change any dynamics from an industry perspective? What would this mean for the sector?
So, any policy clarity always helps the sector, right? So MNRE has clarified that from 1st of June 2026, ALMM will be necessary. And also the cells, ALMM for cells comes into the ambit. So that's extremely encouraging. And I think it'll over the industry. What will also really help the industry is continuation of that policy. And no major changes based on what has already been announced.
Amit, thanks so much for joining in, giving us perspective about Waaree as well as the future for you. We look forward to our next conversation, but thanks so much for joining us today.
Thank you very much, Puneet, Varsha, and everybody. Once again, appreciate the chance, and thanks a lot for having me here.
No, appreciate you giving us the chance to speak to you as well. Thanks so much. Well, let's also quickly pull up a Happiest Minds as well, because, the results came in just during the conversation. And while the stock is, on a tear, the results not much to speak about. There is an exceptional item which was there in the same time last year, which was a 12 crore impact. And hence you're seeing a 68% jump in its profits. But in terms of numbers, the fundamental operational numbers don't seem to be that great. And that's in line with what the revenue was anticipating. Revenue was up only 1%, while the EBIT has grown because of this key aspect of a one-time exceptional item that was there in the same time last year. And hence we're seeing those EBIT margins rise as well. But largely, we'll have to look at the management and what comments they have in terms of the business performance impact because of tariffs amongst other reasons. But it'll be something to watch out for as we get into the fundamental segmental performance of Happiest Minds as well. But let me go across to Prashant Tapse, who's joining us now, Senior VP Research Analyst at Mehta Equities. Prashant, a very good afternoon to you. Thanks so much for joining in and patiently staying by. Let me first actually get your view on Waaree Energies, because it's a counter that's done very well for its investors. Do you have any view on the same?
Yes, very positive. I think one should focus more on the solar as a sector where government has a lot of support with respect to the PLI schemes and a lot of schemes which are supporting this kind of manufacturers. Again, I like the company's exposure to the US market. I think the way they are planning to have an approach of manufacturing in US, that will obviously set off some kind of risk which other players are looking when it comes to tariff war. So that way, again, my focus would be more on the EBITDA margins, where YOY I have seen 16% from 16% to 23%, a great move on the EBITDA margins, which is really giving some kind of comfort level for a fundamental analyst to have a very positive outlook on the Waaree Energy. Very positive on the outlook what management has said just 2 minutes back with respect to their EBITDA margins, where they are expecting still there is a good room to grow from 23% to 25%, and the overall outlook for the year is really optimistic. So very positive on that, even comfort level with respect to the valuations concerns.
Got that, Amit. But Let me also go back to Varsha on a couple of stocks that are really buzzing in trade today. Torrent Pharma as well as something like a Paradigm Phosphates as well. Varsha, what's triggering the positive move on these stocks?
So let me start with Torrent Pharma. You know, the stock is buzzing on the back of Q1 numbers. I would say inline kind of numbers that the company has seen. If you see there was a strong performance when it comes to branded markets. India revenue, if you see, were up 11%, which was led by outperformance in focused therapies, while Brazil revenues were up 11%. Germany's revenue, though up 9%, but this was impacted due to supply disruption, and company remains subdued may remain subdued for next couple of quarters. But a good growth when it comes to US business, which was up 19%. Next on the list is Paradeep Phosphates. Now very strong set of numbers that the company has seen, and one of the reasons is the increase in the DAP prices. So Paradeep is one of the largest producer of DAP, and we have seen the increase in the DAP prices, which has led to increase in the revenues itself. And also, if you see, other income and lower tax have aided net profit, and the EBITDA margin expansion that you're seeing is led by operating leverage, because there's not much increase in the cost of goods sold or in the fixed cost, and your revenue has increased drastically, and no increase in cost, which has led to the operating leverage, and that's the reason you're seeing the huge EBITDA margin impact. So onto the numbers, if I were to talk about, revenues were up 57%, while margins were at 12.4% versus 6% last year. So good set of numbers when it comes to Paradeep.
And with that, I want to mark a Zuari Agro as well, because they're looking to invest almost 180 crores in a JV, which is Zuari Marok Phosphates, and this has something to do with Paradeep as well. That stock is up nearly 12%. Prashant, how would you look at this space? Zuari Agro, Paradeep Phosphates, and you have a Torrent Pharma and Ajanta Pharma on the back of earnings.
I think Paradeep should be the focus stock today, as well as in the history also. The way how they have turned around their EBITDA margin from 6% to 12%, that is really a commendable job the management has done. Obviously, industry has helped them to get this kind of margins. Again, I think the outlook will remain very positive going forward. At least 15 to 20% YOY growth can be expected still in the top line, as well as the margins can be sustainable between 12 to 15% going forward. On the valuation point, again, I think they're very comfortable to have a positive outlook on the current levels as a long-term investor.
A positive view coming in on a Paradeep Phosphates as well. Thank you, Varsha. Thank you for joining us to get us through all these numbers. But we'll quickly slip into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बार खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the
Welcome back. You're watching Profit Buzzers on NDTV Profit. Let's quickly look at a Kolte Patil. Numbers have just come in. This has been under pressure right now. EBITDA loss of around 26 odd crores is what you're picking up right now. And the stock has actually seen a major downtick. It's actually nosedived right now. If we can just get the other numbers as well, because I'm just seeing the net loss number. A 17 crore net loss versus a profit of around 6 crores is what the company had reported. Revenues have also slumped to the tune of almost around 75 to 76%, and this is an interesting one to watch out for in terms of Kolte Patil. They have been looking at Mumbai as well as a development destination, but majorly, I mean, not a major, MMR is not a major market, but an EBITDA loss of around 26 crores versus a profit of around 27, 28 odd crores is what you're looking at. On the back of which, the stock nosedives, 5.5-6% downtick coming in there. Adani Power is another one that we should be addressing on the back of the stock split that they are announcing right now. If we can just have those flashes as well, be interesting. That stock is spiked on the back of the news with regards to the stock split. The stock at the day's highest levels with gains of 2% coming in there. The board will be considering the stock split on the 1st of August. That's the latest that you're picking up on this front. In fact, let me go across.
Sorry to interrupt. Kolte Patil as well. The operational update was very weak in quarter one. Value was just about 616 crores versus 711 crores in the same time last year. So it was a 13% fall, and this operation update came about a week ago. So some kind of view had started to pencil in of a weak quarter one for Kolte Patil. In terms of volumes as well, it was down about 13%. So largely some kind of indication in terms of operation update.
But still, if you see the stock it's actually nosediving.
I don't think it was
if we can probably just get a one-month chart of Kolte Patil, because that will give you an idea as to how the street was looking at the stock as well. If we can just get a one-month chart of Kolte Patil, real estate, and because of the last two trading sessions was under pressure. Today there is some recovery coming in there. There you go. Absolutely from what Puneet is saying as well, 9% is the kind of downtick that you're already seeing in the last 1 month. It's actually near a 1 month low, if you have to say it so. Prashant, how would you look at a Kolte Patil number? Because the anticipation was that, yes, it will be a weak quarter. The weakness has come in. The company has reported a loss this time around. What would you advise investors to do?
I think the numbers were really surprising, despite knowing some kind of weakness in the quarter-on-quarter updates, where we have seen every month there is some kind of business update which was very weak. But again, a company going into a loss from a profit standpoint, I think that is a surprise for the market, and I think even some kind of pressure seeing on the back of recent performance. If you see, even June there was an all-time high of almost 458 rupees. So I think on the hopes of better than expected numbers, the numbers were really bad, and that was surprised to see a 5% cut. So overall, the negative outlook will continue.
Negative outlook continues on the Kolte Patil. And Vinay, how are you looking at Adani Power? Stock split that could be looked at on the 1st of August, your view?
Yeah, so stock has corrected from the higher level, and it is trying to take a support around its 50 and 200 days exponential moving average. So 50 days average is at 574 and 200 days moving average is somewhere around 560. So after these are the crucial moving averages for the overall trend to remain strong. So it is acting as a support, and the yesterday's low is also an important support, because yesterday we saw a doji candlestick pattern that was a reversal sign, first reversal sign near the support. So yes, I would suggest that if somebody is holding a long position, then 557, which is the 200 days EML level, that should be kept as a stop loss in trading long position. So overall, it has been a gradually improving on the charts, so not that much negative, and we can expect some positive trend from here. So 557 should be the stop loss in long positions.
So that's with regards to Adani Power. But let's look at the financial side of business now. IndusInd Bank, let's pull up that one on the screens, because the stock did open higher with gains of nearly 1.5%, and now you're seeing that stock down almost 1%. Bernstein has maintained an outperform. They have a target price of 1,000 on the counter. Citi has maintained a sell. They have a target price of 765. Morgan Stanley, an underweight with a target price of 750. And a Macquarie, which has maintained an underperform, and they have a target price of 650. So that's the lowest one that you're taking from the 4 brokerages that we're covering right now. Clearly, the upcoming trigger will be the CEO announcement and the strategic roadmap from here on for IndusInd Bank, and that's what the street is eyeing as well. Very quickly, if I have to look at IndusInd, Prashant, your view, what would you advise investors to do? Do you think at levels of 800 it becomes a good buy, taking into consideration the fundamental aspect from here on that the cleanup is done? Or would you say it's still a wait and watch?
I think I'll be having a wait and watch approach until unless we get a clear picture from the management side where the new CEO as well as the roadmap for next 1 year. So it will take its own time to get a new management and then take charge and start doing good things in the banking system. But again, I would like to see some kind of good dips anywhere between 700 levels, so that can give me some kind of comfort levels when I see the book value, which is almost near to only 820 rupees. So a good discounted to its book value can be a great opportunity for long-term investors to buy. But again, every dip can be an opportunity.
Fair point, Prashant. But a couple of other stocks from the banking and financial space, Go Digit, as well as Fedbank Financial Services are in focus post their Q1 earnings. Stocks, both of them reacting very well in the street today. Let's get in Harsh to give us more what's working for both of these. Harsh.
Well, with regard to Go Digit, the numbers were solid. You saw 59% growth on the profit before tax number, the more relevant metric, largely because the tax impact has come in Q1 FY26 versus Q1 FY25. So PBT, the more relevant metric there. In terms of the claims ratio, it's come off. So that's one positive. On a sequential basis, we're seeing the claims ratio fall, which is one of the other positives which the market is picking up. The other one is the combined. While on a YOY basis, the combined has spiked. That's the only likely negative. The combined on a QOQ basis has come down. The YOY spike is also to a certain extent attributed to expenses of management. Some control there may be required. That's the only possible negative. Where market share is concerned, they've gained market share across products. So that's the other key positive. So across the board, it looks like a good set with a couple of negatives as part of that set. So something to look out for where Go Digit is concerned. Where Fedbank is concerned, well, again, it's all about credit costs, right? So Fedbank is seeing a taper down with regard to credit costs. We saw a 20 basis point reduction on the credit cost number on a QOQ basis. 0.8% is where the credit cost number came in at. Mind you, credit cost is nothing but provisioning which has been done in this quarter. So that lower provisioning is actually aiding the numbers. Margins also seeing a bit of a shrink, but that has been brushed off by the street because we saw margins bump up as well in equal measure at the end of Q4. So margins coming off, not been taken as adversely, but just everyone has their eyes on that gross and net NPA number, which is absolutely flat sequentially. So all of those positives getting built in already in the stock price. Mind you, the book value today is at 71 rupees a share. So at 130 rupees after the 6% bump up as well, we're starting to see around 1.8% trailing 12 months price to book. Something to, of course, keep in mind. So broadly, that's on Fedbank and Go Digit.
Well, thanks so much for that, Harsh. And, Prashant, let me come to you on both these aspects, because while the insurance space has been doing well, Go Digit, a new listing, has been slightly impacted in numbers. What do you make of that as well? And what's your view on Fedbank as well? Because it's a stock which saw deep corrections going all the way to the 90 rupee mark and now seeing some kind of pullback from those levels. How do you view this one as well?
Yes, with respect to Go Digit, again, very positive to see such kind of numbers. If you see last 10 quarters, this is the first time they have done a very good numbers in terms of their operating margins, which is almost near 7%. Last quarter, there was some kind of loss. There was a negative 8% margin on the numbers. So financially, I think there is some kind of turnaround being seen in the insurance business. Even the claim ratios are coming down. So overall, the yield out of this company is getting positively very soon. So this even the performance have been very positive. So on the valuation side, still some kind of expensive considering the growth going forward on a quarter-on-quarter basis. So I would like to have a very wait and watch for this rally. Anywhere between 340 and 320 can be a range where Go Digit looks very good for me on a long-term basis. With respect to Fedbank, again, the stock has really done well. But again, I would like to wait and watch the way how the stock has rallied in last 1.5 months. So the business of gold is giving some kind of comfort level for them. But yes, margins have been very much slightly under pressure, which was expected in the industry also. But I think the correction can be expected going forward because again, the next quarter cannot be same as it was in the Q1.
Would you concur with the view on Fedbank? Because I mentioned it's recovered very well on a YOY basis, just a 5% returns that the stock has given. But do you see more legs on this rally? Vinay, can you hear me?
Yeah, I can hear you.
Go ahead.
Yeah, so basically the stock has risen a lot from the lower level. So 80 was the bottom in the April 2025. It has this month it has reached to 133. If I were to look at the chart, though the history is less, but if I were to look at the period which was there in the April 2024, it attempted a recovery from lower level at that time. So at that time from 109 it went up to 133.50. So that was a swing high. So from 133 it came down to 80 in 2025. So 133, 134 is a very strong resistance, is a swing high which was made in April 2024. So after rising this much, now stock has reached to the crucial resistance zone. We need to track this level closely, whether this 134 level is getting crossed or not on sustainable basis. Then only one should take a fresh bullish view. But till then we can take up a profit booking sign here, or otherwise we can do one thing, we can decide one trailing stop loss in this counter. So that would be the best strategy in this kind of market when trend is positive and stock has reached to the long-term resistance. So better to hold this stock with a trailing stop loss of 122 as of now, because 122 was the yesterday's low and should act as a strong support. So I would suggest hold with the trailing stop loss of 122.
So that's what Fed Bank. But moving on, Arvind, let's just pull up that one on the screens. The company has just reported numbers. A strong set. EBITDA has seen an uptick of nearly 18% on a consolidated basis. Let's look at the margin picture as well, an improvement as well. 8.8% versus a 8.2% is what you're seeing on a year-on-year basis. Profits have jumped around 35 to 36% this time around. That's with regards to where Arvind goes. A strong set of numbers that have been reported, on the back of which, if you see, the stock has seen a good spike as of now. There was no major expectation on this, but at least at the face of it, the numbers are looking absolutely strong. We just have the four numbers which are flashing at the bottom of your screens. Apart from that, Voltam Transformers also has reported numbers. 79 to 78 crores is what you're picking up. It's a flat number in terms of profitability with regards to a Voltam Transformers goes overall. So no major reaction there. In fact, the stock is now nosediving as we speak from the day's highest levels. Let's see where this comes in. No major other number coming in on a Voltam Transformers. But shifting focus, or let me actually take a question with Prashant and Arvind. Prashant, how are you looking at Arvind? A strong set of numbers, a good amount of margin expansion that you've seen as well. And the only overhang right now is with regards to what happens with the US in terms of tariffs. But what would your advice be for Arvind?
I think, yes, very decent positive numbers which have been delivered today. There was some kind of very much flat expectations. I think it has been better than expected numbers. So this stock is trading very positive. One good thing again in these markets, a improvement in the EBITDA has been rewarded by the price action in the positive side. Yes, the concern still remains. I think we are at the corner of the momentum with the tariff war. So textiles will remain on a very crucial watch list, but despite having a good deal with the UK as a country. But again, very positively, I think the overhang will go ahead very soon this weekend. And the stock is still showing some kind of strong strength in terms of their business economics. So the stock can do really well, and long term is very positive on that. Comfort level with respect to valuations also, I think a 20 forward P and a price to book valuation of 2 is very comfortable for textile companies to outperform well.
So that's with regards to Arvind. But shifting focus, defense stocks have been under pressure. And this is over the last couple of trading sessions since the time the numbers have been announced as well. And you can clearly see in terms of individual counters. Anushi is with us to tell us what's happening with the defense space, taking into consideration a weak set of numbers.
Hi, Hiral. So, as you can see right at the top of the screen, some of the key draggers that we are looking at for the defense names. Now, they are on the basis of the Q1 FY26 results reaction that we are looking at. First off, I'll start with Masgao Dock, which is the more recent name that we are looking at. Here, the main impact was on the margin front. If you are looking at provisions, higher provisions, this is something that we saw last quarter also playing into effect, has resulted in a margin contraction of almost from 11.5% compared to 27% last time, and this is on account of 2 of their contracts in which they had been incurring losses for which they have made these provisions that we are looking at. In fact, if you look at revenue also, that was up over 11%. Net profit, however, saw out 35% of an impact. Zen Technologies now is the other stock in focus. Now it has been locked in a lower circuit for the last 2 trading sessions after its Q1 results. Now here, if you are looking at now, overall commentary is remains important in terms of the order inflow side, which has been muted for the 5th quarter in a row, because of which we see this impact playing out. In fact, if you look at the revenue also, lower execution also impacted the revenue. Now that was down about 38%, EBITDA down about 42%, margins have slid to the level of 41% as compared to 44%, while net profit also saw about a similar kind of a dip that we are looking at. So it's the order inflows trajectory, especially after the government also announced emergency procurement. So Q2 is something that we'll await for in terms of sequential improvement on that basis. Bharat Electronics, despite posting an overall beat in terms of where the margins were concerned, it was revenue growth which was a miss. But if you look at the overall guidance given by the brokerages, and we'll wait for the management commentary also, that remains on healthier side. But the stock did take a beating as well in terms of where the ratings are concerned. Paris Defense also, post its Q1 result, it has been seeing some cuts in terms of where the numbers have come out.
So much for that one. Anushi, stay with us. We will come back to you for L&T, but before that, Puneet will take us through Amber as well. But very quickly, Prashant, a quick view in terms of defense companies taking the weakness that we've seen in the first quarter. Are you expecting this to continue, or will there be a turnaround?
I think yes, again, H1 will continue to have some kind of pressure in the EBITDA margins. That was a major concern in the sector as well, where we see some kind of execution risk from last 6 months. So that has been seen in the Q1 earnings. A pressure on the EBITDA margins will obviously continue in Q2 also. We can see some kind of normalization with respect to their EBITDA margins in the H2 segment. So overall, valuations are expensive. Numbers are not so matching with the earning growth. So there can be some kind of continuous pressure in the sector overall. So I think in this space, again, BL can be one stock one should look at on a long-term basis, but rest other stocks are still seeing some kind of good cuts in the price action.
Right. Vinay, very quickly, any technical play from the defense pack that you would recommend?
Yeah, so the one stock which has fallen a lot is the HAL, Hindustan Aeronautics Stores. Today it found support near its 200 days EMA, and hammer candlestick pattern is there. So around 44831 can look at it. Today's low should be the stop loss in trading long position. The 4400 is today's low. So one should have that stop loss and can have a positive view on that.
Got them. But just addressing the numbers on the bottom of the screen right now, Amber Enterprises has positively surprised on the profits, while there's been some blip in terms of the EBITDA margin. So the revenue is coming at 3,449 crores. This is a stellar number to say the least, because we were going with a number of 2,642 crores, and that's largely led by what the company has done essentially in this particular quarter because of the consumer division as well. So that is one of the other aspects as well. Now, apart from that, the margins are up to 31% at 257 crores. This brings the total absolute margins at 7.4%. Expectation was of 7.7%, but I think the street will react positively to these numbers, largely because of expectations of the consumer division not doing very well in this quarter, and that's largely led by the ECs for Amber Enterprises. Profit as well has come in at 104 crores versus expectation of 76 crores. So we're seeing that sharp up move on Amber as of now, and hence we're seeing that strong reaction as well. But the other one stock in the consumption space in focus is Varun Beverages. Now the numbers have come in just about a couple of hours ago. Let's get in my colleague Mahima to give us a breakdown of what worked for Varun Beverages in this particular quarter. Mahima.
Right. So I think overall it's been a flat set of numbers, flat quarter for Varun Beverages overall. They follow calendar years, so it's Q2 numbers for them. Revenues have been impacted by unseasonal monsoons and short summers, so that's a major overhang. In terms of volume growth, it's been good in international business, and that has kind of surged the uptick in terms of the overall volumes as well. EBITDA margins have improved on account of good operational efficiencies. Company is now almost debt free after paying the debt through its QIP. Net realization has also improved again on the back of the growth that the international business has seen. Now in terms of numbers, revenue down 2.5%, EBITDA down 0.4%, so almost flat there. Margins have improved at 28.5% versus that of 27.7%, and net profit saw a surge of around 5%. In terms of key operational metrics, overall volumes down 3%, but the street was expecting that it will be down by around 5%, so it's slightly better than what the street was expecting. India volumes declined by 7%, international volumes grew by 15%. Net realization per case improved by around 0.5%, largely and mainly because of the international business. Net realization was driven by the international business by around 6.6%. In terms of key developments, they've appointed Pankaj Madan as CFO with effect from 30th of July. They're set to incorporate a JV to manufacture refrigeration equipment, and the company has acquired 50% equity in Everest Industrials Lanka as well. Lastly, in terms of key development with respect to where the capex stands, commissioning of new production facilities at Prayagraj, Buxar, Damtal as well as Mindi Pathar has taken place, and Varun Beverages Morocco in South Africa has overall started commercial production of Cheetos as well. So this is the overall view of how earnings have panned out for Varun Beverages. I think the stock is seeing an uptake only because of the kind of volume that has come in. It's better than what the street was expecting, and that's why we're seeing the uptake in stock.
Gautam, Mahima, thanks so much for that. Prashant, I know very recent number reactions coming in on Amber as well as Varun Beverages. Do you see any kind of positive aspects from both these results?
I think considering these two, Varun Beverages can be a better stock. One should look at considering the better than expected numbers with respect to their volumes, as well as on the stock which has consolidated last few months. So the numbers are giving some kind of confidence. The worst is behind the stock in terms of margins as well as the growth. So I will choose Varun Beverages, one of the stock which can be a stock one can buy for a long term on the current levels. Even valuations are some kind of comfort, and Q1 earnings were a little bit giving comfort for a fundamental analyst to have an outlook on a positive way.
That's an interesting pick coming in there. But staying with the consumption pack, Asian Paints will be reporting numbers today. I think it's a no major surprise where the quarter is expected to be yet again muted. I think only a positive surprises that could come in. Mahima is with us to tell us more. Mahima, what are you picking up? Because it's going to be interesting in terms of how they're able to change strategy as well from here on the market share that they've been losing.
Right, so Hiral, I think this quarter also is set to be a disappointment for Asian Paints. It's going to be a muted quarter overall. And I mean, if we take a look at the overall estimates, revenue is expected to be flat, almost flat. EBITDA may fall around 2%. Net margins might slid a tad bit, and net profit may fall around 5%. In terms of what you can expect, overall urban demand continues to be under pressure, and because Asian Paints has its major presence in the tier 1 cities, it will be impacted the most amongst the paint companies. Margins under pressure because of inflation going up. There's price hikes which will kind of offset the inflationary pressure, but we'll have to see how that volume versus value growth has been like. Rising competition with peers has always been a problem in the paint space in the past few odd quarters, and that is something we'll have to watch out for as to how market share pans for Asian Paints as well. And it's expected that because urban demand is under pressure, it will kind of underperform its peers. Now, in terms of key monitorables, I think what I would want to know is how management uses the proceeds it's received from AkzoNobel's stake sale, and how that will be put to use, and overall demand outlook in price hikes picture and competition, of course.
So that's with regards to Asian Paints. We have Anushi who's also standing by. Anushi, L&T has already got a mega order today, plus the results are expected today. What are you expecting? Because the stock is at the day's highs ahead of the numbers.
It's a 15,000 crore of a plus order that we are looking at, and this is in the hydrocarbon business in Middle East that we are seeing. So of course, that is an important monitorable that we should be watching out for the results today on what the order prospect pipeline is from that division coming up. But basically, walking through the headline numbers, if we see the revenue is expected to see a 14% of a growth, margins expected to remain majorly flat, while net profit will see about a 22% of a growth. What we should be watching out for firstly is the order pipeline, especially in the domestic as well as the international business. business that we'll be seeing. Now, deferred domestic tendering, how that would impact the revenue growth is something also that we should be watching out for, considering that order inflow growth last year already had a high base effect. So that is something that we should be seeing. Other than that, even if you look at the EBITDA margins, how it would perform in terms of the expectation is flat margins this time. So it's majorly on that basis whether the project and manufacturing business, whether they'll keep the core margins going on. Just to reiterate the guidance that is given, the order inflows are expected to see about a 10% growth in FY26, while revenues will see a 15% of a growth, while core margins are expected to be in the range of 8.5%. So results majorly in line with what the FY26 guidance is given.
Thanks so much for that, Anushi. But Prashant as well as Vinay, thanks so much for joining in, giving us perspective on a bunch of stocks. But viewers, that's all the time we have on this edition of Profit Buzzer. Stay tuned to NDTV Profit for more.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
Markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Hello and welcome. You're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Anushi. Well, if you look at the markets, the Nifty that has found some support nearly 24,600 level and has managed to gain nearly 100 points from day's lowest point, while the Nifty Bank Index that continues to trade flat. But let's go across to Hiral to understand what's been buzzing when it comes to the small cap space.
Thank you, Somit, for that. So let's quickly look at what's happening in the broader markets. Let's pull up BSE small cap and then NSE small cap 250 as well. You've seen from the day's lowest levels, you have BSE small cap also, which has climbed to the day's highs, now seeing gains of 0.6%. Likewise, if you see NSE small cap 250 as well, a similar trend there at the day's highest levels with gains of around 0.4% coming in there. Let's look at individual stocks from here on. Firstly, Tata Chemicals on the back of a Morgan Stanley upgrade. That stock is seeing some smart moves today. 6.5% up move has continued on that moving edge. On the back of earnings, a couple of companies that have been buzzing today as well. Happiest Minds, that stock is seeing some smart moves. Go digit on the back of earnings, as well as Birla Soft, again earnings reaction. Punjab Chemicals, Paradip Phosphate, Apar Industries, all of them also buzzing on the back of numbers. Punjab Chemicals 13%. If you talk about Arvind Fashion, numbers have just been reported, 7.5% up move, and Apar numbers have come in the last half an hour of trade, a 10% up move coming in on Apar Industries as well. Let's look at a few of the other names. Senores, the numbers were strong earlier. In fact, now there has been inspection at the Georgia facility, but in spite of that, today that stock is seeing some smart moves, 8 to 9% up move coming in on Senores Pharmaceuticals. Navkar Corp and Good Luck are a few of the other buzzers from the broader markets as well. Smart moves on Navkar Corp, and if you talk about Good Luck, 11% up move here. Manorama Aeroflex, let's pull up both these counters as well, and you'll see the kind of moves that are coming in on these two, because the volumes are also pretty strong. Manorama 7.5% downtick, one of the top losers there. Aeroflex as well, 8 to 9% kind of downtick, so one of the top losers in the broader markets. Let's pull up a 5-day chart of SML Isuzu. If you see the 5-day move on this one in the week, today the stock is down 5%, but the trajectory has been slightly weak, 2.5% marginal uptick there. Paras Defense also is another one. If you see the 5-day, 16-17% is the kind of downtick that you've seen on the Paras Defense. Zen Technologies as well. In the last 5 trading sessions, similar kind of downtick that you've seen on the Zen Technologies as well. And a Home First, which reported numbers over the weekend, but yes, since yesterday's session, that downtick that has come in, 6% there, and today as well, 5.5% downtick on a Home First. So lots of buzzers in the small cap space, and I think a detailed discussion that Somit and Anushi will take you through. Over to you, Somit.
Well, thank you for that, Hiral. So, as we are seeing a lot of these names that have been buzzing are on the back of the first quarter results that we are looking at. In fact, a company which, came out with their numbers, and it's a strong set of numbers that we're looking at, is Garuda Construction. Now, just to give a sense on the company, now it's a end-to-end civil construction company engaged in residential, commercial, as well as infrastructure related projects. If you look at the order book, as of Jan 25, if we are seeing the last value, that stood at around 2,830 crore. In the first quarter, the company saw about a 256% of a jump in terms of where the revenues are concerned, but margins stood at 29%. But to discuss more on this front, we are joined by Praveen Kumar Agarwal, the Managing Director and Chairperson of Garuda Construction and Engineering. First of all, Mr. Kumar, welcome to the show. I want to first get a sense in terms of how the company's journey has been in terms of, its listing in October 24. Now we are seeing the Q1 results as well, wherein you've seen about a significant uptick in terms of where the revenue and PAT number is concerned, but it's the EBITDA wherein that number we are seeing at the levels of 29%.
Yes, thank you. Thank you for having me. Thank you very much. So basically this has been consistent, and we are a bottom line based company. We focus too much on bottom line. We don't run after top line or order book. That has been our forte, and that has been our focus. So we are very concerned about our bottom line, and that is what you are seeing.
Okay, so in terms of, if we look just concentrating in terms of the bottom line is, what you're emphasizing on. In the last 2-3 fiscals, we've seen the margins have ranged in the 30 to 33% of a range. This time in the first quarter, we are seeing 29% of a mark. Just want to get a sense in terms of your margins, if you can give us a breakup between your segments, how margins differ across that, and what's the sustainable kind of picture that we should be looking forward?
Yeah, so a little bit here and there is all right, because we are into civil construction. We are not selling a commodity. So a little bit here and there, but basically it will be around this range. We will maintain this range, and that is what we have been doing all the while. Okay. So we bid accordingly, we bid according to this margin, and we don't bid very low. We don't take projects just for the sake of getting the projects. We take projects if we feel we can make a decent amount of profit there. And we are a debt-free company. That is most important. We don't have a capital cost. We don't have any cash flow problems. We don't have any CC limits. So we don't have any interest cost, basically, if you see in our balance sheet.
And is that the position that you expect to maintain forward as well? You'll continue to remain debt-free?
Yes, hopefully, yes. That is what God wish. We are focusing on that, and we'll maintain that.
Okay, and in terms of where the other metrics are concerned, in terms of your revenues, margins, you said that they will sustain more or less in the same picture. What is the kind of sense in terms of revenue growth that we can expect for the next 2 to 3 years?
Yeah, actually, as our order book stands at around approximately 3,000 crores, and we are also bidding for new projects. We might get a new project very soon, but I can declare only when we actually win a bid. So our order book presently is at 3,000 crores, which we have to complete in 3 years' time or before that. We have been known to complete projects before time. So we will be surely looking at completing these projects also before time, and as our order book grows. So you can calculate how much we are going to grow.
Right, so as you were mentioning that you have an order book of close to 3,000 crore rupees, if you could give us some guidance of how are you seeing this order book growth going forward, and who are your clients here? How much of these orders are coming from private players, how much from government, and if you could just give us more details on your clientele as well.
Yeah, so now going forward, this at present around 60-65% is from the government, and rest is from private. But going forward, we are looking for more focused projects, like very niche projects. We are only doing niche projects. We are not going into Me Too projects. It's not general type of projects. We are doing convention centers, we are doing malls, we are doing sports cities, stadiums, like that. So it's a very separate segment that we are focusing on. So there are very few players who think like us, like we are a build, operate, transfer basis projects. So we are more of a barter project or a BOT project, a specialized company into very niche segments where not too many people want to participate.
Mr. Agarwal, if I just take your order book in context now that you said that it stands at the levels of 3,000 crore or odd so, which brings your book-to-bill ratio of more than 10 times. Just want to get a sense in terms of how the execution is expected to shape up. How much of your order book is to be executed in FY26? And is that the number that you expect to sustain even going forward, 10x of a book-to-bill ratio?
Yeah, if you see last year, our order book was very small. Then we went into IPO, we got funds. Even that time we were debt free. Even today we are debt free. And we want to sustain this debt free nature. So now that we have got funds, we have working capital. So we going forward, we should be doing if you see from last year, this quarter, we are almost going double. So this has to be growth has to be sustained because we have to complete the projects on time. So this growth momentum will sustain definitely.
Okay, and in terms of your IPO also, when we were looking at one of the key reasons for the proceeds to be used towards the working capital. So just want to get a picture on that as well, if you're seeing an improvement in terms of where the net working capital days are concerned, or how is that shaping up?
No, as I told you, we are a BOT based company. So we in fact fund our own projects also. So that is why we whatever working capital shortage was there, that was met by the IPO. So now we have greater leverage so that we can we are in fact funding our projects also. So there's a little bit of working capital extra requirement. So that is now sustained.
So mainly if we look at your overall presence, that was firstly concentrated in the MMR Maharashtra regions, and now you're expanding your presence to other states as well. Give us an outlook in terms of your current ongoing projects, how many of that are there, and what is your plans in terms of expansion forward?
Yes, so just now we are present in 3 states. We are doing, we were a Maharashtra based company. We went to Rajasthan, we are doing an industrial project there. Then we went to UP. That is first time we went to UP. Gorakhpur, we have got the key projects there. We are building a convention center there, and we are doing a sports city of 227 acres there. This is for the Gorakhpur Development Authority. So we have shifted our focus not to based in Maharashtra itself. And so going forward, we are trying for a project in MP. So maybe we'll win it. So we'll announce it. So yeah, so we don't want to go many places, but at least 3-4 states we can definitely do. We are doing a small project now in Delhi. We have completed a big project. We are going in for more bidding into Delhi. So yeah, 4 or 5 states will concentrate.
Right, sir. So as you were mentioning that after the IPO, you're not facing any working capital issue. But earlier, I believe the working capital was because of some delayed payments from government project. Is that issue still continuing from the government side? Are payments being delayed?
No, there's nothing. No, there's nothing.
Okay.
Okay, so
it's all very cool. Yeah.
Okay, so that's a relief that we are looking at in terms of that. Now, just that brings me to my final question regarding your bidding pipeline. You know, you talked about the expansion plans in other states. Just want to understand your positioning towards competition if we have to look at what is the kind of success rate that you have when you bid for a project?
Yeah, if you see, we are not bidding into the normal projects. So generally, we have 3 or 4 parties who bid with us. So that so our success rate when we bid, we are at least 1 out of 4 bidding we win. Generally, yeah. So we have been choosing our bidding strategy very well. We are focusing on what to bid and what not to bid. We are just not going to bid for everything.
Well, that would be all, Mr. Agarwal. Thank you for joining us and explaining your company in detail. Well, that was the management of Garuda Construction. With that, let's also welcome in our guest for the show today, Lancelot Dicona, a CIO from ValueX Wealth Connect. Lancelot, any views on this counter Garuda Construction? The numbers were strong. The management is confident of more order wins going forward.
So, I think while numbers are strong in terms of order book and execution, what one has to understand is that when you do build, own and, build, operate and transfer projects, the investment actually is very large in that, in the actual construction. So rather than other plain EPC, pure EPC contractors, pure EPC contractors would actually do a project and get paid for it, and that would then generate a profit. In this case, the profit actually can be seen only after the project is transferred, because at the time of construction, while they're building the building out the project, they're showing it as income. It's actually their own investment going into it. So unless that investment gets released over a period of time, when they actually transfer the project, that's when you would actually see the benefit. So I think on the other hand, this also issue with regard to zero debt, it brings down the return on equity, because the entire money from equity shareholders gets deployed back into the company. Rather than that, it is always better to take some amount of leverage, which your profit margin can easily sustain, pay off the interest, and the additional revenues or profits that are generated go towards the equity shareholders. So from a business model wise, that is a better option. And I think given the size of the order book, one will see a much larger investment needed, and at some point in time, company will have to start raising debt in order to finance this. And the actual profitability of the company will come out only when the projects are transferred, which may be many years down the road, and that would really reflect the profitability at that time.
Okay, so that's the view for Garuda Constructions that we are seeing. Thanks for that, Lancelot. But let's shift focus. There are a couple of fertilizers and agrochem companies which are buzzing in trade today, and Varsha joins us with a detailed list on same and why and what are the potential reasons as to why we are seeing this buzz.
Thank you so much for that. So all the three companies that I'm going to talk about are buzzing on the back of Q1 FY26 numbers. Let me start with Punjab Chemicals and Crop Protection, wherein if you see good set of numbers, the net profit, huge uptick in net profit that you're seeing is led by higher other income. And also they've signed 3 exclusive MOUs with overseas customers for high value agrochemical products, and they expect the revenue from these 3 MOUs of around 120 to 150 crores over the next 2 to 3 years. This is huge for a company like Punjab Chemicals. Just to speak about the numbers, EBITDA was up, if you see, 25%, margins were at 11% versus 11.3% last year, and net profit was at 20 crore versus 13 crore last year, which is up 54%. Next on the list is Mangalore Chemicals and Fertilizers. Again, overall good set of numbers. If you see, ammonia and urea plants operated continuously throughout the quarter for the company, and the urea production, if you see, were at 1,22,499 metric tons for the quarter. And if you see, the revenue was up only 5.9%, but net profit was up 40% because lower tax aided net profit for the company, and margins were 12.8% versus 12.9% last year. Highlighting stock of the day, I would say today, is Paradeep Phosphates. Very good set of numbers. If you see, revenue was up 58%, but EBITDA margin impact that you're seeing is led by operational leverage, because the costs have not gone up, but your revenue has increased, and that has led to the EBITDA margin expansion due to operating leverage. Other income and lower tax have aided net profit for the company. Now overall, if you see, all the 3 companies that I have talked about are into fertilizers and chemical sector, especially into fertilizers, and good monsoon this time has actually helped these companies to have a good numbers, because sufficient rainfall from the monsoon directly supports agriculture productivity, and because of this farmer there's high demand of fertilizers from farmers because of good monsoon in any quarter. And Kharif cropping season sees significant boost when it comes to fertilizer consumption. So overall, because of good monsoon and because of operating leverage that these companies have seen, have led to good kind of numbers when it comes to all these 3 companies.
Okay, thank you for that, Varsha. So, one interesting name which popped out is Punjab Chemicals and Crop Protection, and particularly the segment that Varsha emphasized was on agrochemical products, wherein they're seeing about 120 to 150 crore of sales in the next 3 years. Lancelot, your view regarding this company?
So, the company is trading at quite, an expensive price earnings. It's almost 31 times its earnings. And while the industry has done well and the company has done well in the last quarter, I think we've seen that these companies do take a lot longer in order to, for the orders to fructify. So though they are entered into an MOU with 2 overseas companies for the molecules to be developed, it takes a year or 2 before, the revenues and profits creep in. But looks like the stock is already pricing in, the potential upside, and that can be, a bit risky, because when you have a potential upside already being factored into the price, and if there is any negative surprise, the stock can re-rate as sharply as it has risen, and that could result in a bit of an issue. So I think if one has to look at this company, while it appears to be the prospects are good, I think the valuation is expensive, and maybe one can look at it at on a correction.
Right, Lancelot. Then what would be your top pick when it comes to the fertilizer and chemical space currently?
Actually, in terms of the chemical space, I would go with Tata Chemicals still. They are one of the leaders in the space, and you are seeing a good amount of improvement in the profitability as well for them. And if you consider, even the results should be much better going forward. So valuations also are reasonable. So one can look at Tata Chemicals in this space as opposed to many of the smaller companies in the place.
Yet another stock that remains in focus is Jaiswal Neko. The stock has hit an upper circuit of 20% after a couple of large block deals that have happened in the last couple of sessions. Once is joining us with more details on the same.
Right. So if we talk about the business of the company is engaged in the business of pig iron, sponge iron and pellets, etc. Now an asset care and reconstruction company holds 25.86% stake in the company as of June 2025. Now let's understand the overall scenario. So company had a substantial debt that became NPAs for the banks, and the asset reconstruction company acquired almost the entire distressed debt from the banks and then worked on the restructuring of the company's debt. Now subsequently, company secured a 3,200 crore debt from other financial institutions in December 2023, and this involvement of ARC has led to successful debt restructuring in the company. Now followed up by this, there has been continuous selling by the asset reconstruction company. As we can see on the screen, the asset reconstruction company has sold substantial stake in the company. Also, yesterday Shubham Capital bought 53 lakh shares in the company. Now it's important to note that Shubham Capital is a part of promoter entity which owns 14% stake in Shyam Metallics. Also, if you look at the margin trajectory of the company, the margins have increased from 11% in June 2024 to 19% in June 2025. So this is what the overall picture is shaping up for the stock.
Right. Well, Lancelot, any views on this counter, Jaiswal Neko? The stock has hit an upper circuit of 20%, a big block or a big overhang of selling that was expected from ARC is being done right now.
I think, post the restructuring, and the company is, trying to get out of its past history, but, the return on equity is fairly low in this nature of business. And, this particular automotive components can also take a bit of beating when there are higher input prices, etc. So it does give you a lot of, there are a lot of risks in buying into this price when the price has rallied recently, and it's, probably trading at about 20 times its forward earnings. So it still is a little high, and one should be a little bit careful about picking it up, because it's hit upper circuit, as you said, and it could continue for a while. So you do not want to get into a company when, when its momentum is totally making valuations go, haywire.
Okay, so continue to remain cautious on this counter. But apart from that, Flair Writing is another stock that you should be watching out for. And this is again on the back of the first quarter numbers. How the overall quarter went by. Mahima joins in with more details on this.
Right, so Anushi, it's been a good quarter for Flair Writing. Double-digit growth across metrics, revenue, EBITDA as well as PAT. In terms of what's worked for the company this quarter, creative segments have continued to see good momentum growth. Launched 22 new products this quarter. That is also something that is started to augur the top line. In terms of the numbers, revenue saw an uptick of 17%, EBITDA saw an uptick of 18%, EBITDA margins up to almost 17% from that 16.8 mark, and net profit up almost 8%. In terms of the business performance, the domestic owned brands saw an uptick of around 23% in terms of sales. Export owned brands saw an uptick of around 24%. So overall, combined consolidated growth of around 23% when it comes to the business mix. stocks. Segmental performance, pens revenue saw a growth of only 3%, so single digit growth there. That was a disappointing metric, but overall creative segments has seen a growth of 77%, and this is on the back of a lower base as well. Steel bottles, houseware revenue grew 55%, again on the back of a lower base, but it's these ancillaries that are actually now auguring growth for Flair Writing. Lastly, in terms of capex, FY26, they've guided a capex for 80 to 90 crores, out of which 26 crores they've already done in Q1 FY26. So this is the overall view of how Q1 panned out for Flair Writing and why it's buzzing in trade today.
Okay, thank you for that, Mahima. So that's the overall picture that we are seeing for Flair Writing. The stock up over 8% in trade currently. But with that, we'll also like to thank Lancelot for joining us. But with that, it's a wrap for this edition of Profit or Small Cap Buzzers that we are seeing.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए ये तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए ये तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Watching India Market Close, I am Mahima Vachajani and with me is Neeraj Shah. Well, before we move on to what we've planned for you on the show today, let's take a quick look on how the markets are doing. Well, the Nifty 50 is up around 0.4% as we speak, so in green today. The Nifty Bank also seeing slight uptick, about 0.2 odd percent, so partially green there as well. Let's also take a look at the Nifty heat map because that is going to be an interesting one. There is SBI Life which is seeing downtick of around 1.4 odd percent, Axis Bank still seeing that continued pressure down by about 0.8 odd percent. Asian Paints ahead of its earnings, slightly under pressure. Geo Finance is the top gainer, up 4%. L&T ahead of its results again, up 2% and on the back of that 15,000 crore order win. Bharti Airtel doing fairly well in trade today, up 1.6%, followed by Bajaj Finance, Apollo Hospitals, Adani Ports, Tata Motors as well as Adani Enterprises. A lot of Adani names doing well in trade as well. Tata Steel results expected tomorrow, but stock seeing gains of about 1 odd percent. Reliance also gaining by about 1 odd percent as well. Let's try to pull up the advanced decline ratio because the action really is in the broader end of spectrum. It's a very earning specific markets and we're seeing a kind of tug of war when it comes to the advanced decline ratio. There's around 1500 odd advances right now versus that of 760 odd decline, so it's almost a 2:1 ratio when it comes to where advances and decline ratio stands. But yes, a tug of war situation here. Let's also try to pull up the sectoral heat map and see what counters are seeing gains. Well, all counters in the red. There's Nifty Realty which has bounced back in green after seeing a lot of profit booking yesterday. Nifty Pharma up 1%. Nifty Metal also seeing gains of about 1 odd percent. Nifty Metal seeing good gains. There's Nifty Oil and Gas, Nifty Auto, that's seeing gains of about 0.7 odd percent, but Nifty IT almost flat there. Nifty Private Banks also not doing much. Nifty FMCG also not doing much, flat in trade. Nifty Banks slightly seeing gains of about 0.3 odd percent. Let's also try to pull up the broader markets and see what they are doing in trade today. The mid cap 150 and the small cap 250. It's a very earning specific market as I mentioned. The mid cap 150 up 0.7% at its day's high point. The small cap 250 up by about 0.6% as well, again at its day's high point. Let's try to quickly pull up the NSE 500 and see what counters are buzzing there. There you go. There is Apar Industries seeing gains of over 12%, Tata Chemicals on the back of the brokerage note, Rallis India seeing gains of about 5.7%, Birla Soft, JB Chemicals, Tanla Platforms all seeing gains of about 5%. But something that's not doing well on the flip side, we have Home First, which is down 5%, Lakshmi Organic, Canfin Homes, 5-star, Zydus Wellness, some counters that are under pressure. So this is with regards to where the broader market stands. But Neeraj, anything that you are picking up, anything that you are liking right now? It's very earning specific, as I've mentioned on the show earlier as well. What are you picking up?
Yeah, Mahima, good afternoon firstly. And, I'm just glad that in the morning when we spoke about this on the trade setup, we were talking about the fact, viewers, that if the PCR, Nifty PCR was at 0.65, select quant indicators were talking about the possibility of the markets being in an extreme fear zone and a bounce back likely. I think that has played out, and which is actually a really good thing. Now, what pockets are moving today? There is a bit of a bounce in real estate, and that is something to note, because real estate was under this extreme pressure the last few days. And look at what some of these stocks have done. Lodha is up 3.5%, Oberoi about 3%, and these are the stocks that got really punished when Invesco sold out from those funds. And today we're seeing a bit of a bounce in those funds, so which is actually a pretty good sign. There is, of course, the likes of DLF, Godrej Properties, Anantraj, etc. doing well, which is a good thing. But it's predominantly the sold-out real estate names which are actually doing very well for themselves. Pharma has taken a bit of a back seat. The big mover of the last few days, Laurus Labs, is correcting, and rightfully so, has had such a mammoth rally that in some sense, some bit of a cool-off. Actually, sorry, I stand corrected. Even there is a bit of a bounce that has happened. But some of the others, the Piramal Pharma, etc., are kind of a bit soft in trade today. The Paras Defense is down about 5.5%. Bajaj Healthcare, despite giving fairly positive commentary about the quarters ahead, is down about 5%. There is weakness in Zentech as well. So that defense side of the market isn't quite necessarily looking very, very strong. But on the flip side, like we said, some real estate, some chemicals, select pharma are doing very well for themselves. Apar Industries is doing very well for them itself. And I think that's the bucket that we're going to keep a keen eye out for. Kush Bora, founder of kushbora.com, with us on the show. Kush, great having you. Thanks for joining in. Kush, I don't know how you think about this, but I would love to know. I mean, we are 0.5% up. It's not like we've really regained a lot of lost ground. But this morning, the Nifty PCR at 0.65, etc., was all giving some signs that there is a possibility that we could bounce. We have shown that little bit of a bounce. Is this sustainable? Would you go out and initiate fresh longs at these levels?
Hi, Neeraj. First of all, very good afternoon, and spot on. I mean, this is exactly what we've been discussing. I think, since yesterday, that we've seen index and the indicators at oversold or close to oversold territories, and yet that rebound remained elusive. It was perhaps a matter of time before it came about. Could have been yesterday, just came about today. My sense regarding the sustainability of this bounce, not a very confident one. The reason being that we've seen a sharp sell-off on the way down for the last 3 sessions at least, but on the way up, even the volumes, if you see, and the moves in terms of the pure price action you see, has not really been so sustainable. Mind you, that said, this short covering bounce itself has the firepower, to take Nifty at least to 24,900 and 25,000 levels, because we are so heavily short on the index. We have been for a better part of this month. So up until 24,900, 25,000, I don't think even if the Nifty moves to those levels, it will be a surprise. What is crucial is sustainability around those levels and moving higher from there, which remains a question mark. And I let the price action confirm that before perhaps changing my view. So yes, this short covering bounce could well continue. In fact, yesterday also, if you recall, I mean, the one thing that we mentioned, that the only trade in town is to actually play for a short covering bounce. Didn't come about yesterday. We're seeing that today. That view still remains. So with the stop loss around the low point of the day that the Nifty has made today, you could initiate a long position for levels of 24,900, 25,000. And my suggestion would be keep taking profits as in when you get, rather quickly, be a little nimble-footed, be a little swift, because what we're seeing right now is a short covering bounce and perhaps continuation of that today or maybe in the next couple of sessions as well.
What about the bank Nifty, Kush? It's trading within that range of 600 odd points, up 0.3% as we speak. But is there any trade there that you're seeing?
Sure. Hi, Mahima. See, what's happened here is that the conviction in the bank Nifty was fairly strong up until 2 sessions ago. What happened 2 sessions ago is that, further weakness, be it on account of, the dismal results by a Kotak, which, dragged the bank Nifty below the 50-day moving average, which it was holding up for some time, that actually disturbed the structure a little. If I were to take that short covering trade that I spoke of just a while ago, I would actually prefer to trade or take that trade on the Nifty, because we've seen a very heavy shorting on the Nifty. Bank Nifty, not so much. So Bank Nifty could consolidate, between this 56, and if I can give a broader range, to about 56, 700 kind of a range. So while there could be a short covering bounce, the conviction for that is still stronger on the Nifty. So yes, there's a range on the Bank Nifty, which is 55,500 on the downside, and on an immediate basis, about 56,500, 56,700 on the upside. Either side of that range breakout will decide the near-term trend. For now, play the short covering bounce on Nifty rather than the Bank Nifty.
And what would you go ahead and buy today, Kush? Topics?
I'm glad when you have the conviction of asking for buy calls, which I seem to concur with. Both the calls are buy. Partly the reason for that, Mahima, is because a lot of stocks like the index were on such oversold territories that it became difficult from a risk reward perspective to give a short call. So as far as the picks for the day go, both of them on the buy side. First is Fortis Healthcare. We had seen very good moves on this for the past 5 sessions. Last 2-3 sessions when the market was consolidating, this one had an up move. So yes, relative strength apparent, volumes obviously at tick. So on the upside, you're looking at targets of 867 and 886. On the downside, you've got a stop loss around the 825 mark. The second one is more of a reiteration of the weekly call that I mentioned on Monday, which is Sham Metallics. The stock did well on Monday. Yesterday also, it actually moved to 984 levels before seeing a sharp correction along with the markets, but comfortably above the stop loss, and it's already regained that lost ground that it had yesterday. So Sham Metallics continues as a positional bet for levels of 1018 and 1069. Your stop loss on this one is 920.
Okay, anything on Puravankara that you're seeing?
Mahima, I reckon you want to mark Asian Paints because those numbers are out.
Okay, all right, I'll check that.
So I'll just briefly read out the numbers while Mahima analyzes them. So the revenues are at 88,939 crores and the net profit is at 1100 crores. I think our estimate was 1110 crores. So I think on the bottom line, it seems to be bang on in line with estimates. On the top line, 8939 versus estimates of 8988. So you would reckon even that is in line with estimates for sure. Now, is that a good quarter or is it an okay quarter?
It's a muted quarter. I mean, it's and that's largely what the street was expecting as well, because overall the urban demand is not picking up for them, and that's been a concern. Plus, they've been losing market share. So this was something that the street was expecting, and that has happened. And that I think we're seeing the slight uptick in the stock as well, from red to green, up almost 2%, 0.2% as we speak.
But not warranted necessarily.
But not warranted at all. So muted set of numbers, largely in line. I'm yet to see the margins.
Margins are at 18.2, Mahima.
So 18.2 is what was estimated. So that's again in line. 18.4, I think what was estimated.
Was estimated, yes.
What was estimated, and 18.2. But that's not bad because that's versus 18.7. So not a big dip there. EBITDA at 1625. So that is also largely in line of what the street was expecting versus that of 1657. So numbers seem to be largely in line when it comes to Asian Paints. Kush, any call there? I mean, any trade that you're seeing on the charts of Asian Paints?
I don't know how many people trade Asian Paints. It's more of an investor stock, but yes. See, what's happened here is that with this result reaction, the early result reaction at least, the stock was, seeing a downtick for the last 12, 13 odd sessions. And right now it's broken that falling trend line. So from a very near-term perspective, that's a positive. But on the upside, you've got multiple resistances, at around 2450. And once that is taken out, you're looking at the 2490 kind of a resistance mark as well. So I think, as you also mentioned, maybe the results were, more in line than anything else. And resistance is just around the corner. if you have a position, continue to hold, and you might want to perhaps take some money off the table around the 2500 mark. Hasn't really changed the structure, or hasn't really moved the needle for me. The move that we are seeing today as well.
Even if you see the year-on-year performance, it's largely flat. 8,924 odd crores versus that of 8,943 crores in Q1 FY25. So no surprises there. Their other income has come down quite significantly. The raw material cost, which was a concern, has also largely been flat. So that's one of the reasons why margins are still in check. There's stock in trade, which has also not moved much, but overall changes in inventory is slightly inched up. Probably that's the concern, where margins have been slightly hit. Employee benefit cost has gone up slightly. In terms of finance costs, that's come down a tad bit. Depreciation slightly gone up. Other expenses also largely in line. So I think overall picture seems to be quite. I mean, overall, even in terms of estimates versus YoY numbers, it's largely a flat set of numbers for Asian Paints, and this was something that we were expecting. But I think the interesting things that I would want to know from the management from the con call as well, which is at around 5:30 today, as to the kind of money that they've made from Akzo Nobel's stake sale. We would want to know as to what they'll do with that, plus the kind of competition that is shaping up in the paint space, right? So I think these are the two important aspects to know as to what's happening with Asian Paints exactly. But we're joined by Dharmesh Kant, Head Equity Research at Chola Securities, joining us now. Dharmesh, hi, a very good afternoon to you. You must have had the chance to look at Asian Paints numbers. What is your first reading looking like?
Yeah, the numbers are largely in line with whatever estimates are there. The better part has been a margin expansion has been there. So we were working at around 17.5% of an operating margin. It has come at around 18.2, which looks a tad better than what the expectation was there. And seems like the fixed cost element has not played up clearly in this quarter. Maybe next quarter that will be there. But net it's more of a neutral set of a number, not a very enthusiastic number.
Any sense of how volume growth could have been like, considering the revenues are flat almost, that should be largely on account of price hikes, not volume growth. Is the reading correct?
I think the volume growth has come a tad better at around 3.5 to 4%. And the expectation was 2 to 3% kind of a volume growth. So it's near to around 3% kind of a volume growth. So it's more to do with the volume growth and better, lower input prices. So that has helped the margins rather than the blended realization going up.
And, considering Dharmesh, Asian Paints numbers have already come out, and this sets the tone for the entire paint space. From what I gathered was that because, they have more presence in the tier 1 cities, more urban-based demand impacts Asian Paints. Do you think the peers' performance will be a tad bit better? Because we've seen Berger Paints seeing market share gains since the past few odd quarters.
Difficult to judge that at this moment. I mean, Q2 anyways is a washout quarter for most of the paint companies because of monsoons there. I think Q3 would be the litmus test for all the paint companies as far as the market share is concerned, and how the consumption goes up and the share of take. But going by the prima facie, whatever numbers are there, I think market will give a benefit of doubt to Asian Paint with these numbers because essentially the margins have shown a better uptick and volume growth is a tad better than what the expectation was. So with this kind of stock price movement, you can expect around 4-5% kind of a further uptick gains on Asian Paint.
Home decor categories has been a pain point for them earlier as well. This time also they've seen a degrowth because of overall household disposable income going down. Any sense there?
No. As of now, it's difficult to comment on that. Let's see the earnings call of the company and what the management has say on that. Then after recent calls can be taken. But one thing that the underlying fact which can be generalized over the overall economy is that there has been a slowdown in the personal consumption of most of the retail side. So that applies to even home decor and the home furnishing segment. So I think Asian Paint is also has been a victim of the same slowdown.
Okay.
Okay, Dharmesh, we'll leave it at that. Thanks so much for taking the time out and being with us. Really appreciate your time. Now, let's get in a management which has made it a habit of giving good growth and guiding to maybe more. That is KC International. Vimal Kejriwal, Managing Director and CEO of the company, joins us right now on the show. And the reason why the stock may not be too excited is because now the street expects this as the very least from them. Mr. Kejriwal, it's a tough spot to be in. You deliver good numbers, and yet the street is not excited because the street expects this and more from you. But tell us to your mind, did the quarter live up to expectations, particularly in the revenue growth? Because the bottom line growth was okay, margins are okay, revenue growth 11%, slightly less than what you anticipated, or in line?
So Neeraj, aisa hai, dil mange more. You can keep on asking more. Okay. No, I think what you said was exactly right. We have talked about a 15% annual growth. And typically Q1s have always been slightly lower. If you look at our Q1 numbers for the last 5 years, they've been around 19-20% of our annual numbers. And what happens is in this business, most of the people try to push as much revenue, as much supplies in Q4. So Q1 in terms of collections, in terms of revenue, always is slightly lower. This quarter, we were expecting it to do more. Let me be very honest with you. I think the continued problems of labor, which are now getting resolved, and also a little bit of payment issues in water, etc., that brought our growth down. Otherwise, I think we should have done 13-14%, if not 15%.
Got it. I mean, so one is the execution, two is the inflow as well, right? Your order intake was presumably down 27% YOY. Now, is this also something that gets resolved, or is it that after a very hectic last 12 to 18 months of order inflows, things are kind of slowing down a bit?
So let's just look at some of the numbers. Today, my order book is around 34,000 and odd.
Yeah, agree.
And my L1 is more than 6,000. So in all, I'm sitting on 40,000 crores of numbers, orders, which I have roughly. Okay. This 6,000 also will get converted very quickly. Some of them should get converted in a week or 10 days, or maybe I think within the next 1 month or so, I think most of this will get converted into orders. Okay. So one is, I don't think we are worried about this part of it. The second piece is, yes, we have been seeing some slowdown in the order intake happening from the India T&D. I think more so because people are just trying to recalibrate, even the CE and everyone's looking at all the, where are the renewable plants coming, what are getting delayed and all that, what needs to prioritize, because people are a little bit struggling on execution because of volume of work. So I think there is some prioritization happening, and there's a huge queue of tenders and orders to be given. So I don't think we should read much into this right now. No.
Mr. Kejriwal, hi. Mahima also joining in. I was seeing the highlights of your con call, and I saw that your tender pipeline that you were talking about is roughly 1,800 billion right now, and that's divided into T&D as well as your civil, etc. So just want to get a sense as to how much of a conversion rate you're seeing from there, from that 1,800 billion.
So typically what happens is if you look at T&D, it will be anything. Earlier it used to be more 15 to 20%. Now the volumes are growing. So maybe 10-12% is what normally gets converted. So our T&D was around 90,000 is the order tender pipeline. So 9-10,000 more should come in, in the T&D piece of it. Civil and all that, the competition is very different. So I'll not be able to hazard a guess as to what will happen. But overall, we had said this year that we should have an order intake of around 30,000 crores. I think we are pretty okay with the trend line of what we have already got, the L1s and the tender pipeline. I think we should be able to achieve our numbers.
Even in terms of the Kavach space, you did mention that it's not growing at the pace that you wanted to grow, but you've said that there will be improvement going forward. What's the outlook like for that particular space?
See, the reason why I made that statement is that, there's too much of electronics in this business. And we are seeing some struggle at the vendor end in supplying everything in time. Maybe the business is growing too fast for their capacities. They had been waiting for quite a few years. So we are slowly seeing new players coming in, new capacities being added. So the execution will pick up, and based on that, the orders will pick up. Because what the railway is seeing is that the current orders are not getting executed at the required pace. So which is why they are holding back, I think in my view, some new orders. So of late, there have been some tenders which have been released. So there will be a pickup, not at the desired pace, but it is picking up.
Okay. Mr. Kejriwal, just a word ahead again on, I'm just taking the clock back to the order pipeline. And we know that the targets set by the government for FY30 are fairly strong. I heard you say that don't look too much into the first quarter, pull back because the eventual number looks okay. You expect FY26 ordering activity to be as robust as FY25 has been, or is it difficult to forecast that right now?
So Neeraj, if you look at the global piece, global order intake,
Right.
where I play, I think it should be there or maybe more. That is why we have increased the order intake target from 25,000 to 30,000 crores. Clearly, I think apart from India, where government has increased the target of renewables from 500 gigawatt to 600 gigawatt, and right now I think we have quoted for almost 19 or 20 NTPC renewable projects in our renewable business. So, for all of those projects, if they come up, you'll require large transmission lines. But apart from that, if you go to Middle East, especially Abu Dhabi, UAE, and Saudi, the number of tenders which we are seeing is just unimaginable. When you look at the tender pipeline, India is 30,000 crores, internationally 60,000 crores on the T&D part. So I think we are quite happy with what we are seeing, whether it comes from India or whether it comes from international market. I don't think it bothers us too much that way.
It is not an issue. There could be a quarterly change here or there, but the larger pipeline for now still seems to be pointing northwards.
Absolutely right.
Got it. I have one follow-up question, Mr. Kejriwal. Sometime back when we had spoken, you had said that while this is the best time of the business to be in your 22 years, labor issues certainly stood up. I heard you say that some of that is getting resolved. Is it conclusive enough, or is it difficult to say whether labor will cease to be a problem?
So I think there are two or three things which are happening. One is, for the time being, I am seeing labor issue getting resolved. We had a 30% shortfall. Now it's come down to 10%. We were able to get a lot more people. Now, is that I'll say permanent trend line? I am not very sure. What has also happened is that from June onwards, you don't have any major festival. Okay, so Holi is behind you, Eid is behind you. So next, you'll see people going out maybe near Chhath Puja or something. So that's one part. We are still not very sure that has a permanent influx or no. But what is also happening is that we are also changing the way, let's say, we are hiring people. We have started using aggregators, people like Quest and other people who have got, a lot of labor with them. We're also using a lot more large subcontractors who have their own dedicated pool, etc. And also at the end of it, I think all the EPs are realizing that they probably need to have more better living standards and everything for all the workers, etc. Why should the workers go back, etc. So I think a lot of things are happening, a lot of action is happening on 3 or 4 different fronts. And hopefully this should result in a sort of a permanent solution. And lastly, what I would like to add is that a lot of work is also happening on mechanization and automation. So with volumes growing up, do we need to grow labor in the same proportion, or can we, some way use equipment to increase the productivity of labor? Whereby, let's say I use a plastering machine. Instead of having 10 masons, maybe can I use them with 4 masons and a plastering machine? So they can take care of the increased volume. I think a lot of steps are happening at various levels. So I think we are finally seeing some light at the end of the day on the labor issue.
Okay, Mr. Kejriwal, thank you so much for giving us those insights, and thank you so much for taking our time and speaking with us at NDTV Profit.
Thank you for having me. Thank you. Bye.
All right, with that, it's time to slip into a very short break, but we'll be right back, bringing you all we've heard on the street today. So do stay tuned to NDTV Profit.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए ये तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए ये तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the expert.
Back with India market close right here on NDTV Profit. The markets seem to be doing okay thus far, not buckling down after having a bit of a pullback. In fact, trading at the high point of the day, which is actually a really good sign. The market breadth is the real barometer and looking very, very solid. Now, before we talk more about that with our experts, let me get in Somit Sarkar, my colleague, who joins in with all the chatter from the dealing room. Somit, what are you picking up this afternoon?
Multiple stocks remain in focus. Firstly, it's REC dealers indicating that there are buy flows on institutional desks. Both foreign and domestic institutions have been buying this counter. Now, one of the reasons is that the selling is most likely over in this counter is what dealers are indicating. Valuations are cheap and earnings growth is expected to be much stable, aided by recoveries. Couple of other stocks, that is Jindal Stainless and Shree Cement, and dealers are indicating that large HNIs are taking a pair trade here. They are buying Jindal Stainless and selling Shree Cement ahead of the Q1 numbers. For Bharat Electronics, overall for the defense space, if you look at today, there is some profit booking that we are seeing in trade. For Bharat Electronics specifically, dealers are indicating that there are buy flows at lower levels for this counter and expectations of strong management commentary that is expected on the earnings conference call that will be held tomorrow. For Updata Service, dealers are indicating that there are
buy flows on DI desk in trade today. And lastly, when it comes to Geo Finance, dealers are indicating that the company is, in fact not indicating, it is pretty much known on the exchanges that there is a board meet tomorrow for fundraise. But now what dealers are indicating here is that the promoter family might look to infuse funds in this company. They will look to increase their stake from current 47% to around 51%. So around 4 to 5% is what they're looking to increase, and the fundraise could be as much as 10,000 crore rupees from the Ambani family, that is the promoter of Geo Finance, and this could be done at a price range of around 320 to 325 rupees. So keep an eye out for Geo Finance. The stock is trading around 4% higher. The board meet is tomorrow, and most likely the promoter family will look to infuse funds in the company.
Okay, very interesting. Sumit, the other thing is we did this management today in KYC, Sterlite Tech.
Right.
And there is a bit of a news flow around that as well.
Well, Sterlite Tech has been in focus. There is a lot of institution buying interest. Now, one of the buzz on the street was that they might have some deal with Starlink, and that's what the management also confirmed.
Starlink?
Yeah. Yeah, and that's what the management also confirmed in the interaction. But apart from that, there are other multiple news flows that we have indicated earlier which have come to be true. Firstly, on GAIL, we indicated yesterday that there could be a volume guidance cut that the management could do. And yes, today in the conference call, they did cut their transmission volume guidance to by around 4%. Apart from that, we did indicate about Adani Power that there might be some positive corporate action, and yes, today the announcement has come in where the company will be looking for a stock split on August 1st for Power Industries. On July 25th, we indicated that there is buy flow and expectation of strong Q1 numbers. The numbers have come in, the stock was up 10% in trade, and yesterday we did also indicate about Hind Rectifiers that there is buy flow on PMS and HNI desk, and the stock has hit to 20% upper circuit after the strong numbers and a fundraise announcement that has come in.
Okay. Certainly keep an eye out for a bunch of those 20% for Hind Rectifiers. That's something for people who missed out. So I mean, just extend this a bit, but for people who missed out on what the dealing room sources were talking about Hind Rectifiers, what was the khabar and why is it that the stock has rallied 20% today?
So yesterday there was a dealer buzz of strong buying interest that we're seeing on the HN and the PMS desk on some positive announcement.
On Hind Rectifiers.
On Hind Rectifiers. And today the company has come out with the Q1 numbers, which is pretty much on the stronger side, and they've also announced a fundraise from the promoter side of around 27-28 odd crore rupees. This two announcement has led the stock higher at 20% circuit.
Interesting. Thank you so much, Somit, for giving us all those details. We're also joined by Mr. Chokhalingam from Economics Research joining us now. Mr. Chokhalingam, any quick view on Hinzing that we were talking about? Hinzing or Hind Rectifiers? What were we talking about? Hind Rectifiers.
Hind Rectifiers.
Hind Rectifiers. Any quick view there?
No, certainly. I've been knowing this company for more than 15 years. It's a great value company, deep value, lot of investment, good management. But I think it has played out now by almost rising 150%. It's a fairly priced now. That's my view.
Yep, 20%. So, Mr. Chokhani, I'm just trying to understand. Sorry, just in case I missed it. Would you be a buyer into this now? Because the point being, unlike some of the other companies in this space, right, transformers and related aspects, Hind Rectifiers hasn't had the rally that some of the others have had. Are the numbers strong enough for you to go out and buy the stock now after the 20% up move?
No, by nature, I will not take that kind of risk in small cap because we have seen even if fundamentals are great, a stock like BSE came down 60% when the fundamentals were improving. So I would never take risk of buying after the stock nearly triples or more than doubles unless there is extraordinarily appealing further valuation comfort, which is missing at current price for in the rectifier.
Got it. Okay, Kush. I'm tempted to ask you, I mean, though Hind Rectifiers is on a 20% circuit, so nobody can buy it today, but a move up, which is not very usual for Hind Rectifiers, right? You don't normally see the stock do the kind of move that it has. So a word on Hind and a word on some of the other transformer sector related companies, maybe a TRIL, maybe a G, Vernova, TND, or any of the others, but Hind Rectifiers in particular.
If you just dial back the clock a little, I think, first April, the stock was languishing at about 800. So with today's move, it's more than doubled. If I look at it on a daily setup, on weekly setup, It's actually now at overheated territory. So definitely the risk reward ratio not favorable for buying at the current juncture. But because the stock is at upper circuit on the back of very high volumes, I wouldn't advise an exit as well on this. You might just want to give it a day, see if there is another flip to it, another circuit to it, or at least in another case, at least some more upside tomorrow as well. So hold on to it. Keep a trailing stop loss near the 1650, 1660 zone. No fresh buying suggested. As far as the other stocks go, I think GE Vernova TND. This is the one stock that has actually had a fairly longish period of consolidation. You did see the stock and attempt a breakout 3 sessions ago, but that fizzled out. But that is more so in line with the markets. Today, on the back of good volumes, taking support at the 20-day moving average, the stock has rebounded. I'm more constructive on GE Vernova TND. If you want to take a fresh trade on the upside, look for targets of 2650, 2800 as well, and about 2380, the 20-day moving average will act as your stop loss. So risk reward ratio fairly favorable.
Okay, now it's time for our stock of the day segment, and Paradeep Phosphates is in focus. The stock has been buzzing on the back of its first quarter earnings. My colleague Varsha joins us with more details on that. Varsha, what are you picking up and why is the stock buzzing? It's up 8%.
Yeah, thank you so much for that interesting move. When it comes to Paradeep Phosphates, this is on the back of Q1 FY26 numbers that the company has posted. If you see, revenue was up almost 58%, but the move has been in EBITDA. So EBITDA is, if you see the margin, EBITDA margin stand at around 12.4% versus 6%. Now, other income and of course lower tax have aided net profit, but the rise in prices of DAP, that is diammonium phosphate, has led to the growth in sales because of the price surge in DAP. A company has seen a good amount, or rather good growth when it comes to sales. And of course, if you see the EBITDA margin, so EBITDA margin impact that you're seeing is led by the operating leverage. The fixed cost has not gone up much, but your revenues have surged by 58%, and that has led to the positive impact of operating leverage, and that's what we are seeing in the EBITDA margin impact. Company, if I want to talk about the backward integration program that the company has, backward integration is a key driver for the margin expansion that the company is seeing, and management confirms the sustainable margin improvement. Also, the new sulfuric acid capacity online. Their new sulfuric acid capacity will come online by Q3 FY26, which is at 1.9 million tons, and this will lead to expansion in margins because of the backward integration programs that the company is doing. Also, the phosphoric acid capacity is expected to reach to 0.7 million tons within 2 years. Onto the margin guidance, they are expecting EBITDA per ton guidance of rupees 4,500 to 5,000 rupees, and the expansion in EBITDA is expected because of the various capacity expansions company is leading to. Lastly, on the analyst recommendation, there are 3 buy, 1 hold and 0 sell with a return potential of negative 28.4%. But overall, if you see, a lot of fertilizer companies and even the agrochemical companies which will be posting numbers going ahead, you will see good amount of growth considering the volume growth, and of course good monsoon which we are seeing right now is also one of the reasons why you're seeing the rally in the, or rather I would say good financial prospects for these fertilizer companies.
Tata Chemicals looking good as well today. Thank you so much for that, Varsha. Paradeep Phosphates definitely stock of the day, but that's based on some very strong numbers. Some other winners this afternoon that have continued from the morning actually. PNC Infra, Apar Industries come out very, very strong, 13% up. Indigo Paints, but I want to pull up Asian Paints just once more. I know we've talked about it a fair bit, but the comeback of Asian Paints is what I find very interesting, beaten down for quite a bit. Kush and Chokha, very good afternoon to you. G. Chokalingam, I'm going to come to you first, specifically on the chemicals pack, chemicals and fertilizers. Let me club it into a slightly larger kind of a piece. Are you seeing a more sustainable recovery here?
In chemical, I doubt, but fertilizer stock like a Paradeep, yes, to some extent. Because one has to understand the fact that phosphatic fertilizer in the country is perennially deficit. And there are only 2-3 listed companies which make phosphatic fertilizers, basically Paradeep Phosphate and Coromandel. And as I said, for decades we are in deficit, and Paradeep Phosphate has got access to backward integration because the inputs, 90% of the inputs, more than 90% of the inputs are imported. So whereas this company has access to one group company abroad. Of course, valuation is slightly stretched, and but still one can hold it for two more reasons. Again, this year monsoon is good and the crop area is increasing. And second, the application of fertilizer also, if you see, the phosphatic fertilizer is perennially deficit in Indian cultivable land. And third, the September quarter is normally the best quarter for this kind of fertilizer company. So therefore, it's a good to hold.
You add Deepak Fertilizer in that list, just the numbers that have come in right now. So a quick review, possibly we've not got a chance to look at the details of it, but the stock 5% up and a spike there. Profits up 24.5% or 243 crores is what they've clocked. For the revenue, for the quarter, revenue is up 16.5% at 2635 crores. EBITDA is also up 10%. Margins have come off a bit, slightly, to 19.5%. I would say nearly flat. But Deepak Fertilizer doing okay. We'll wait to see the internals. But when you're talking about fertilizers, Chokha, is Deepak making the cut?
Not really. It is not in that phosphatic fertilizer. It's a fairly priced. It's a great company, no doubt. I think the valuation is fairly good now.
So the valuations don't give you that much confidence. Kush, what about you? Anything from the fertilizer pack that you're liking this afternoon?
First up, a very happy birthday to you.
Thank you.
I am surprised how Neeraj and Mahima have allowed you to come in the studios. You should be taking a day off. I know that
you missed all the excitement in the morning.
And you missed the gold bracelets in the morning.
Yeah.
The return gifts, I heard.
You're mixing me up with Oprah. That's a different show. A different anchor.
Hope you have a great day and a fabulous day ahead, Tamanna.
Thank you.
As far as the stocks go, I think among the pack that we were discussing, the only one that stands out for me is Coromandel. Paradeep over short. Deepak Fertilizers has multiple resistance levels, at the level at which it is trading and maybe just higher. But the very clear signs of accumulation on Coromandel and the support and the rebounds that you've seen in the last few sessions, very encouraging. There is a resistance, I will admit, around the 2500, 2550 zone. But once that is taken out, you could see the stock zoom to 2700 levels as well. So it's gone through a long period of consolidation, attempting a breakout. I think if there were market support, the stock would have already given you that breakout. So keep the stop loss with the 2400 mark. On the way up, 2700 and higher levels are your targets.
Kush, anything on Puravankara that you're seeing? Last 6 months, the stock has not done anything. Today, the stock is flying in trade. If you can try to pull that up, 13% as we speak. Anything that you're seeing on the charts, and do you think this momentum can sustain?
So I wouldn't bet too big on Puravankara. As you rightly said, the stock's actually seen a downward pressure for some time. The volume on the way down was waning off, right? So there was some breakout or an uptick imminent anyway. I'm sure this must be on back of news, perhaps even results. I haven't caught that. But immediately, if you see, there is a resistance of the 200-day moving average near this 305, 308 mark where the stock made the high today. So a follow-through move, and if it takes the stock above the 308 mark, then I could just, I could say that yes, perhaps the tide has turned, but there isn't anything much right now suggesting that there is a further up move that could come about. So 308 remains a critical level. If you have a position, continue to hold with a trailing stop loss near the 288 level. And if 308 is taken out, you could see further high upsides. But if not, then I think perhaps a sideways consolidation at best.
Okay, and Mr. Choklikam, real estate has always moved against the tide. If the markets are up, it's generally the counter that takes a beating. Anything specifically you're liking in the real estate space? We saw Kolte Patil come out with earnings. The stock is tanking in trade today. Any particular stock in the real estate space that you're liking?
A couple of points before recommending any stock. One, many real estate stocks already played out in a big way. And second, all of us know that in the last 3-4 years, whether you take land prices or apartment prices, they've gone up substantially. So therefore, there would be some pressure on the demand. Having said that, I would still recommend strongly stock like DLF. That's one stock which I like most because it has got a lot of land bank. There is a potential to unlock value from the land bank by developing them. And they have been doing quite well also.
And what about Varun Beverages? The stock is, seeing an uptick since the con call started, up 4% as we speak, right? Almost 5% now. Just want to get a sense. I think something that the street liked was that the volume degrowth was at 3% versus that of expectations of a degrowth of 5%. Plus, the international business has done well. The Morocco subsidiary has also started production for their Cheetos, and that's something that will augur growth going ahead in terms of top line as well. And now almost the entire capex, is put to use, and that's something that will, start playing its part. What's the view like here? And if somebody wants to enter, is this the right time? Because valuations are still not cheap.
One can wait. I mean, of course, the historical track record has been phenomenal, no doubt. Stock also corrected. But, one can wait for, more appropriate day, because as you mentioned, the stock is already up 5%. And of late, the market is highly volatile, and it is likely to be volatile at least for another couple of weeks till successfully the agreement is signed with US. So therefore, I would suggest hold. If there is any good day, in terms of even 3-4% correction, one can accumulate.
Okay, NSE not listed, but a number that is widely tracked by the street, and maybe you can look at BSE as a proxy if at all. But the margin number is what struck me, Mahima, as I was looking at it. Profits, of course, up 10%, total income up 9%, contribution to Exchequer at 14,331 crores. Operating EBITDA margin has gone from 74% to 78%. I mean, I know this is an IPO that is much awaited, a lot of interest, because there are more than 1 lakh investors who have unlisted shares right now. And let's pull up BSE as well to see if something is happening there. But NSE just telling you about, the numbers just telling you about how lucrative this space is, and there's just a 2-horse race as of now, only one of them is listed.
Absolutely, and I think the kind of margins uptick that is seen, it's not something that we've seen in BSE before, from a 74% to a 78%. It's quite a significant margin uptick, and we'll have to wait and watch out for as to when the IPO comes, how the subscription pans out, because overall it's been, the markets have been muted, and we've not seen the kind of flows and the kind of listing day gains in a lot of these counters, but NSE is one of the IPOs that will be most widely probably be subscribed and watched out for, definitely. Now shifting focus to L&T, because that's poised to report a strong quarter with expected revenue growth of around 14% and a 22% rise in net profit as well in Q1. Anushi joins us with more details on what you can expect from the L&T earnings.
Right, so I'll start off with the basic numbers first. Now, if you are talking about the headline numbers, revenue is expected to, as you mentioned, see a 14% of a growth. Margins mainly remaining flat at the levels of 10% or odd, so while net profit may see about a 22% of an increase. This 14% of an uptick that we are looking at revenue is mainly to be driven by the domestic business, and that's the kind of outlook that we are seeing according to the coverage that we have so far. Even if we look at the order inflows, that will be driven primarily by the power transmission and distribution business, along with the business buildings and factories sectors. Now, there was a new order win today as well in the hydrocarbon business from the Middle East segment. So commentary on that front is something that we should be looking out for. In fact, if you look at the order inflow growth, there are expectations that this may see some tepid sort of a growth, considering deferred domestic tendering which has taken place, while EBITDA margins will majorly remain flat. Now, what we should be watching out firstly is the order prospect pipeline. This is in between both the domestic as well as the international business. How that pans out, if they've increased the guidance towards that front, is something that we should be watching out for, especially in the Middle East segment. Execution timeline for both of these metrics in the domestic and international segment also on the watch list. Also, along with that, how improvement in projects and manufacturing business will drive the EBITDA margins forward in the subsequent quarters is something that we should watch out for. Well, just to reiterate the FY26 guidance given, now the company did say that they see about a 10% of an increase in terms of their order inflows, while revenue may see about a 15% of a growth, and core margins, that's the project manufacturing margins that we're looking at, are expected to remain in 8.5% of line, while net working capital to revenue ratio should stand anywhere between at 12%. So this is the overall picture that we are seeing for L&T.
Okay, L&T up before its numbers are coming through. That's an important one to watch, even as we are more than 50% through our result season. But L&T, an important one to see for more than one reason. In fact, let me welcome Amit Anwani to the conversation now, research analyst at PL Capital. Amit, a very good afternoon to you. And let's start actually with your take on L&T and what you're expecting from these set of numbers. What would you be watching out for?
Thanks for having me. So I think broadly we are expecting healthy numbers, and this is on the back of very strong order intakes which has been built up over past 2 financial years. The international contribution is almost 45-46% in the order book, and that is expected to be coming under execution despite there was challenges on domestic side, barring power sector orders which L&T won 6 months back, which was kind of one major order there. Having said that, the interesting thing is that even this year also is highlighted that they have been giving double-digit order inflow growth. Q1 versus the base Q1, definitely the finalizations has not been up to the mark. I am expecting 75,000 odd crore kind of order inflow this quarter. But having said that, today only they announced one mega order which is coming in from Middle East, where the pipeline is very strong. I think there should be about more than 20-25,000 crore order, and that makes up to the shortfall which we saw in first 3 months. Having said that, I think the interesting thing is the full year pipeline, which was very robust at 19 lakh order prospect versus 12 lakh in FY25, and a major revision in hydrocarbon order prospects. So the guidance was about 7 lakh, 5,000 kind of order prospect, which they would be bidding for versus 3.5-4 lakh in FY25. So pipeline is robust. Only concerns which has been in the past is the non-core assets, the Hyderabad Metro not delivering up to the mark, and low margins in infra segment, which shows us, which indicated some improvement in 4Q, and we are expecting some 20-30 bips improvement in Q1 as well on a YY basis for project and manufacturing business. Yeah.
Is L&T a buy right now before the numbers hit, Amit?
Yeah, so we have a buy rating. So we have about 4,050. Only thing is the stock has been sideways between 3,300 to 3,600 over past 6 months. And there was a opportunity also for upgrades. But having said that, the IT, which comes in SOTP pricing, the IT and other businesses, the IT outlook is tepid, which led to some decline in numbers on console basis. But net definitely considering the improvement which can happen in infra business, we have a long-term buy rating on the stock.
Kush on L&T?
Sorry, can you repeat?
Question to Kush Bora on the charts on L&T as well.
So L&T is going through the HDFC and the ITC phase, which is a longish period of consolidation phase, no returns practically for the last year and a half. So, if it's more of a positional bet in terms of, 12 to 18 month kind of an horizon, then yes, you could go ahead and accumulate. These stocks have a tendency to, go in a range and then give a spurt where you can't practically, catch them. So yes, if you have a longish view, you should look to accumulate. Positional stop at 3,200. But from a near the momentum perspective, I don't think there is much happening, and it should be avoided from a near-term trading perspective. But positional bet for sure with a stop loss around the 3,200.
Loss at 3,200. Amit, thank you so much for that. We'll come back with top trades in the last half hour of trading, but L&T is something that you need to keep an eye on. Just a quick reminder on our very special show that we're doing at 7 p.m. today, and this is something, that story that NDTV Profit is following very, very closely. As the story of TCS laying off 12,000 people grows, many questions. Is this the first company which is going to do it? Will others follow? Are IT jobs becoming redundant? Is AI going to take your job even if you're beyond the IT sector and as a worker there. What do you do if you're in the middle of your career? What do you do if you're in the start of your career and it's looking bleak? Well, we're here to help. Call us at 7 p.m. a very special show that we're doing. The number's on your screen if you want to reach out to us on WhatsApp earlier. And yeah, there's that WhatsApp number. You can just send us your message and we'll stay on that WhatsApp number a bit so that people can actually see it. You can message us on that number. We'll reach out to you. We'll also have counselors on that show where you can share your story and hopefully we can help you for more on that. We'll take a very short break. We'll be back very, very soon.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange.
Back with India market close, and the markets are holding up to that 0.5% gain, which is actually pretty good. The market breadth still looks, if I'm not wrong, decently solid. Should pull that one up also for you, because this is important. I mean, I think it is after a few days that we've had such positive market breadth. And you know, viewers, I'm happy because we spoke about this in the morning, that PCR at 0.65 was so looking at such an oversold region that this might work. Now, Kush, I know we'll talk about. Okay, I think we've gone out from Kush. We'll get in another guy and try and understand whether there is merit in trying and taking a position either via options or futures into Nifty 50 itself at 24,800. I think it's very, very important. And I think Aditya Agarwala should be joining us in moments from now, and I'll try and talk to him about that for sure. Do we have Aditya? Okay, I think we do. So just before we go to the bull versus bear segment, Aditya, thanks for joining. My question is simple. We are at 24,800. Would you initiate a fresh long in an expiry week on the Nifty at these levels? Would you also consider taking an option trade?
Good afternoon, Neeraj. Thanks for having the show. I think I will wait for markets to take out 24,850. The first line of buying was early in the morning today when markets had opened with a gap down. That is already done. We are up almost 200 points from the lows. So right now, I wouldn't be in a hurry to go long. I would take an option trade above 24,850. Then I have a clean move all the way till 25,000. So I will wait for this 50-point Neeraj to take out and then sustain above that. And then I'll be more keen to go long on the options. And I could look at 24,900, 25,000 option trade. Both looks interesting to me on the strike price. Because I'm closely monitoring the open interest build up on 24,800 call side. Once that starts to unwind, that will give me an indication that there is room till 25,000.
Okay. Aditya, can we also get your stock ideas out of the way?
Definitely. So I've got a couple of buy recommendations. So first one is Apollo Hospitals. Looks very interesting to me after a bit of an up move. Stock did cool off. Now it's getting to go up again. For a target of 76.50 on the upside, I'll be a buyer with a stop loss at 73.50 on the downside. And the second stock is Asian Paints. Here we are seeing a kind of a bottom formation for the stock. And if anybody's looking at entering this stock at current levels, it's an excellent price. Risk to reward is in favor of going long. For a target of 25.20, I'll be a buyer here with a stop loss at 23.30 on the downside. In fact, somebody can hold on to it for a couple of quarters. They're going to see very good momentum build up in Asian Paints from these levels.
Aditya, I'm just wondering if you are seeing any further excitement in Varun Beverages. We were just talking about it a short while ago. Con call statements are seeming pretty bullish, though earnings would have been maybe so-so. Do you think that on the charts, Varun Beverages is looking like it has more strength?
Oh, definitely, Tamanna. In fact, as a disclosure, this is one stock that is also recommended to our clients in the morning today. And we continue to remain bullish, beat on the stock for a target of 540 on the upside. I think so. It has room all the way till 540, which happens to be the 200 DMA. If that is taken out, 580 is also something that we're looking at. So we're playing with two targets, 540, 580 currently. At current levels also, I would advocate one can initiate a fresh long addition with a stop loss at 480 on the downside.
I just want to pull up the intraday for Motilal Oswal. A lot of action around the NSE numbers that have come. Again, NSE not a listed company, but your largest exchange. Yeah, there you go. So you're seeing some action there with margins jumping in quite a robust fashion now from 74% to 78% is what the EBITDA margins have clocked for NSE. As a derivative of that, you would maybe see some action coming in a Motilal Oswal. So I'd watch out for that capital market space for a bit as well. What requires really watching out for, and that too with pain if this is a big portion of your portfolio, are defense stocks, and amongst them Zentek finding no reprieve, and that's what we're featuring in our bull and bear segment this afternoon. The stock has faced immense pressure after a weak set of results, but the pain has not stopped on day one. For the last several sessions, you've seen a 5% lower circuit on Zen. To be fair, this is exactly the pattern Zen was showing when it was on an upward trajectory. But on the fundamental basis, what's the bull case, what's the bear case? Let me go across to Anushi for more.
Tamanna, as you've mentioned that this company has been locked in the lower circuit for the last few sessions, if you're seeing that, and it is firstly the Q1 FY26 results that come in focus. Now, if you look at the bear case scenario, it's the revenue and PAT. We have seen about a 38% of a downtick in terms of how the numbers have shaped up. Even if in terms of margins, there has been a sharp contraction over here. And this is not just the pattern that we've seen in the first quarter. Even before that, if we look at the order inflow trajectory, that has remained on the weaker side for the business. So that is something that we should be watching out on, how the Q1 earnings are panning out and how that decides the pathway for FY26, considering that they have a 50% plus CAGR growth expectation. Of course, H2 being the stronger case scenario here. Now, in FY25, we did see the company beating the guidance. But if you look at FY24, also the company had failed to meet its guidance as far as where the revenue growth was concerned. So of course that would be something that we should be watching out for. Now in terms of how the order inflows have shaped for the company, which brings us to our second point, now this is the 5th quarter in a row wherein we have looked at muted set of order inflows. In fact, if we just look at the pipeline that is there, around 25 crore or also is the kind of picture that we are looking at in terms of how the order inflows have been. Management expects about 65 crore or so of the order inflows, but this is from H2 of from the second quarter is the expectation that we can see this coming by. Of course, there had been a couple of delays also which led to the miss that we are seeing in order inflows. So second quarter expected wherein we'll see some bit of pickup from there, but overall if we see the commentary for FY26, that has largely remained on the muted side for order inflows as well, and this is despite the emergency procurement and the emphasis on other factors like the geopolitical tensions which happened as well before. So this is the bear case and the bull case scenario that we are looking in terms of how order inflows have shaped up for the company. It's the 5th quarter in a row wherein we are looking at a weaker set of numbers from this front. In the third point, if you are mentioning about Zentek, so what we are looking at is, while overall the company has seen a couple of downgrades and Nuvama has no exception over here. It has a hold rating now, the target price of 1,800. They've accounted for the growth numbers which are there, but it is important to notice how the valuations are shaping up for the business, because if we see the company after it reported its third quarter numbers also in the earlier financial year, it had seen a significant sort of a downtick because of the order inflows, the muted kind of growth that we had seen thereon. But since then it did see a decent pickup, but valuations continue to remain a concern, considering that it is trading on a multiple of 60 to 65x, and it has had a pretty solid run over these last few months. But so this is something that we should be watching out for. But on the bull case side, the company is making has already made 3 acquisitions in the last year that we are looking at, and now it has acquired 76% stake in Tessa Aerospace as well, which marks its presence in the UAV segment that we are looking at. It already has a strong presence in anti-drone segment, and now it wants to increase its focus towards the drone solution segment as well. So how that would shape up, how the order inflows would come from this particular segment is something that we should be watching out for. But currently the main takeaway for this and the main concern on the street remains on the order inflow growth for the company.
Thank you so much, Anushi, for breaking that down for us. Mr. Toklingam, I'll come to you on this one. Order inflows a concern for Zentek right now. It's not Zentek; it's also few other defense counters that are facing significant amount of pressure. There was Paras Defense; it was locked in lower circuit yesterday. Today also, it's down around 5 to 6% as we speak. And defense counters as a whole have started to see a lot of profit booking lately. Any particular counter that you are seeing attractive now to make an entry?
No, in defense, certainly not. Early part of massive rally, yes, it was explained by the fundamentals for different sector, but unfortunately, the latter stage of rally was more due to the speculative rather than fundamentally driven. And, you saw this Zentek also. Not only order inflow down, even the revenues are down substantially. PBT is down despite doing some acquisition. So I would be a seller if I hold such different stocks. I would not enter into any of these different stocks.
Okay, yeah, and some of those. But Mr. Chokalingam, here's the question, right? Post May 10th or May 11th, people were really keen to invest into defense because there was a proof of concept. Why has the tonality suddenly changed?
No, but that is not surprising. I mean, that is the way the majority of the retail investors, they
retail,
always...
right? Mr. Chokalingam, I'm sorry, but it wasn't just retail. I mean, there were order books filling up. The government upped the defense capex by a significantly large amount. And defense funds, I know, invested into defense companies post that. So it wasn't just retail, right?
Yeah, I agree. I mean, BSE stocks after it went up 15 times, 27 mutual funds entered. So I agree with you. Everybody becomes victim of this momentum. The point is, you have to have a connect between the growth in earning and the PE multiple. So as I've been saying on this channel many times, that yes, you compromise on the valuation multiple to the extent of 2-3 times, earning growth, that is a PEG ratio of 3. But some of the stocks went beyond the PEG ratio, even 3. So that is where the danger lied in these stocks. That's my understanding.
Aditya, your quick view on Zentech as well as Paras Defense, both of these counters, seeing a significant amount of pressure in trade.
So let's talk about Zentech first. I think the profit taking is likely to continue for some more time. Can slide all the way down to 1400 kind of odd levels. I will wait for the stock to form some kind of a consolidation phase zone and then maybe look at it. Talking of Paras Defense, there too, I think let it come close to about 600 odd levels, then I'll venture into the stock. My sense is all of these companies which had run up significantly will see some kind of a cool off. But longer term charts for a lot of these defense companies still remain intact and they look strong. Names like BEL, HAL, or Mazgaon Dock, or even an Apollo Microsystems. I think all these stocks can be looked at. It's a handful of stocks that one should look at within the defense counters, and that is something that I look and add in my portfolio. Not all of them, select hand few of them look interesting.
Okay, cement is in focus, and just going through the Heidelberg numbers which are on your screen right now as the first cut comes in, revenue up 12%. Remember, you're going to be seeing a spike in cement overall because this quarter has been good. Net profits also up 21%. We saw pretty good numbers from Orient, from a whole host of cement companies, honestly, and Heidelberg seems to have followed that trend. I'm just wondering, Aditya, if this is something that you have on your radar.
Oh, absolutely, Tamanna. In fact, cement as a space I definitely like, and locking off Heidelberg Cement, it's breaking out of this consolidation zone. If it closes above 220 odd levels, I think one should definitely stay put here or maybe look for a fresh long addition for a target of 240 on the upside. This entire pack looks interesting to me. Names like Ramco Cements, JK Cement, Ultratech Cement, Ambuja Cement. I think all these companies are going to give you phenomenal returns over next 1 to 2 quarters. So one should definitely look at cement as a space and allocate some funds in your portfolio to this sector.
Okay, now NSE, as we were mentioning earlier, has reported its Q1 earnings, and it seems to be a good set of numbers. My colleague Agni joins us live with more details and key highlights of the earnings.
Right, so NSE's earnings are looking robust from a first view that we are looking at the company. Revenue has risen 7% to over 4,000 crore from 3,700 crore that it reported last quarter, and even the bottom line has shown a 10% improvement to around 2,900 crore from the previous quarter's 2,600 odd crore. Remember, operating EBITDA has risen 12% to 3,130 crore, while the margin of that EBITDA against the top line has seen an increase to 78% as opposed to 74% the previous quarter. Now these numbers might look a bit good at the first read, but remember this is coming up on a slow quarter. The previous quarter was affected by a market slowdown and trading volumes impact which were being seen through the SEBI F&O regulations implemented in October last year. So remember that this might just come down to a low base effect that the numbers are looking attractive. If we talk about segmental breakdowns, then trading revenue rose 6% to 3,640 odd crore on a sequential basis, while clearing revenue rose 8% to around 453 crore from 420 crore in the previous quarter. When we talk about average daily trading volumes, which is the amount of trades that happen on the exchange, so the amount for equity futures rose 5% to around 1.7 lakh crore quarter on quarter, while cash market segment saw 14% increase to around 1.1 lakh crore sequentially. Remember, equity options through the premium value for equity options also rose 9% to around 55,500 crores sequentially. Again, to reiterate, this is building up on the back of a weak quarter. The fourth quarter of the previous fiscal was a weak one for NSE and all exchanges and market institutions across the board. So a jump from that now as market sentiment improves was expected.
Okay. And this is interesting. Now, Mr. Chokalingam, thank you, Agni, thank you so much for that, firstly. Now, Mr. Chokalingam, a question to you here. NSE at 2,500, right, is what, about 8.5 lakh crores of market cap, right? If somebody is looking at investing into it now from a 4 or 5 year perspective as a capital market theme, is that the best value for your buck, or would there be better value, let's say in infra provider like KFintech or CDSL or NSDL, which IPO is opening now? Or would you look at a wealth manager like Nuvama or a Motilal Oswal or a 360? How would you pick and choose this capital market theme?
A very interesting question. Thank you for asking it. There is no doubt, there is no comparable to NSE. Because in capital market, exchange business is a duopolistic market. Only two players are there, and NSE is, fortunately is a leader in that segment. Now, stock exchange business is a perennially growth story. You also know it. And the retail investor inflow, every week, more than 7 lakh investors are entering the market. The last 52 weeks, 4 crore new investors have entered. So the leadership in the exchange business, which is perennially a growth story, and the fact that the market structure is a duopolistic in the sense only two players are there, I don't think, honestly speaking, you can compare any wealth manager or broking company with, NSE, because in future also the entry of any new player and their growth and capturing the market share is going to be a Himalayan task. So, and secondly, the current price what you mentioned, it's around a 48 PE. I think, for a leader in stock exchange business, the kind of growth they maintained in the last 10 years, I think it's a fabulous stock for next to 4 or 5 years. Personally, we do not own it, but this is my, based on the research, I think this is a fabulous stock for the long term.
Okay. Okay, so NSE has no comparison, but BSE, we're seeing those proxy plays right now, perhaps. Welspun Corp, I just want to talk about Welspun Corp very quickly. Numbers came in a short while ago, Q1 numbers, but there's just a barrage of numbers this afternoon. So might take us some time to get to one of them and each of them, and they need a bit of focus. Welspun pointing out, because look at the 8% spike that you're seeing on the stock. Now, strong numbers, spike in margins, revenue from steel products has also jumped 14%. Overall revenues were up 13% at 3,551 crores. EBITDA up 40.4% at 525 crores. Margins, this is where it's really helped. Margins have gone up from 11.9% to 14.8%. Net profit is also up 41.2%. To add to it, there's an order revision that they have announced along with their numbers. The company has announced the upsizing of an existing coated spiral pipe order. Overall value of the order has gone up by 735 crore rupees. Execution of these orders will be during FY 26-27. Consolidated order book now stands at 19,000 crores. Order further enhances dominant market share in the US, and company's outlook for the US market continues to remain positive. Now, this is a relief considering there's so much of uncertainty in the US market coming in right now. On the charts, Welspun Corp, Aditya Agarwala.
Definitely looks very strong, Tamanna. Look at the volume and the kind of up move that you're witnessing. Can definitely test levels of 1100 or 1050 to about 1100 in the near term. And I think if somebody is looking to add fresh, can start accumulating even at current levels and on declines all the way till $900. I think so one should definitely add with the stop loss at 860 on the downside, look for a target of 1100. And if you already own it, continue to hold, shave your stop losses to 860. I think it's a very strong looking chart setup.
Aditya, anything that you're liking on the charts for Senco Gold? The stock is locked in lower circuit today, but there was a time when there were a couple of days where it was locked in upper circuit, saw good momentum. Anything on the charts that you're finding attractive or specific there?
Not really. I would avoid Senco. There are better plays to play this space. I would look at a Kalyan Jewelers as compared to a Senco Gold. I would completely give it a pass at current levels.
Okay. Okay. So charts not looking very attractive for Senco Gold is the view that Aditya has. All right. Now, Shriram Finance is in focus after the company reported its first quarter numbers, profitability in line with estimates. My colleague Vishwanath spoke to Umesh Revankar, Executive Vice Chairman at Shriram Finance. Listen into that conversation where he talks about why gold loan, being the larger chunk in the overall loan book, looks like.
Yes, I do believe gold loan can become a larger part of our overall book. We have drawn certain certain plans to make it big, and that's falling in line. Last 3 months, our disbursements were very high. In fact, we have grown disbursement by 20% year on year. But portfolio have not grown because some higher maturity, because the short-term maturity, 3 to 6 months is the maturity of the gold loan. So there was some higher maturity. I think we will be able to grow 20% year on year by the end of this year. So we do have a big plan for gold loan. And as we increase the reach, because gold loan is basically a reach, you need to be near to the customer.
Right.
And we have sufficient number of large customers, in the sense large number of customers who are taking gold loan from the outside.
Correct.
That's what, when we looked into their credit history, credit record, through all the bureau records, we do realize and recognize that our customers do take a gold loan from the other players in the market. And there will be a large number of people who will be taking from unorganized sector, which that may not be reflected in the bureau records. So we would like to address that and probably help the customers to walk into the Shriram rather than going to the unorganized market and probably benefit out of it. So that's going to benefit the customer. And gold loans are typically short-term working capital loan, which is the easiest part or the cheapest part of working capital for our kind of customers.
Shriram Finance there. I mean, I would say BFSI is not having the best day, but the recovery has been good. It is a story of recovery today. Just pull up the NSE intraday if we can before we get to the BTST ideas, because of the highs of the day on the Nifty intraday if we can, but not doing too badly at all. Actually, now nearly 0.75% up. So Nifty over the 24,800 mark very, very comfortably. Aditya, I'm going to ask you your Nifty outlook as well, but first let's start with your BTST ideas.
Tamanna, we were discussing about cement. Actually, I have a cement stock as a BTST recommendation. Ramco Cement is looking interesting to me. One can go ahead, buy the stock at current levels, look for a target of 1250 on the upside with a stop loss at 1160 on the downside. So that is my BTST idea. Talking about Nifty, I just spoke that if it sustains above 24,850, I would definitely look at going long here for a target of 25,000 on the upside. Can play both the futures and the options of 24,900 or 25,000 as well. I think in a day or two, you will see levels of 24,950, 25,000 if it sustains about 24,850. That is the hurdle that I'm witnessing right now. But looking at current structure, it looks like it will cross 24,850, maybe today or tomorrow morning.
Okay, so those are some of the BTST ideas. I'm wondering what Cipla has been doing. Let's pull up Cipla. Cipla, by the way, if you've been watching NDTV Profit today, was both our technical analysts had a call on Cipla this morning. Stock not really firing through the day, but come off its lows. I wonder if you have any interest in Cipla, Aditya, in terms of how it's performing on the charts.
Definitely, Tamanna. It's a very good setup, waiting for a breakout above 1575. The moment it closes above 1575, I think so it's heading for a new highs altogether for a level of 1800 on the upside. So definitely, I would be a buyer here, maybe add the stock in the portfolio, keep it for at least few weeks. And my sense is it will see levels of 1800 in no time.
So, wow, that's quite
confidence personified.
That's and the third person who's talked about Cipla today from a technical charts point of view,
yes,
which is why I wanted to build it up. That it's looking interesting. Choka, are you liking Cipla fundamentally or any other pharma stock? Again, that's also quite a hot space.
Yeah, it's a good stock, definitely in the large cap. In mid cap, we have given a buy rating on Syngene International compared to newly listed peer. It's extremely cheap. So these are the two stocks one can consider, Syngene International and Cipla.
Mr. Oaklingham, a quick view on Urban Fashions. It came out with its earnings. It swung back to its profitability. Last quarter, they did a loss because of one-off as well. But it's a good like-for-like growth for this particular company this particular quarter. It's around 8%, which is not something that you expect from an Urban Fashion. Anything that you're liking there? And if not Urban Fashion, anything in the retail space that you're liking?
No, not really. But Urban Fashion one can hold because management is extraordinarily talented and the long term it can give more return.
Okay, the last piece is what's happening with Vari Energies today, right? Because it went up through the day and then came off. We had an exclusive conversation with the management as well. 3169 is not a cheap stock. Aditya, somehow it faces resistance at this 3300 level, I feel. I mean, I'm not a technical expert, but I've seen it go all the way till 3250, 3300 and then come off a number of times. What's the view here on the charts?
Neeraj, you may not be a technical analyst, but you do track it very closely, so you know numbers absolutely. 3350, yes, it faces resistance around 3300, 3350 without a doubt. My sense is it is building up to crossing that level of 3300, 3350. It will eventually go to 3800. So I'm quite upbeat on the stock. One just has to give it some time. It's more of a time consolidation that you're witnessing in the stock. Matter of time before it crosses that level of 3350 and can test levels of 3800 on the upside.
Okay, Aditya and Mr. Chokalingam, thank you so much for taking our time and giving us all those insights, and have a great day. All right, we're nearing the market's end. Let's try to pull up the Nifty 50, probably at its day's high right now. There you go, up almost 0.6 odd %, so slightly off from its day's high, but almost ending at that 0.6% higher note. The Bank Nifty remains in the same range where we started, so around 0.3% upside there. Overall, in terms of, let's try to see the Nifty heat map and see what's turned around there. Geo Finance still leading the charts, up 4.7%, followed by RIL seeing gains of about 2 odd %. Asian Paints up 2% on the back of its numbers. There's Eicher Motors up almost 1.7%. Tata Steel, Adani Ports, a lot of Adani counters doing well as well. Tata Motors, Bharti Airtel, some counters doing well. Some pressure seen in Axis Bank continues. In fact, in Axis Bank, TCS down 0.7 odd %, SBI Life down 0.6 odd %. So all of these life insurance companies not doing very well. ITC, Infosys, Eternal seeing some profit booking. So that's with regards to where the Nifty heat map stands. Let's try to pull up the advanced decline ratio. You know, when earlier we were addressing the advanced decline ratio, it was like a tug of war, but now it looks like a scissor right now. There's 1600 odd advances versus that of 658 odd declines. So still that ratio is nearly more than 2:1. So that's with regards to where advanced decline ratio stands. Let's try to pull up the sectoral heat map and see how sectors have fared during the day today. Nifty Realty still at the top of the chart, 1.7% up there. Nifty Pharma did well, 1.5% there. Nifty Energy also down, up about 1.2 odd %. So all counters basically ending in green. Nifty IT almost flat there, except for the Nifty India Defence, which has seen profit booking for multiple sessions now. Let's try to pull up the BSE 500. In fact, before that, let's try to pull up the broader markets and see how broader markets are ending today. The Nifty Mid Cap 150 at almost at its day's high point, up 0.9%, nearing that 1% mark. The Small Cap 250 ending at its day's high at around 1% of gains. Let's try to pull up the 500, the overall BSE 500. Apar Industries leading the chart, up almost 12%. PNC Infra, Tata Chemicals, Affle, Welspun Corp, all good set of, a lot of these companies with their numbers as well. So very earnings specific. But some counters that have continued to face pressure during the day. There's Home First, Canfin Homes, Lakshmi Organics, as well as Zydus Wellness. So these are the overall stocks that have buzzed in trade today. But let's also take a quick look on what to watch out for and what are the cues for the day, for tomorrow in fact. Corporate actions, dividend companies that will trade at ex-dividend. There's VRL Logistics, Audinpro Solutions, BASF, JB Chemicals, as well as NOCIL. Companies that will come out with their earnings post-market hour today. Big names include L&T, Piramal Enterprises, as well as something like Lloyds Engineering, Bank of India, GMR Airports, NTPC. All of these counters to keep your eye on. Earnings tomorrow. Some counters to keep your eye on. Tata Steel, one of the biggest one there. Birla Corp. There will be something like Hyundai Motors, Interglobe, Zydus Wellness, as well as PTC India and Welspun Living. All of these counters to keep your eye on. Welspun Living, especially on the back of the UK FTA. So that's with regards to where the earnings to watch out for tomorrow. But with that, we're completely out of time on this edition of India Market Close. But do stay tuned to NDTV Profit for more news and updates on the other side.
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए ये तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए ये तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight to the show. So viewers, Nifty ended a choppy day of trade above 24,800 levels. Sensex managed to gain over 400 points. Top gainers from the Nifty 50 pack include Geo Financials, heavyweights like Reliance Industries and Asian Paints. Most sectors closed in the green today, barring defense, pharma, oil and gas, and realty lead the gains. IT and private banks post modest advances of around 0.5%. Now, this marks a sharp contrast to yesterday's market, with all the sectors ending Monday in the red except just for two. Varun Beverages reported mixed Q1 earnings, with revenue down 2.5% at 7,017 crore rupees against 7,197 crores year-on-year. This is impacted by unseasonal monsoons. However, the company saw strong volume growth in its international business. Now, this is boosting the net realization. EBITDA also rose slightly by 0.4% to 1,999 crore rupees, with margins improving to 28.5% from 27.7%. Now, this is driven completely by the operational efficiencies. Now, net profit also grew 5.1% to 1,317 crore rupees, beating the estimates. Shares of Tata Chemicals surged over 5% today after Morgan Stanley upgraded the stock to overweight from underweight. Now, this has raised its target price to 1,127 rupees from 839 rupees. Now, the brokerage sees the earnings through behind the company, citing higher volumes from the expanded capacities in India and a turnaround and also in UK operations evident in Q1. Morgan Stanley also expects stronger contributions from Tata Chemical subsidiary Rallis as the global agri cycle normalizes, with peak capital expenditure now in the past and China's soda ash prices nearing cycle lows. PNC Infratech emerges as one of the lowest bidders for a major tender floated by SECL, securing an order value at 2,956 crore rupees. Now, this project involves handling transport and other mining services over a period of 5 years. Additionally, PNC Infratech is also the lowest bidder in another significant tender by the NHPC aimed at setting up a 300 megawatt interstate transmission system. Kaynes Tech is actively expanding its portfolio with multiple stake acquisitions. So the company acquires a 76% stake in Aerocalif Components and aerospace manufacturing firm, investing 60 lakh rupees. Also, Kaynes buys a 76% stake in Cryo Precision Technologies for 7 lakh rupees. Now, the company also purchases an 11% stake in Transmeo IT Solutions, investing 43 crore rupees. NTPC reports a stable margin outlook but expects slow profit growth in Q1. Revenue is also projected to rise slightly by 0.4% to 48,746 crore rupees, while EBITDA increases 6.35% to 14,283 crore rupees. EBITDA margin remains steady at 29.3%, up from 28% last year. However, net profit is seen falling by 1% to 5,450 crore rupees, pressured by higher interest costs. Now, key highlights includes marginal revenue growth driven by better tariffs and new capacity, though power generation declines 12% year-on-year due to weak demand. IndusInd Bank posts a weak Q1 with profit plunging 72% year-on-year. Loan book also shrinks, deposits dip, and asset stress deepens. So GNPA spikes 13% quarter-on-quarter. Microfinance NPAs also hit double digits. Margin steady, but growth and credit traction remain poor. Mixed views emerge as brokerages weigh in on the IndusInd Bank's recent earnings and operational concerns. Bernstein remains the lone optimist with an outperformed rating and a target of 1,000 rupees. So bearish voices dominate, with Macquarie and Morgan Stanley rating the stock underperform and underweight respectively, with targets of 650 rupees and 750 rupees. So Citi takes the most cautious stance, with sell rating also pegging the target at 750 rupees. L&T is poised for strong growth in Q1, with revenue expected to rise 14% to 62,814 crore rupees, and EBITDA also increasing 10% to 6,342 crore rupees. Now, margins are likely to remain steady at around 10.1%, while net profit is set to jump 22% to 3,400 crore rupees. Revenue growth is driven primarily by the domestic business, with order inflows led by power transmission and distribution, as well as buildings and factory sectors. Mascot Talk posts solid revenue growth in Q1, but profits tumble on heavy provisions. So EBITDA plunges 53% year-on-year as cost escalations hit the margins. Net profit also down 35% despite strong order book visibility. Zentech was locked in a 5% lower circuit for the second straight day, down 10% in just 2 sessions and 19% over the past month. So the defense tech firm's Q1 results missed the expectations, with revenue dropping 37.9%, which is nearly 38%, to 158 crore rupees, and EBITDA falling 42% to 64.7 crore rupees. Now, margins contracted to 41%, and net profit also slid 38% to 47.8 crore rupees, impacted by higher other income. Now, a slowdown in the order momentum persists for the 5th consecutive quarter, with management expecting a muted FY26, but banking on the stronger Q2 inflows to revive this growth. Tata Consultancy Services, India's largest IT firm, is freezing senior hiring and pausing annual salary hikes globally, citing trade and macroeconomic uncertainties, according to an internal email. So Q1 of FY26 results were hit by political tensions and weak demand, prompting significant cost-cutting measures.
Lateral hires face onboarding delays exceeding 65 days, and also, all such hiring is now frozen. So the move is part of a silent restructuring over 2 quarters, may set a trend for other IT firms as well. Omax secures 500 crore rupees in funding from Oaktree Capital Management to accelerate delivery timelines across its residential, commercial and public-private partnership projects. So the company has repaid a net 1,285 crore rupees over the past 2 years, successfully reducing its overall net debt to 300 crore rupees. Now, in the fiscal year 2025, Omax achieves property sales exceeding 3,000 crore rupees, reflecting strong market demand and operational efficiency. Vari Energies delivers a strong quarter one, with robust revenue and profit growth. Margins expand sharply year on year. Other income also boosts bottom line. Module production hits the record 2.3 gigawatt as capacity ramps up. So the order book remains solid at 49,000 crore rupees with expansion underway. Paradeep Phosphates delivers its best quarterly profit in over 3 years. Revenue surges nearly 58% year on year. Margins double to 12.4%. EBITDA triples on strong operational performance. Net profit also skyrockets 47 times year on year to 256 crore rupees. Torrent Pharma delivers a solid quarter one performance, meeting market estimates with strong growth across key branded markets. India revenues rise 11%, driven by outperformance in the focus therapies. So Brazil and Germany markets each see an 11% and 9% revenue increase respectively, while the US business also grows 19%. So overall, the revenue climbs 11.2% to 3,178 crore rupees. Citi maintains a buy rating on Torrent Pharma and raises the target price to 4,380 rupees. Now, the company reports a healthy and inline quarter, showing solid traction across its key markets. Adjusted EBITDA margin stands strong at 32.9%, which is nearly 33%, which Citi expects to be the minimum level of margins in the coming quarters. So the outlook is positive, with operating leverage benefits seen in the branded segment, along with a recovery in the US market, supporting sustained growth and profitability for Torrent Pharma. BEL gets a thumbs up from top brokerages despite a revenue miss. So margins shine in quarter one. Order wins remain strong and ahead of the guidance. FY26 outlook intact, with 57,000 crore rupees inflow expected. Now, capex plans over 1,000 crore. Defense mix stays dominant. NTPC Green posts a steady quarter one performance with strong revenue growth and stable margins. Consolidated revenue rises 17.6% to 680 crore rupees, while the EBITDA increases 17.7%, which is nearly 18%, to 604 crore rupees. Now, keeping the margins flat at 88.7%, net profit surged 59% to 221 crore rupees, supported by a significant jump in the other income, which climbs to 89 crore rupees from 21 crore rupees last year. RPSG Ventures stock surged 4% in intraday trade today after its arm, RPSG Sports, finalized a deal with England and Wales Cricket Board to acquire a 70% stake in Manchester Originals for approximately 945 crore rupees. So the share purchase agreement signed in February makes the cricket franchise a subsidiary of the RPSG Group. RPSG Ventures operates a diversified portfolio spanning its services, business process management, FMCG, real estate and sports, with this move strengthening its global sports presence alongside its ownership of the IPL's Lucknow Super Giants and SA20's Durban Super Giants. Chemplast Sanmar post another weak quarter with revenue down and margins collapsing. Net loss widens to 64.3 crore rupees amid sustained operational pressure. Performance has deteriorated steadily over 5 quarters, losses in 7 of the last 9. Amansa Capital also holds a 7% stake in despite continued underperformance. CLSA initiates outperformed rating on Radico Khaitan and sets target price of 3,098. Now, the brokerage sees Radico as a premium spirits player with relatively lower regulatory risk. So it notes ongoing premiumization and product mix improvements and are also driving a projected 265 basis point expansion in the EBITDA margins between FY25 and FY28. ONGC has inked a joint operating agreement with BP Exploration and Reliance Industries to explore offshore block in the Saurashtra Basin. So covering 5,454 square kilometers, ONGC will lead the operations to assess and develop the block's hydrocarbon potential. The Income Tax Department has launched a nationwide crackdown on fraudulent exemption and deduction claims as the ITR filing deadline nears, issuing notices to taxpayers for suspicious refunds. So the Central Board of Direct Taxes directed officials to flag and suspend dubious claims, focusing on the chartered accountants and agencies promising inflated refunds via fake expenses, disability and medical claims. So over 40,000 taxpayers withdrew 1,145 crore rupees in bogus claims after AI-driven verification. So the department warns of penalties and prosecution, urging accurate filings. So the ITR deadline for FY24-25 is September 15, 25. Larsen & Toubro has secured an order valued at over 15,000 crore rupees from a client in the Middle East for its hydrocarbon offshore business. The contract is won by its subsidiary L&T Energy Hydrocarbon Offshore. The deal involves multiple offshore packages covering engineering, procurement, construction and installation of offshore structures, as well as upgrades to existing facilities. So the company stated that this project highlights L&T's capabilities in the offshore oil and gas EPCIC solutions and also aims to strengthen its position in the Middle East. Lenskart Solutions, which is backed by SoftBank, has filed draft papers for an initial public offering. Now, this will include a fresh issue of up to 2,200 crore rupees and an offer for sale of up to 13.2 crore shares by the existing shareholders. So, key investors, including Kedara Capital and Alpha Wave Ventures, will offload part of their stakes. Promoters currently hold about 20% stake, while public shareholders own nearly 80% on a fully diluted basis. Lenskart reported a 23% revenue increase with a 14.7% EBITDA margin and a net profit of 297 crore rupees. So the company currently has a cash balance of 865 crore rupees and has not declared any sort of dividends in the recent years. UBS Wealth Management anticipates double-digit earnings growth for India Inc. Now, over the next 2 years, in a conversation with NDTV Profit, Chief Investment Officer at UBS Wealth Management noted that the NSE Nifty 50 index experienced only single-digit earnings growth in the financial year of 2025. He explained that when markets emerge from a period of low earnings, valuations multiples typically increase first, which is followed by earnings growth. Now, he notified that this is a signaling positive outlook for investors in the Indian market. Jane Street has clarified that its controversial Indian option trades were a response to an overwhelming retail investor demand. So the firm is defending itself against SEBI's allegations that it manipulated prices by taking large positions in stocks and futures to influence the index options. So Jane Street, which placed 4,840 crore rupees in the escrow following SEBI's charges, claims that its trades were standard market-making activities amid a surge in the retail options trading, especially on January 17th of 2024. Now, its most profitable day during the investigation. Jagatjeet Industries has started commercial production at its new grain-based ethanol plant in Punjab. The plant, with a capacity of 200 kiloliters per day, is expected to generate an annual revenue of 550 crore rupees at full operational capacity. The company also clarified that at maximum output, it will supply 65 to 70 million liters of ethanol annually to oil marketing companies. Microsoft has suspended its services to Nayara Energy, which is an Indian oil refiner backed by Russia's Rosneft. Now, Nayara Energy disclosed the licensed that Microsoft's move is pretty much abrupt and unilateral suspension of the critical services. So according to Nayara's statement, Microsoft is restricting access to its own data, proprietary tools and products. Now, despite these being acquired under fully paid up, IMD has issued a red alert for the capital as heavy rains batter the city, causing severe waterlogging and traffic chaos in few areas. It issued a red alert in southeast and northeast NCR and a yellow alert in southwest and southeast parts of NCR. Union Home Minister Amit Shah confirmed in Lok Sabha that 3 Lashkar-e-Taiba terrorists behind the Pahalgam attack, which killed 26 civilians, were neutralized in Operation Mahadev in Srinagar. The terrorists, identified as Suleiman Shah, Afghan and Gibran, were tracked using a Hawaii satellite phone and confirmed via forensic evidence, including ballistic matches of recovered rifles. So Shah noted that food suppliers to the terrorists were detained and aiding identification. He criticized Congress leader P. Chidambaram for questioning Pakistan's involvement, asserting India has sufficient evidence. The Supreme Court has upheld the redevelopment of Mumbai's Motilal Nagar under the MHADA Construction and Development Agency model. So the decision affirms MHADA's plan to redevelop 143 acres. The division bench dismissed challenges from resident associations supporting the Bombay High Court's earlier ruling. The redevelopment, given special project status by the state government, allows for 1,600 square feet of built-up area in exchange for about 230 square feet. So the project is expected to rehouse around 3,700 residents in modern apartments and upgrade commercial spaces, with MHADA maintaining full control over the land ownership. The estimated cost is 36,000 crore rupees, targeting completion within 7 years. Just hours after agreeing to a ceasefire, Thailand has accused Cambodia of violating the truce along their disputed border. So Thai forces claim that Cambodian troops launched attacks into Thai territory, undermining the peace efforts brokered in Malaysia. The flare-up, centered around ancient temples, has already claimed 38 lives and displaced nearly 3 lakh people. A gunman armed with an assault-style rifle killed 4 people, including a 36-year-old NYPD officer in a midtown Manhattan skyscraper at 345 Park Avenue before fatally shooting himself. So the officer, Didarul Islam, a Bangladeshi immigrant, was hailed as a hero by Mayor Eric Adams. The shooter, 27-year-old Shane Tamura from Las Vegas, had a history of mental illness and no significant criminal record. The attack began in the lobby, moving to the 33rd floor of Rudin Management's offices. The highly anticipated India versus Pakistan clash at the Asia Cup 2025, which is set for September 14th in the UAE, is facing intense backlash following the Pahalgam terror attack. Despite calls for a boycott from fans and political figures, sources confirm NDTV that the match will go ahead as part of the multi-nation tournament. The first trailer for James Cameron's Avatar, Fire and Ash, set for release on December 19th of 2025, has sparked a frenzy after leaking online ahead of its theatrical debut with the Fantastic Four. Fans are raving about the stunning visuals, new tribes and intense battles. However, the exclusive in-theater trailer rollout has drawn backlash, with some fans frustrated over the limited access. Well, with that, viewers, it's a wrap on this edition of Market Express, but please stay tuned to NDTV Profit.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising.
Market ends higher with both the benchmarks closing more than 0.5% in the green. All sectors except defense close higher with the Nifty Realty as a top gainer. Mid and small cap indices outperform. Indian currency rupee ends at a 4-month low against the dollar, lowest since the 13th of March. NASSCOM warns that more layoffs are in the offing across the IT sector. This comes after TCS announced retrenchment of 12,000 employees. TCS is likely to freeze senior hiring and has paused salary increases globally. Income Tax Department cracks down on bogus refund claims, instructs investigating officers to actively identify and halt questionable claims. Sources say recovery action will follow in cases where refunds have already been disbursed. NCLT Ahmedabad admits Blue Smart Mobility into insolvency after Catalyst trusteeship files a case for unpaid dues of about 1.28 crore rupees. Rani Kapoor demands closure on her son and late businessman Sanjay Kapoor's death, says Sona Comstar's legacy must be passed on and the roots must be honoured. Nestle CEO Suresh Jayaraman clarifies in the Cerelac sugar levels issue, says it's made to global standards and is given a local flavour, reiterates that there is no sugar issue as far as Cerelac is concerned. Stormy Parliament session continues as Amit Shah hit out at P. Chidambaram after he asked for a proof that the terrorists killed in Operation Mahadev were from Pakistan. Says opposition is giving Pakistan a clean chit. Hello and welcome viewers, this is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour, we will be bringing you the latest on markets as well as national and international news, so stay glued. The first one on the news list today is how the markets fare today. Benchmarks have snapped a 3-day losing streak after Nifty closed above 24,800 levels, while the Sensex ended more than 400 points higher. All sectors, barring defense, closed in the green, with realty and pharma gaining the most. Broader indices outperformed the benchmarks. And now I'm being joined by Puneet, my colleague, who's going to give us a detailed analysis on how the markets fare today.
It was a stellar day for the Nifty because we saw the recovery of almost 200 to 230 points on the Nifty 50 today. This was led by a bunch of stocks like Geofinancial, L&T, as well as something like a Reliance as well. And it's a key support level for the Nifty to end about 24,800, and we've done that today. Apart from that, we saw some large cap stocks like Asian Paints also react positively to earnings. The stock ended up 2% after its earnings came during market hours. The Nifty's close is higher after falling for 3 straight sessions, and hence the bullish momentum going forward as well. Among sectoral industries, barring the Nifty Defense, which was under pressure right from the onset, we've seen Nifty gaining more than 200 points. The Nifty Realty was also up 1.5% in trade today, and that's led by Oberoi Realty as well as Brokerage Properties within the index. Apart from that, Realty, Metal, Pharma and Oil and Gas, all these sectors also gained more than 1% in trade today. The Nifty Realty also snapping its 5-day losing streak momentum, thus indicating that we could see some buying flows going forward as well. Finally, in terms of stocks in the Nifty FMCG as well, it's gained for the second straight session, and it's important because we've seen some earnings like Nestle really hampering down on the index, but some positive momentum seen on stocks like Varun Beverages amongst others could mean that consumption could be coming back for the country as well. But overall, a really strong number for the Nifty 50 today, ending above 24,800, and sets us up well for the session tomorrow.
Right, a strong performance by the benchmarks today. The market, although, hasn't moved much in the past year, but earnings have grown steadily, up around 8%. That's the word coming in from Prateek Agrawal, MD and CEO at Motilal Oswal Asset Management. He highlights that the gap between valuations and fundamentals could narrow in the coming months. Let's listen in.
One thing about index is that it keeps changing composition, and with it, valuations also change. But if we look at our index over last 1 year, index has gone nowhere, while earnings have expanded 8%. And this has happened while you have got 100 bp of rate cuts, much improved liquidity, all at the same time. So it is surprising. We should have done better, but we hence stay hopeful for the next period. In the market, it is almost never that things go lockstep. Maybe then the next period springs up.
And let's now get you some updates on IPOs. Lenskart Solutions has taken the first formal step towards going public. The eyewear company has filed its DRHP with plans to raise about 2,150 crore rupees through a fresh issue and an additional offer for sale of over 13 crore shares. My colleague Agni Dev now joins us for more details.
The SoftBank-backed eyewear brand Lenskart has filed draft papers for an initial public offering. Now, the company will be offering primary capital worth 2,150 crore, and there will be an offer for sale by existing investors. The offer for sale will be for 13.2 crore shares, and the company can also consider a pre-IPO placement of up to rupees 430 crore. Now, from the selling shareholders, Piyush Bansal, the co-founder, will sell over 2 crore shares, while other co-founders including Amit Chaudhary and Sumit Kapahi will sell 28.7 lakh shares each. Remember that the company also has SoftBank as an investor, so SoftBank affiliate SVF2, which is a fund that SoftBank owns, will be selling 2.6 crore shares, while Kedara Capital and Alpha Wave Ventures will also be offloading a part of their stake. Currently, promoters hold around 20% stake in Lenskart, while public entities hold 80% stake. Piyush and Neha Bansal currently hold over 18% of the total stake, while SVF, which is a SoftBank affiliate, owns over 15%. Now remember that the total issue size will be around 26% in the company, and which values the firm at nearly 10,900 crore or nearly $1.25 billion at the recently transacted price. This is the DRHP. The company will go through more deliberations. There might be changes in the RHP, but this is a developing story, and over the days we'll keep bringing you more updates.
Right, Agni, thank you so much for that. And viewers, Lakshmi Finance's IPO is now open for investors to bid on. This offering aims to raise a significant amount, combining a fresh issue of over 1 crore shares valued at 165 crore rupees, along with an offer for sale from its promoters worth 89 crore rupees. The company has set the price band between 150 to 158 rupees per share. Let's now go across to my colleague Sanjeet Manghat for all the key details.
This is a NBFC which primarily operates in the central India, which is Rajasthan, Gujarat, Madhya Pradesh, Chhattisgarh and UP. So it's basically looking into MSME loans and secured vehicle loans. In that area, 80% of its loans come from MSME, and so it's basically a tier 2, tier 3 kind of of a lender for many of these MSMEs there. If you look at the total issue size, it's basically 165.2 crores and OFS of roughly 89 crores, so total size of 254 crores, and that gives a company a market value of nearly 825 crores at the upper end of the price band. On the financial point of view, it's been growing at a healthy rate of 35-36% CAGR for the last 2 to 3 years. Net interest income grew by nearly 43% in FY25. It had a PBT growth of 38% and NIMS at a healthy 9.73%, which has grown from 9.23% in the previous year. ROA of 3%, which is a good ROA in this industry. And if you look at the gross NPAs for the company, it's around 1% and net NPAs at 0.33% there. What's the weakness which is there for the company? It has seen in the last 1 year credit loss increasing in FY25 to 0.99%, and that's something a worrying thing. And also the exposure to MSME segment is also a worrying thing, because we've seen a lot of banks and NBFCs talking about the stress coming in there. The positives for this is the strong ROA at 3% and the price to book value at two times, and that gives the company a reasonable valuation at the current IPO price of 158 rupees.
Shriram Finance has been in focus after they posted their first quarter numbers that mostly came in line with estimates. Post their results, my colleague Vishwanath Nair sat down with Umesh Revankar, Vice Chairman of the company, to understand various facets of the business. Let's listen into the part where Revankar talks about his outlook on the bank's rural customer base.
When I say rural, I covered semi-urban also, because semi-urban, rural, not big difference in their behavior. Most of their income comes out of the agri economy. So I do really see this, because what happened is, even if you take beyond the grains cultivation, you take a plantations like a rubber, coffee, cashew. These are all cash spices. They are all doing well, and they are able to export. So India's exportability has gone up significantly. And coffee, especially, the other major producer is Brazil. They are having a challenge of, I think it is mostly drought there, and they have a problem. So most of the produce which India can produce additionally, I think it has a good international market. That is also a big plus for earning additional income for the agriculturists. So generally, I think the environment is quite positive.
The situation for India's tech sector and its employees continues to remain grim. Day after IT giant TCS announced that it would lay off 12,000 of its employees, reports suggest that the company is now planning to freeze hiring of senior level employees and pause annual salary hikes globally. Meanwhile, industry body NASSCOM has said that India's IT sector is at an inflection point and that more job cuts are likely in the near future. My colleague Puneet now joins us to give us a sense of what's happening in TCS currently.
Well, essentially there is an absence of growth, and that's clearly indicating from the multiple developments happening in the last 2 days. So as you rightly said, there's a freeze now in hiring of experienced personnel and a pause on annual salary increases globally as well. It's something that TCS had said at the end of Q4 that they will be delaying the wage hikes, which generally happen between April to June of every year. Now, that is also under pressure and could be a contention of how long would that delay happen, because while delays have been a key aspects of Infosys and Wipro in the past as well, this is the first time for TCS to do that. The other aspect which analysts are also mentioning is that TCS's move may be adopted by the other companies and increase the headwinds in the sector. That was a key update. The other one is the onboarding delays for those with experience is now exceeding 65 days for TCS. This generally happens between 35 to 40 days. So we've already seen a delay there, and it goes back to what happened during the pandemic in sometime around 2022 when excess hiring was done and people were given offer letters but they weren't onboarded, and we seem to be going back to that time now because of the absence of growth.
And viewers, at NDTV Profit, we are tracking every development in the story closely. So if you or someone you know has been hit by these recent layoffs, do join us live at 7 p.m. for our special coverage with experts, where we decode on how you can navigate this layoff storm. And on to an exclusive story. The tax department is taking strict measures to prevent fake or bogus tax deductions and exemptions. They're doing this by identifying and flagging suspicious tax returns. This is necessary as there's been a concerning surge in fake tax claims this filing season. Now, to give us more details on how exactly will this crackdown work, let's go across to my colleague Shrimi Chaudhary.
Clearly a crucial piece of information for taxpayers while income tax filing season already began. The Central Board of Direct Taxes has asked investigators across country to take action against those taxpayers who claim bogus exemption and deduction as well as refund in their tax filing this season. In a very strongly worded letter seen by NDTV Profit suggesting to suspend those tax return where there is a suspect of bogus claims, and in fact prepare a list of such taxpayers to take action until the investigation conclude. Now, another important instruction coming with respect to initiate recovery proceeding where the returns have been already processed and refunds are issued. The move coming at a time when there is a spike in such cases where people are kind of exploiting the loophole in the system, using certain section, a lesser known section rather, to claim their deduction and exemption to escape the scrutiny. Now, this is a part of the bigger crackdown of the income tax department, which has been seeing the growing instances of such bogus claims, and in fact this is coming at a very crucial time ahead of the deadline. Remember, September 15th is the deadline for salaried and HUF to file their return, and for businesses subject to audit, October end is what the deadline for them. So ahead of those deadlines, the income tax department is trying to kind of plug those loopholes and try to sort of convey a very stern message to taxpayers that be very careful while you claiming your exemption and deduction in your tax filing.
Thanks for that, Shrimi. And Blue Smart Mobility has been admitted into insolvency by the NCLT Ahmedabad. This development comes after Catalyst Trusteeship filed a case over unpaid dues totaling to 1.28 crore rupees. My colleague Charu now joins us with more details on the case.
So the National Company Law Tribunal, the bench of Ahmedabad, has come out with an order. The order was passed yesterday, saying that they are admitting Blue Smart Mobility, which is the cab hailing service, into insolvency. Now, this has been, a case that is being admitted on the plea of Catalyst Trusteeship, and this was for the default of about 1.28 crore rupees and slightly more than that possibly. So what has happened here is that this was not the first case that was filed before the NCLT NCLT bench of Ahmedabad against Blue Smart. Several other, creditors had also come ahead saying that there was some unpaid dues and payment issues that they were facing against the company. Apart from this, NPV Insolvency Professionals has been roped in to act as the interim resolution professional, and these are the people who are based out of a firm that has dealt with over 500 insolvencies as well. Apart from this, we must understand that a moratorium has been imposed. That means the company will have to go on as a going concern, and not a lot of assets can be taken away from them, and the transfer of such assets is something that will be dealt with under scrutiny. And another important thing is that the creditors have to submit about 10 lakh rupees to the interim resolution professional to keep the company going as going concern is concerned.
Right, Charu. We've also learnt that Gensol Engineering is inviting bids to lease out a substantial fleet of approximately 4,000 pre-owned electric cars. Now, these vehicles are available for lease in key urban centers, specifically in Delhi NCR and Bengaluru. Could you tell us more about this development?
So again, so this is very interesting that Jaggi brothers, who are also the promoters of Gensol as well as the ones who founded Blue Smart, are the people behind both of these companies. Now both of these companies are facing insolvency proceedings before NCLT Ahmedabad, and while Gensol Engineering is going through several insolvency proceedings and several applications about failure of payment of dues, it is also announcing sale of about 4,000 electronic vehicles and inviting bids for their sales through advertisements in newspapers. Now, once again, I would like to reiterate that this is for the 4,000 pre-owned electric cars that were part of their fleet, and they have also invited bids for leasing them. So let's see how it further rolls out. The location, as per the advertisement, is for Delhi NCR and Bangalore.
Right, Charu, thank you so much for getting us an update on both those crucial stories. And moving on, viewers, nearly a year after the Cerelac controversy hit Nestle, in an exclusive conversation with NDTV Profit, Nestle India chairman Suresh Narayanan reiterated that there is no sugar issue in Cerelac and that the baby formulation is safe for consumption. Remember, back in 2024, Nestle was accused of having high added sugar content in Cerelac sold to developing nations, including India. Now, in this exclusive interview with us, the Nestle India head clarified that the product is made to global standards and that the sugar content was modified to give it a local flavor. Listen in to that exchange, and for the full conversation, tune in at 6 p.m. only on NDTV Profit.
There was another, I would say, crisis more recently on baby food. And in age of social media, then it expands very quickly. And then it turned into this whole thing about, is there more sugar for Indian babies versus European babies? Tell us about that.
Look, I think, any formulation that is done for any category of human beings at Nestle follows a global standard and a understanding and appreciation of local regulatory requirements as well. So it's not that there is one single stuff that is made and bandied across the whole world. It is made to global standards, made to global specifications on nutrition. The Cerelac that we sold in India is a Cerelac that has got all the specifications that are vetted by the FSSAI. And the FSSAI incidentally doesn't do it idly. It does it with Codex and with other organizations, and they're pretty stringent about it. It's a very scientific body that I respect a lot because they apply the principles of science in determining the standards. Our levels of sugar were at 40% or less than 40% of the permissible levels of sugar that were allowed as per law. Right? So there was no excess sugar or there was no sugar issue as far as Cerelac was concerned.
And the monsoon session of the parliament is underway, and in a reply to the opposition's comments, Union Home Minister Amit Shah confirmed in the Lok Sabha that 3 Lashkar-e-Taiba terrorists behind the Pahalgam attack, which killed 26 civilians, viewers, were neutralized in Operation Mahadev in Srinagar's Harwan jungles. The terrorists, identified as Suleiman Shah, Afghan and Gibran, were tracked using Hawaii satellite phone and confirmed via forensic evidence, including ballistic matches of recovered rifles. Listen in to a snippet of the Home Minister's speech.
22 मई को आईबी के पास एक ह्यूमन इंटेल आई और एक क्षेत्र के अंदर, दाची गांव क्षेत्र के अंदर आतंकवादियों की उपस्थिति की सूचना मिली। आईबी और सेना द्वारा दाचीकाम क्षेत्र में अल्ट्रा सिग्नल कैप्चर करने के लिए जो इंस्ट्रूमेंट हमारी एजेंसियों ने बनाए हैं, इसके द्वारा इस सूचना को पुख्ता करने के लिए मई से 22 जुलाई तक लगातार प्रयास किए गए। ठंड में ऊंचाइयों पर हमारे सेना के अधिकारी पैदल इनके सिग्नल प्राप्त करने के लिए घूमते रहे, आईबी के अफसर भी घूमते रहे, सीआरपीएफ भी घूमती रही और मान्यवर 22 जुलाई को हमें सफलता मिली। सेंसर्स के माध्यम से आतंकवादी होने की पुष्टि मिल गई। तब 4 पैरा जो हमारी सेना का एक हिस्सा है, उसकी नेतृत्व में 4 पैरा के जवान, सीआरपीएफ के जवान और जम्मू कश्मीर पुलिस के जवान मान्यवर एक साथ ये आतंकवादियों को घेरने का काम किया। सेना, सीआरपीएफ, जम्मू कश्मीर पुलिस की मीटिंग भी की गई। जो 5 ह्यूमन एसेट्स थे उनको भी वहां बेचा गया और कुल मिलाकर कल जो ऑपरेशन हुआ, इसमें हमारे निर्दोष नागरिकों को मारने वाले 3 आतंकी मौत के घाट उतार दिए।
And with that, viewers, that's all the time we had on this edition of Profit 360. But do stay tuned to the channel as we continue to give you a lot more news and updates.
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात में खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? Hello and welcome. You're watching KYC. I'm Harsaita. Today we're going to look at an interesting company from a perspective of stock price performance. It's been up 2x since the 2nd of May of this year. So it's given stellar returns to investors. Been a fabulous rally in the stock. What's leading to that rally is what I'd want to first off know. Second, we're talking about Sterlite Tech and therefore the optic fiber business is going to demerge and we're going to try and understand, or rather the optic fiber business is going to be the existing business of the company and we're going to see a demerger of its global services business. Now what does that demerger essentially lead to and what are the opportunities now with regard to that demerger is what I'd want to explore. Is Starlink a potential client? That's going to be a big one if that is the case. So you want to understand whether that is actually the case or not. The other one is the opportunities. There's a BSNL contract as well as BharatNet, which is a large investment which will come through. Both of those are big opportunities, but given this demerger, how much of an opportunity is that for a Sterlite Tech and how much for the demerged company Sterlite Networks, which is yet to take shape and take form, right? So I'd want to know what the opportunity on each of those individually looks like. In terms of the optic fiber business, there has been a build-up in inventory in the US, which has led to some bit of tepidness with regard to the numbers over the last maybe year or so. Is that unwind actually happening? Are we seeing that unwind? How real is it? what could the impact of that unwind be and what could the timing of that unwind be? And therefore, how does Sterlite Tech take opportunity from that? The other piece is with regard to India. The capex cycle now likely at the fag end, so you might well see a slowdown in the India business. What does this lead to in terms of numbers, and how is Sterlite Tech placed to actually deal with that? There is also a huge debt which has been a drag on the numbers. We'll look at the numbers and I'll explain what the debt picture looks like. Now, in terms of that, what is the glide path with regard to debt going forward, and what is the impact of the debt falling on both EBITDA, maybe not on EBITDA, but more so on bottom line, which is on profit after tax. Now, the last one is this: growth and margin guidance in the optic fiber business. Found it difficult to actually find that kind of guidance. There's very generic guidance available. We'll try to quiz management on specific guidance if they have any. So all of that and more on today's KYC. Let me start off, as we always do, with what the company does and give you a quick snapshot of that. It's a global leader in the optical fiber and cables business. So that's what Sterlite Tech does. In terms of manufacturing, it has manufacturing facilities in 5 countries and sells to over 100 countries. The key focus area, of course, is telecom, but outside of that now, data centers could be the new lever. Digital networks is also the other lever. The recent demerger, of course, of the services business, we spoke about that, is now going to be demerged to STL Networks. How quickly does that demerger come through is the other question which I would have. In terms of product, and we'll break this down, you have the optical fiber cables, which is the core product. It's around 22% of the top line of the company. Optical fiber, which is raw glass fiber, is around 14% of the turnover. Copper or telecom cables is around 18% of the turnover, and optical interconnect, which is connectivity solutions, is around 12% of the turnover, has a slightly higher return on capital employed. So any positivity on that business will lead to a bit of an uptick with regard to ROC. And then there's a relatively smaller business called STL Digital, which is software, cloud, AI. It's got a smaller revenue size in comparison to some of the other core products which Sterlite Tech does. In terms of the business model, it manufactures, as I said, in 5 countries, including India, USA, China, Italy, and the like. You also have it selling not just domestically but also internationally. 30% of the top line comes from international, and of course it'll have a whole plethora of clients. It's highly integrated in terms of raw material to finished goods, fairly integrated process, but copper could be the one big variant here or variable factor here. Of course, key competitors among others is Himachal Futuristic, but also an HFCL, for example. And then there are lots of Chinese players, and global competition is quite high in this space. And that leads to a little bit of pricing pressure as well in bad times globally. So whenever there's a global slowdown in terms of capex on the telecom front, you start to see the pricing start to chip away, which also impacts margins. So it's a cyclical kind of a commoditized kind of a business, largely because you have a lot of Chinese players and global players present, and therefore any slowdown, cyclicality causes an impact with regard to numbers. Now, in terms of raw materials, the main raw material, of course, is copper, but you also have silicon. That's the other one. So the sourcing happens globally. It's LME linked, so and therefore highly commoditized. The price or availability risk is high. It's mitigated, of course, by local sourcing, and there's some active risk management which the company also does. There is some, of course, commodity risk which is very, very evident from the kind of raw material sourcing that happens. Pass-through, of course, is a challenge because that depends on what I just explained in terms of how the global competitive landscape is playing out and how pricing is playing out there. So it's all about scale in this business. If you can scale it well, then you're well placed with regard to the margin levers that you have are far greater in comparison to some of the other competitors. And Sterlite Tech is one of the top 3 players in this space, and therefore has that advantage but also has certain disadvantages. And for that, we have to look at the key metrics. And let's quickly break that one down. Let's understand first off, starting with the income statement. We'll thereafter look at the balance sheet, the cash flow, the return ratios, as we always do. Thereafter, we'll look at shareholding, street cred, valuations, and outlook. We'll cover all of those on KYC for Sterlite Tech. Let's start off with the income statement. And you'll have to take this with a little bit of pinch of salt, and I'll explain this. FY23 is the combined business number on the top line, so is FY24. FY25 of 3996 crore is just the optic fiber business. So if I were to take a comparable number, and that's why we've not given a CAGR number as you can see on your screen, but if you were just to take the comparable number FY24 versus FY25, it's a flat line with regard to the top line, right? So that's how the top line has evolved. Margins are largely 10%. So FY25 is now the new base with regard to where the numbers are concerned. I also want to highlight the one possible key positive here is the fact that your interest payments in FY25 was 241 crore. So that negative net loss or net loss of 123 crore, if I can call it, largely driven because of that interest cost being extremely significant. And you look at the interest coverage ratio, so which is the interest over EBITDA, that too is quite elevated, because what you're seeing is the interest cost is so high, it's virtually covering 50-60% of the EBITDA, and which is not a healthy sign. But that's FY25. FY26 will show us a slightly different picture in that sense. And let's pull out those numbers, and that will give us some perspective. The FY26 income statement, or the Q1 FY26 income statement is largely driven by a 17% top line growth. The EBITDA has shot up substantially from 64 crore, it's up to 132 crore. Margins have inched up as well. And what you're seeing on profitability is also quite strong. It's a 10 crore profit. So from a loss of 120, it's come to a 10 crore profit. The question will obviously be how sustainable. You don't want to look at those QOQ and YOY numbers with regard to profit, because the erstwhile number is actually a loss, and therefore you want to remove those. In terms of the margin trajectory as well, let's pull that up. There you go. So you're looking at margins which were sub 13% in FY22. They fell to 10% in FY24, FY25, and have now rebounded towards the 13% mark. The question is, there is an aspiration to increase margins. The question is, how much can they do that? How much bandwidth and how many levers do they have to actually increase the margins and therefore increase likely profitability? We've given this a neutral because it's a fast evolving environment at this point, both on the top line as well as on the margin number. You're seeing so much variability, it's difficult to quantify exactly where it will go. The other question also is that how sustainable and what kind of a sustainable number can we arrive at where the margins are concerned. So all of those questions we'll try to get answered and get a better perspective on that. But let's quickly move to the balance sheet. And you're looking at an equity raise which happened last year of around 1,000 crore, which is what has led to the bump up in the equity capital, which you can see on the top line. Other equity book value also there. What you're also seeing is a borrowing number of around 1,800 crore even now. That is likely to go down, and that is significant given that the company has a market cap of around 6,000 crore. The debt to equity is nearly 1:1. So not looking pretty even from that perspective. But we've given this a neutral given the fact that there is a thought process to bring this down sharply. There's an intention to do that. How quickly, how sharply is of course the question. Therefore, again, difficult to rate. We've given this a neutral. Cash flow. Now, very quickly on the cash flow, you look at cash flow to EBITDA. FY23, there was inventory build up, there was receivables build up. All of that building up has led to that kind of number. So there's variability on this as well. How stable can the cash flows be going forward will again be the question. But largely, last couple of years has been okay. Again, the payables spiked in FY25. We saw receivables spike as well. Or rather, payables fell in FY25, receivables spike as well. All of those adversely impacted the operating cash flow in FY25. So that's how it's played out. Your ROE numbers not looking healthy either. So your ROE numbers have been volatile. Can there be more stability is the question, but clearly that one's also a thumbs down. When you're looking at shareholding, now shareholding has been above the 50% threshold. They've diluted a little bit and brought it down to 44% now, and that is only because of the QIP that they've done. So really no selling per se from the promoter group, but what you want to see is more stability, lesser dilution happening. So some color around that will help as to how funding is happening with regard to the debt which they are planning to service and how quickly can they service that. Now let's look at street cred. This has been fabulous and this has been very interesting. You look at the 1 month stock price performance, up 19%. The 2 month stock price performance, it's a two-bagger. 6 months is up 21%. Year to date, up just 8.5%. And the 1 year stock price is actually down 15%, and 5 years is also down 15%. So you've given this an absolute neutral, just given the quantum of variability with regard to stock price performance. But of course, recently, the stock price has done very well, whereas over the longer term, it's been quite a dampener in terms of returns for shareholders. Now let's look at valuations. This is a very tricky one. Frankly, viewers, all these metrics have been extremely tricky to kind of deal with. So want to keep it out there, put it out there. In terms of current EBITDA, it's at 416 crore. We discussed this. EBITDA as per Nuvama estimates for FY26, I'm talking about now, 694 crore. The enterprise value currently sits at around 7,500 crore. Mind you, this is basically price to EV broadly is how it is dealt with in terms of the valuation. EV to EBITDA is what they deal with in terms of the valuation. So at current, EV to EBITDA is around 18 times. 1 year forward is around 11 times. And if I were to roll this forward to 2 years at a 15% margin, then you're roughly trading at sub 9 times EV to EBITDA. Question will only be, is that doable? Is that sustainable? Can the top line grow at the rate at which we're penciling in terms of our estimates? But broadly, that's the thought process. Let's look at the outlook. There's no numerical PAT or revenue guidance which has been given by management. The growth levers, North America, India demand, capacity utilization going up, data centers and AI, all of that is likely to drive demand going forward. But how much can the top line grow by is really the key question. Margins, EBITDA is likely to improve, again by how much and what is the aspiration, how quickly do we achieve that is the question. Geographic risks, US and EU tariffs is a big risk on the books. Want to know as to how will that impact the numbers overall. And profitability, well, they aim to turn PAT profitable. They have done that in Q1 FY26. Sustainability of that will really be the question. Very, very difficult to tackle all of this. No absolute clear guidance, and maybe we'll get that as we speak with Ankit Agarwal, who's the Managing Director at Sterlite Tech, who's going to join us in just a minute. Let's wrap up on the ratings. Now, probably the only company where we found it very tough to put out a rating, but we've done that nonetheless, and that's how it all stacks up. Overall, it gets no thumbs up. That's the one key negative. 3.5 on 8. And mind you, viewers, we've been cautious about this. So I want to put it out there that we've been super cautious with regard to our rating on this one. But it's an interesting one. And therefore, let's go across to Ankit Agarwal, Managing Director, Sterlite Tech, joining us. Ankit, great having you. Let me first start off with what the levers are with regard to growth. You've been at around the 4,000 crore top line number last couple of years. Do you start to see growth come back significantly this year? And I won't talk order book, I'll just talk execution. Give us that perspective.
Yeah, thank you for having me on the show. So I think definitely in terms of the levers that you touched on, the primary one that we look at is how do we improve our cable demand. And as we've been guiding, we want to take this from about 45-50% utilization towards 70% plus utilization. We see that happening as our order book continues to grow and we execute on that. And probably towards Q3, Q4 of this year, we'll move in that direction. If you look at our own numbers from 2 to 3 years ago, when we have broadly run our factories at 70% utilization, we moved towards that 18 to 20% EBITDA margin from currently around 13%-14% margin currently. So that's really what we are focusing on. We've also been working towards improving our cost structure over the last 18 months. And you see that now in terms of our numbers as well. So I think this is the primary focus. On top of this, we are seeing two other areas. One is our connectivity which we are clear that we want to build in terms of cable and connectivity, improving our attach rate. Currently, that's broadly around 20-22%, and we want to see how we can grow that. And the last part is in terms of data centers. That's a very important growth segment for us. We've been looking at how do we build our portfolio, and recently we've launched our portfolio as well. We're already in conversations with various data center players in India. And as we are all aware, data center capacity in India is expected to go from about 1 megawatt to almost 3 megawatts, 1 gigawatt to about 3 gigawatts between now and 2030. So that's basically the focus area for us as a company.
Okay, so Ankit, point taken. Likely the stock price rally is because of that guidance that you're going to try and hit 70% capacity utilization closer to Q3 onwards. How likely is that? What are the levers of you getting there? Is it the robust order book that gives you confidence? Is it the demand pipeline that's giving you confidence? Is it the pricing, which also you are largely seeing to be okay? Is that what's giving you confidence? Give us all of that.
Yeah, I think, our focused markets continue to be US, Europe, and India. And across all three, we have good reasons to be positive. As we've been sharing, we had about 18 months period where actually US demand was very strong, the deployment was very strong, but there was excess inventory across the system. A lot of that has now got reduced and depleted. So we do see fresh demand coming from our customers, particularly in the US. And this is also a positive sign for us. We've also been early to the business in terms of setting up our facilities in North America. And now we have a state-of-the-art factory which can serve the customers locally. So I think we're well set up for that. In Europe as well, we have a state-of-the-art manufacturing in Italy. And we're well set up to serve the markets, particularly UK, Italy, Germany, which are very fast-growing markets in the Europe segment. And India as well, while we've seen the market being steady, we do expect some growth in India on the back of BharatNet Phase 3, where some of the projects have been awarded and the balance will also get awarded in the coming months.
Right. So, and US, do you see that inventory unwind happening, Ankit, at all? And how quickly can we see that happen? Because that will be one key lever. Anything with regard to geopolitics affecting your business? I know you have capacities everywhere and therefore unlikely that it will impact your business, but does it at all? Give us that perspective.
Yeah, I think on the first point, as I said, we have seen that inventory substantially reduce. And if you look at our peers as well in the US, they're also seeing increased demand, both from the telecom segment as well as from the data center segment. Our own view is that the US itself will continue a healthy deployment of fiber over the next 4 to 5 years. So that's something that we're quite excited about, and we want to increase our market share in the US. In terms of our attach rate as well, we want to grow our business, particularly in the US as well for this. In terms of the geopolitical environments, I think it's positive that we have a free trade agreement signed with the UK. So I think to that extent, our business continues to be healthy in the UK. In Europe as well, we are well set up with majority of our supply into Europe coming from our factory in Italy. So we are well, protected out there. And similarly, in the US as well, we have a state-of-the-art factory there, which serves the US requirement. And to some extent, we manufacture from India and supply to the US. To that extent, we are looking at what could be the possible tariffs that get announced. And we're looking at various measures to mitigate that.
Now, let me understand India. You have BSNL, you have BharatNet. How much of these opportunities does Sterlite Tech take? How much of it is Sterlite Networks opportunity? How do you break up these opportunities? How should one look at the 2,631 crore order which you already have between both these entities? Give us that breakdown.
Yeah, so at a macro level, important to appreciate that India is less than 5% of the world optical market. So while we're excited about the growth, really from a major impact to our bottom line, it really comes back to Europe and US markets. India is important for us. It's our home market. And we're excited to connect every village in India with optical fiber. STL, the networks business has taken up a project in Jammu Kashmir, which is a combination of capex deployment for 3 years and then maintenance for 10 years. So that's largely the project that's been taken up by that business, which is under the brand Invenia. In terms of the optical fiber cables and connectivity, that's typically in that range of 5 to 7% of the value of the capex is what ultimately would come to Sterlite Technologies. But equally, we have given our MAF, which is our right to partner with various other bidders who have currently won some of the projects, and there are other bids which I mentioned are on the pipeline.
Sure.
So basically, our focus in Sterlite Technologies will be the supply of our products, both to Invenia, which will be at arm's length, as well as to other companies as well.
Right. Ankit, I have 3 minutes and I have 3 quick questions. Starlink, is it a potential client?
Starlink will be interesting. I think it's very interesting, where I think the technology will be useful for, say, remote and rural applications. I think the cost structure, the latency, and the speeds, they will struggle in your main cities, etc. But certainly, if there is an opportunity to partner with them on some of the connectivity requirements from the satellite, from the link at the home into the house, I think those are areas we could look to partner with them or the other satellite providers. As I said earlier, our main focus is on the fiber and the fiber connectivity. And for that, the primary requirements are around 5G, fiber to the home, and now increasingly data center requirements.
Got it. Ankit, as you go from 45-50% capacity utilization to 70%, where does your top line go? FY26, give us a perspective. FY27, give us a quick perspective.
I won't be able to give any quick perspective. I can only share that we do see that our margins will improve as our utilizations improve quarter on quarter. And I think we're just really focused on our large clients in our global markets, looking to secure long-term contracts with them and really look to support them with both our cable and connectivity as a combined solution.
Okay, all right. I take your point. Ankit, debt reduction, how much and how quickly?
So we've guided that already, that it is important for us to reduce our debt. I'm happy to share that we've done majority of our capex over the last several years. So from a cash flow perspective, whatever cash we generate, a good portion of that will be utilized to reduce our debt. And our target net debt to EBITDA is to bring it down further to 2 times by end of the year. So which we believe is a healthy position to achieve, and we're confident of that.
Okay, thank you so much, Ankit, for coming and speaking with us. Out of time on this edition of the show. Appreciate all the replies that we've got. So thanks for coming and speaking with us. Viewers, completely out of time on this edition of KYC. Thanks so much for tuning in. Stay tuned to NDTV Profit. More action just on the other side.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Now, if you've been watching NDTV Profit, then you will know by now that Tata Consultancy Services, India's largest IT company, recently announced that it was laying off 12,000 individuals. And these are not entry-level workers in the IT space, they're mid-level and high-level IT professionals. It's something that has caused quite a bit of worry, because if Tata Consultancy Services, which is the bellwether of the IT industry, is doing this, then it's likely that other large IT companies will also do this. The reason that they have given is, well, they've been sitting on the bench, they haven't proved to be relevant to the technological developments that have taken place. Various reasons have been given, but for the individual, this causes a major issue, because there are expenses that are ongoing, there are possibly EMIs, there are loans that have been taken, there are houses that have been bought, and there are plans that go completely awry. So what we're going to be talking about on today's episode of Your Money Matters is how do you deal with this? Of course, we're going to take this IT conversation, but we're also going to be making it relevant for everybody else as well. And in the second half of today's show, I will be speaking to a representative from TeamLease to try and understand from her how she thinks that people should skill themselves and continue to stay relevant in a space that is seeing so much development and change on an ongoing basis. But my first guests today are Santosh Joseph, who's the founder of Germinate Investor Services, and Mohit Kang, the co-founder and chief executive officer of Moneyfront. Gentlemen, thanks so much for taking the time. Santosh, you're from Bangalore, and a lot of the worry and anxiety is concentrated there because the IT industry is going through a bit of a phase, seemingly. I've spoken to a lot of IT professionals who say that they see visibility of their careers till they're 40, 45. And that used to be startling for me, not anymore.
Hi, Alex. Good afternoon. So in Bangalore, the entire IT emotion is very palatable because we got so much of IT that Bangalore represents. You're also right in what you said that, about 10 years ago, most people in the IT industry would say that at 55, their career would more or less look like coming to an end and then they would have to look at something else. But today, that number has just dropped to maybe between 45 and 50. Though most people would still see a 5 to 10 year future, but it's still limited to what a normal career development or a career growth for most other industries would be. So therefore, IT is now turning out to be at some level a short runtime compared to the other careers in other industries where you tend to work a little longer.
Mohit, you want to add to this? Because what struck me at that time and conversations that I've had post that have been that even sports persons have a similar mindset because whether they like it or not, they have to stop at 35, 36 because the body just does not do what it used to do at 22, 23. And that's assuming that you have a successful career, assuming that you have no injuries that have taken you off the pitch. So would you say that that's the mindset that you need to have as an IT professional to start planning right from the start?
Thank you so much, Alex, for having me on the show. Look, I think as you have rightly put, whether be sports person, whether be celebrities, or whether be the new age professions, perhaps more so in the case of IT, because that's what we are discussing out here. I think the timelines have all reduced and crunched. Look, honestly, I think FIRE was something which we used to talk when we used to do retirement planning for our clients, but we never thought that FIRE would become a everyday reality. So financial independence and retire early. I think these are two things which no one can ignore, whether be IT or any other profession, Alex. For that matter, you and I don't know what AI will do. Perhaps there would be an AI advisor who will be answering you, and perhaps there would be an AI host who would be accusing me in next 5 years, right? So all of us, including you and I, not just IT guys, will have to prepare for this eventuality that in next 5 to 10 years, we need to have a corpus which is large enough to sustain us alongside upskilling ourselves, alongside planning for our emergency contingencies and all those things. But yes, I think FIRE is now a reality for everyone, not just for IT guys.
So we'll come to that in just a bit, but I want to talk about those individuals that have unfortunately been laid off. And of course, jokes are being made, sometimes relevant, sometimes unfortunately not. Where I saw a meme, Santosh, of a TCS employee saying, oh, I didn't realize that I was fired. I didn't even realize that I had the job because I was sitting on the bench for so long. But it's not as humorous for the person who's going through it. And so therefore, how do you deal with something like this when you have such a big jolt? What are your first reactions?
It's not easy. I think we have to be honest about it. It's a very practical problem that we are facing. In especially whether the IT industry or any other industry, most people take up a job or a career because they want a stable salaried income that has to come on a month-on-month basis. Now, when you're with that kind of mindset, you've studied, you've done your career development, and you've got into a particular job, the least that you expect is you get a jolt like this way saying you're being laid off. Now, while it's not easy, you now try to come down and realize what is the opportunities that you have on hand and what is the circumstance that you take up, that you have from here and move forward. Jokes aside, anybody, whether you're at an entry level or mid level or senior level, this is not someone anticipates, though you tend to be planned for, but this is not anticipated. So therefore you will have to take it one day at a time when something like this hits you.
Mohit, you want to add to that? What would you do? See, because in this situation when the initiation of the termination of contract is from the employer, there would need to be severance pay as well. So you can use that as a bit of a buffer, can't you?
Oh, definitely yes, right? I think, look, whenever these kind of scenarios occur in anyone's life, first and foremost, I think it's quite sad and it's not easy for everyone and anyone to take it. You might have a lot of liabilities, financial responsibilities, so on and so forth. So it's perhaps best left to the individual to judge for himself or herself. Having said which, yes, I think severance pay is a part of all these kind of things, severance pay or VRS, right? So these are two very popular instruments which are used to reduce manpower in any organization. But when you get this, then you have to make sure that that severance pay is used very, very prudently. It's just not splurged out into buying luxuries or into everyday affairs. It has to be provisioned meticulously to the last T. It has to be provisioned into fulfilling your emergency corpuses, sometimes just parting away with few of the high interest rate liabilities, and taking care of the basics, the basic necessities, and the hygiene layer has to be well in place before you start digging deep into the severance pay amount for any other thing, right? So I think there is a whole lot of planning involved out here, Alex. It's not very simple as to just receive an amount and then to figure out what next to do with it. So one has to be really careful with the amount.
Of course, and so there is a waterfall to pay attention to. You can imagine it as that, right? So I'll come to you first, Mohit, and then I'll go to Santosh on this one. In order of priority, how do you ensure that you're taking care of the most important things? Because you're talking about mid-level, senior-level employees. I would think that there could be a situation where school fees have to be taken care of or college fees have to be taken care of, and that's non-negotiable.
Absolutely. So look, I think the first in the pecking order is that you need to have an emergency corpus, and that corpus today, though earlier days we used to say 3 months corpus is good enough, Alex, but nowadays I think the definition will have to be stretched to at least a year's corpus, right? And when you've got laid off, unfortunately, I think you will still have to stretch it, because in today's time and era, to get a job, and if you've got laid off somewhere at around 40s or 50s, let's say, it becomes incrementally tough to find the next job if you're on the other side of the age, right? So you will have to provision for at least a year to 2 years, depending on the situation, your age profile, your liabilities and everything. I would say 2 years is a great corpus. If you've got laid off, first you partake your severance pay to make sure that your existing emergency corpus is completely refurbished to at least a year to 2 year kind of a corpus. Then you have to see your high yielding loans, as in higher interest rate loans, if there are any, let's say, a home loan or a personal loan, and if there is something buffer left out there, first you need to pay off those credit card loans and personal loans and stop your unnecessary expenditures towards those sides, right? And alternatively, you have to figure out whether upskilling or taking an alternate course or doing some part-time thing might help you. You have to figure out those possibilities. You have to figure out your health insurance of the family. Look, when you lose a job, you also lose your corporate insurances, Alex, and which is a modern day reality that most of us rely on our corporate health cover and corporate life covers, right? So first and foremost thing is you have to ideally, in an ideal scenario, you should have a separate health cover and a life cover running parallelly to what your company provides. But if you don't have one, and God forbid, if you were to be laid off, then I think you need to first get yourself a health cover, a family floater, which is an essential must, and perhaps a life cover as well.
You obviously, and I'm hoping that a lot of people are in this situation where they have been carving out a portion of their income on an ongoing basis. Now, the reason why we spoke about what we did at the start of the conversation was that if you are in the IT industry, then it behooves you, it is important for you to set aside a pretty large portion of your take home every month to guard against this sort of an eventuality. So let's hope that you've been doing that. If not, please do start doing that now. The question to you, Santosh, is do you at all access your employee provident fund, which is something that will still exist, but you can withdraw in the event of losing your job or some other reasons? You can do a partial or complete withdrawal. Should you do that?
Ideally, avoid it. Just because it's available, you shouldn't go for it.
Yeah.
Avoid it as much as possible. Like we discussed a little earlier, you have the severance pay and you also hopefully have some bit of contingency and emergency fund that has been saved up. But let's assume the worst case scenario that you didn't get severance, or maybe severance is delayed and you don't have a contingency fund. You have the luxury of using the plan, which is the last resort, to dip into the EPF, where On employment, you have access to 75% of the corpus that has been accumulated. You also have to keep in mind that depending on the tenure of your service, if it's less than 5 years, it might be taxable. If it's more than 5 years, usually these are tax-free, and you should only use it only at extreme scenarios to take care of your immediate requirements in most uncertain times.
Okay, a couple of last points to talk about, and that has to do, Mohit, with funding and education and taking a sabbatical, if that is available. And the ideal situation, again, guys, I think would be if you are a double income and if you have the security of your partner also working, there's nothing like it. So would you say that you should consider maybe a switch of career, maybe even taking some time out and learning, Mohit?
Look, Alex, I think one has to take some chances in life. Honestly, you have to have those security net well built in for yourself, whether it's a double income security net or your parents kind of taking some burden off, or you have enough and more saved for yourself, right? So it could be any scenario. I don't want to kind of overthink on a scenario out here. But yes, upskilling is something which all of us will have to continuously do. Whether you take a sabbatical or not is a very big question. And it will all completely depend whether that upskilling will really zoom you into the next leg of your career, your profession, or in some alternate industry where you think the future is extremely bright. And that call has to be taken very, very carefully, because taking a hiatus in a job is not an easy thing, and one should completely avoid it even if you have an iota of doubt in today's day and age. Look, you are easily replaceable in any job today, Alex. And I would say, if your employer is providing you with that opportunity that you go in for a 1-year higher education or you take this alternate course which will help you build your career, please by all means take it. If the employer is guaranteeing a scenario where you can be absorbed back at a higher level or even at the same levels, then there is no chance of missing it. But if you think that upskilling will make you leave your job and then you will have to scout for a different one once you are done with it, then you have to be very, very careful and pragmatic about it, and not just trying and chasing a fad. Honestly, also you have to check your finances very, very carefully, that they are sufficient. Even if you don't land up in a job immediately, they should be sufficient enough for you to have a 2-year runway so that you can scout for something which is worthwhile your newer effort and newer degree.
Okay, final question. This one's for you, Santosh. Do you erode the nest egg that you've built up if it is required? Of course you would, but in what order? One, do you keep the equity invested, hopefully for the long term, or do you pull some money out from there? And two, if you are paying a home loan and there is a considerable amount of the principal that is still to be paid, do you consider getting rid of that home loan, possibly even selling the house in order to get some bandwidth available to you?
So to begin with, your portfolio then becomes your backup plan, because I'm hoping that most people would have a diversified portfolio and some bit of fixed income or some bit of the extremely liquid part being there in the portfolio can help you only in an uncertain time when you have no other option left. I think that's what the portfolio is built for, to help you on a rainy day. That's number one. Number two, ideally, you should take out investments which have the least impact for growth in the long term. Therefore, equities and hybrids will stay. Fixed income and maybe money market or short term will be utilized in that context. The second aspect is about the cost of living, the EMIs, and even your style of living. If you have a prolonged and protracted period of yet not having another job at a higher pay or lower pay, you have to reconsider to tone down your living expenses and even your EMIs. You may have to take the tough decision of maybe reducing your EMI or reducing the cost of your living, or maybe even selling your house and buying another house which is either debt free or maybe at lower EMI, or maybe figure out the house can stay and the EMI you could pay, but what are the debt you can reduce or what are the expenses you can reduce till such time you find an alternative to the income that you are getting. So therefore you have to make a little bit of a lifestyle change to ensure that you are ensuring that the EMIs and the bills are being taken care of and life still continues.
Yeah, you said it. Life still continues. Gentlemen, thanks so much for joining in and for this lovely conversation we've had. There's always something to look forward to. And to that end, I'd like to talk to you about what you could potentially do in order to head off a situation like this, or even if you find yourself in a situation like this. Joining me now is Neeti Sharma, who's the Chief Executive Officer of TeamLease Digital. Neeti, thanks so much for taking the time. And maybe you caught some bit of that last conversation. I was talking about what you can do if you find yourself in this kind of a situation, whether you can think of doing a sabbatical, whether you can think of skilling yourself and learning something more to equip yourself with things that you can find employment with. But I just want to ask you, before we get to all of that, this instance that we're seeing of a large IT company laying off individuals mid-level, senior level, is this something of a phase, or do you think that this is something that is a precursor to more things down the line?
Sure. Thanks, Alex. Look, I think this specific instance, and it's not new, for the last couple of months, we've been seeing that a lot of mid-manager level specific pure play people managers are getting impacted purely because companies are thinking about what next, given that the global macroeconomic situation is not improved. Somewhere during Q3 of last year, November, December, we all said after the US elections, things might be better, and they're definitely not looking up. Plus the whole AI impact, which is slowly seeping in, it's not there yet. So I guess a lot of stuff happening with the IT companies, and they are now looking at the next phase, which is really reorganization. Despite the fact that they would have spent a lot of money in upskilling these, their own employees, ensuring that they're either given redeployment, relocation opportunities, there will be a cohort that is not able to fit into the immediate future requirement. And I guess that's where really the numbers are looking very high right now. Having said that, is this a phase? I guess every organization will go through this phase, not just the IT companies, but all other segments will also go through this phase. We will have to look at the future of work, how it's going to look like, how our org structures will get redefined, and how new roles that are coming in, how do we fill those roles?
I do want to talk about other sectors beyond IT as well, but since we're talking about IT, I have a specific question for you. A lot of individuals that are maybe at the start of their careers will probably watch this and will be wondering, have I made the right choice? And so what advice would you have to these people to say that, this is the way that you can perhaps stay relevant even amidst this frenetic change that we're seeing on an ongoing basis? There's no guarantee, Neeti, that if you learn something today, 6 months down the line, that's going to be relevant because the technology is changing that quickly. Would you agree?
Absolutely, yes. So I think, and most companies are not looking at STEM graduates, freshers, who can just come in today and start work tomorrow. I think what we're looking at is how quickly can they adapt, how quickly can they learn, upskill themselves. So I think just being relevant with the skill sets that are required today, but also have the agility to keep learning on the go is where organizations are looking at. And since you mentioned first-time job seekers, for me, every time I talk to someone, I keep telling them that a job is better than no job. So please take something that comes your way rather than waiting for my dream job to come in, because probably the dream job will be a couple of months or years down the line. But get a job, get the experience. If not a job, if you're getting an internship or an apprenticeship opportunity, take that, learn on the job, learn what the organizations are looking for. So at least you are in the game, you have a foot in the door, and you are relevant to today's requirement, if not tomorrow's requirement. Tomorrow's requirement, we can't redefine right at the moment. But if I'm agile enough to continue learning on the go, I think we will be in a safe place.
You have a pulse on the kind of demand and supply dynamics there are in the industry and across various sectors. So, Neeti, at this stage, where do you see the most opportunities, and what should people look for if they are in the market for a job? In certain pockets, I would think that the market is not great, but there would still be demand. Would you agree?
Oh, absolutely. And all these large IT companies are also hiring. It's not that they've stopped hiring completely, but they're probably hiring for different skill sets. Last 6 to 8 months, we've actually seen massive demand in areas of cloud, security, and data analysis. So I think there's a shift in the kind of roles companies are hiring for. Also with the fact that we're all going, global, we're talking about huge amounts of data, we're talking about AI agents. I think dependency on security and data is going to be massive. And that's where, in terms of volume growth, is going to come in from those kind of roles. Apart from the services or the IT companies and the product companies, other segment that is hiring in a big way is obviously the global capability centers, or the GCCs as we call them, which are not only just tech domain GCCs, but also, other sectors. So we have GCCs in pharma, health, we're looking at retail, we're looking at logistics, banking, and of course, technology. So a combination of tech skills along with domain expertise, I think, is very high in demand, and companies are willing to pay a price. Apart from obviously the whole AI, ML coders, you're talking of data analysis, data, cloud security, cyber security, all those roles are actually high in demand and are getting paid a premium over and above the recurring roles.
Now, you've kind of laid out the canvas and you've spoken about the various opportunities in the IT space. Now, Neeti, if there is a viewer that is looking at this and saying, what should I equip myself with? In terms of the skills, in terms of the languages, in terms of the coding abilities that you say that people should have in order to cater to the widest set of what you've just defined, could you lay out a few things that they can do by themselves and not necessarily depend on a potential employer?
Yeah, absolutely. So I think Python is the base for AI and ML coding. So I think Python skills are very, very critical. Every organization is looking at hiring people with those skill sets. Needless to say, the Java full stack, skills are also continuing to be in demand. And there are a couple of others. If you're on the security side, get yourself an ITIL certificate. If you're on the coding side, look at what kind of technologies you will be comfortable with, upskill yourself, and also, like I called out earlier, do use cases with organizations so that it's not just about a software or a platform that you're skilled in, but about a domain understanding, because it's not just about how well you can code. Those jobs will probably go away, and will come back in a different shape and avatar. But what exactly can you do with your knowledge? Where can you use your skills and your domain knowledge is, I think, going to be more critical than just understanding, a segment of, technology stacks that we currently actually are using at the moment.
Okay, and a final question. You did say that this is something that other companies could go through as well, Neeti. It's potential, of course. But would you say that the way that IT companies will manage workforces, at least the large ones, is undergoing a change in that the kind of capacity that they had, and here I'm talking about people sitting on the bench for over a quarter, and that was pretty normal. Do you think that is now something that will see a transition and less bench strength will be kept?
Yeah, absolutely. I think our quarter bench strength is history right now in all the large IT majors. Max 30 days, 45 days, nothing more than that. And that too, they are expected to have some sort of learning going on so that they upskill themselves. And there's a project that they eventually will get assigned. After a point, if they don't get assigned a project, which means that they're not relevant to the organization, there is a chance of them, being let go. So yeah, quarter bench strength is not there anymore. 35 days, 40 days, 45 days max, nothing more than that. And that too in single digit percentages. It's not like double digit percentages that these companies are keeping bench anymore.
Okay, so then a follow-up to that then, Neeti, if you are in a situation where you've been on the bench for a protracted period of time in an IT company, maybe you're a fresher, maybe you're a couple of years of experience, should you then be voluntarily of your own volition, going out and looking into the market and saying, hey, you know what, I need to be gainfully employed. I need to be learning constantly. I shouldn't be sitting on the bench. Is that the approach you should have?
Also, but I think it's only fair for the organization that you speak to your managers before you do that.
Yeah, absolutely. Neeti, thanks so much. This is a very important conversation from our perspective. Thanks so much for agreeing to do this.
Thanks, Alex. Thank you so much.
All right, that brings us to the end of this edition of Your Money Matters. Of course, it's possible that you have more questions based on what we've spoken about, and I would encourage you to write to us in the comment section, and we will take it up in the days to come. Thanks so much for watching. This is NDTV Profit.
हेलो
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world.
Hello viewers, joining me today Charanjot Singh Nanda, the President of the Institute of Chartered Accountant. Welcome to NDTV Profit, sir. I would like to begin by asking you that the government wants to create its own version of Big Four firms. What is the role here ICI can play to kind of support this kind of cause to have its own homegrown Big Four accountancy firm?
Good afternoon, madam. The basic concept of having an Indian Big Four or homegrown firm would ultimately emerge from the fact that Indian CA Institute, ICI, which was set up an Act of Parliament way back on 1st July 1949, would gather resources, make the firms ready to join, and more importantly, create such infrastructures whereby the firms are able to unite by way of mergers, by way of networking. We will do a lot of things. There are certain bottlenecks to it. For example, if you have a huge firm, you need a lot of finances. So from where the finances will come? If you have a huge firm, you need to advertise your services, for which there are restrictions as per the Chartered Accountants Act. So we would like to revise those guidelines of advertising. Going forward, there may be issues in technology. The firms have to be technology savvy. We are also thinking of having a portal whereby you could identify the potential people with whom you would like to network, or with whom you would like to merge your firm so that a larger firm is made. So it is holistically the impetus of the institute to support the government and ensure that we give proper facilities to our member firms. It is a business decision. So therefore, with whom they need to collaborate, what are their skill set, which are the skill set that is required, and more importantly, what is the holistic view, with the holistic approach in terms of which you are able to go ahead and have businesses and service your people and clients and stakeholders.
But Mr. Nanda, what steps do you think that Indian firms should take at this point of time to compete, all these big four globally?
Madam, there is a saying, well begun is half done. We have to have a great beginning. The institute is totally inclined towards giving them that facility. The firms, first of all, have to grow big. We have firms above 5 partners, above 10 partners, above 15 partners. So the large firm which the government is envisaging has to be a firm where at least 80-90 partners have to be there. So the first step is identification of partners. Having offices in practically all cities. So having offices and having such great people and inviting people to join as partner or as employees would entail lot of financial expenditure. So the second thing is finances. Now when you want to service clients, Indian or overseas, you need to have a great technical impetus. So that technical training is also very, very important. Going forward, when you have to sell your services, you have to make people aware what services you have. Advertising and solicitation of client become important. So those guidelines again needs to be taken care of. Where do they meet? I know so many firms. So we'll have a database, we'll have a portal whereby you can identify the potential firm with which would you like to merge or would you like to network. So this is a long drawn process whereby institute will facilitate each and every firm to grow. We want the partnership firms by capacity building to grow into larger firms, proprietor firms to grow into partnership firms. So this entire paraphernalia shall be taken care by the Institute of Chartered Accountants of India.
Fair point, sir. Sir, I also like to understand since moving away from the big four point, that there are a lot of recent accounting irregularities issues has emerged, particularly in the cases like Genzol, IndusInd Bank, we have seen Byju's, and ICI among stakeholders who strongly comment these kind of accounting irregularities. So what has the action taken so far in each of this case? If you could just elaborate a bit.
Madam, we have an FRRB, Financial Reporting and Review Board. So when these things come, the board looks upon those things and identifies whether they have to be taken for a desktop review. So we are now working towards it. We are doing the desktop review of IndusInd Bank, of Gensol or Blue Smart. And it takes close to 6 to 7 months to do a review and then come to a conclusion whether there is an accounting or auditing irregularity. So this is a process on which we move ahead. With Byju's, we have a disciplinary committee meeting where the Byju's case is being presented. So this is largely, you see, we work as a court only. So there are certain bottlenecks by which people come, they have to appear, they have to give their views, and then we arrive at a conclusion whether the auditors are guilty or not. So this is a long drawn process, but we at the institute level facilitated, we are very keen. We have so many DC meetings. The disciplinary committee was constituted a month back only. So myself, there are 2 disciplinary committees under me and 2 under the vice president with the presiding officers. So we've been holding frequent meetings so that the justice is met and given to people who come to us for any.
So what could be the final action which ICI can take?
That depends. We have to see whether these cases are going in NAFRA or not. Whether we have to take a call. So if we have to take a call, we send it to the disciplinary committee for further inquiry of the case.
But tell me, sir, that when these cases emerge and clearly indicating towards accounting frauds. Do you see a bigger problem here, or you think it's just one of a case, or it's a system failure of some sort, or some kind of financial oversight?
It is not a system failure. It is greed of certain people who ultimately culminate in doing frauds. We are doing a research paper for SEBI, in which we have senior members from SEBI, from NSE, and from various walks of life. We are now trying to find out means by which a fraud could be preempted. A scam could be identified, early signs of scams, and communicated so that the stakeholders or the gullible investors who lose lot of money at the later stage, that stage is arrested. So initially when we feel that something is going bad, we could immediately raise an alarm and ensure that it could be nipped there only, rather than giving it time to expand.
Moving on the new accounting rules, sir, there are some rules in the work for businesses which is going to become from, I'm assuming, January 1st, 2027.
Yes, madam. Yes,
so if you could elaborate a bit about that and how that is going to impact the businesses, and whether it will also have some bearing on the listed companies, since a lot of these subsidiaries of listed companies are, unlisted. So how that's going to work?
Tell you, madam, there are two accounting standards. That is Ind AS 118, presentation and disclosures in financial statements. So this standard, the basic purpose is to improve companies' communication of financial performance, with a particular focus on the statement of profit and loss, because that ultimately gives an impetus to look at how funds are coming in, how they are expended, and what are the expenses and sources from where funds come. It will improve the structure comparability and clarity of financial statements for stakeholders and investors. It requires, I am speaking about 118, it requires classification of expenses into operating, investing and financing. This standard will also improve disclosures on management's performance measures to ensure transparency in how companies assess their own performances. Very, very important. You have to go back and see how your performance is there and how you assess to the level of which you have been able to improvise. So globally it is applicable from 1st January 2027, and in India it is proposed to be applicable from 1st April 2027.
Okay.
You spoke about subsidiaries, that is IFRS 19. The only issue here is that internationally, if you have your sets, the main company has sets as per IFRS, they can prepare the accounting of their subsidiaries in any other system or any other accounting system which is vogue in that country. In India, we subscribe that if your main company is into IFRS, we propose that our financials of the subsidiaries also made in IFRS. So this gives an impetus because you are able to equitably look at both of them. The basic purpose of IFRS is to give a common accounting language across the globe. For example, sitting in India, I want to make an investment in Luxembourg. I want to make an investment in San Francisco or in Kuala Lumpur. If IFRS is there, I will be able to equitably look into the valuation and what call has to be taken by me. So when the accounting language and disclosure are same worldwide, it becomes very easy because all of us say that the world has become a global village. So if you want to make inter-country investments, it becomes easier for that. So with respect to subsidiaries, IFRS 19, we are now very keen that in India, that is again into process, we are setting up a study group. It is not in vogue today. We are setting up a study group and we have to take, with respect to 118, we have prepared the entire thing. We are giving it to NAFRA under section 133 so that NAFRA is able to first take care of this and then send it to MCA for further notification.
Clearly, it will bring a lot of transparency between the listed and its unlisted subsidiaries.
Yes, madam. The basic impetus or purpose today is to create such reporting standards which go or gel well with the public who are investing. See, people who are technically sound will have a greater knowledge, they'll be able to assess and they'll be able to read all the financial statements. But for people who know little knowledge of accounting, for them also, worldwide, the trial is to give them an equitable place where they read financial statements are able to take informed decisions.
Well, speaking of the accounting rules, and also you said the NAFRA role, there are certain overlaps between ICAI and NAFRA. How ICAI is handling that overlap? And do you think that it confuses the companies, the investors? What's your take on that?
See, madam, I will not comment on the past. But today we have very good relationships with NAFRA.
Okay.
See, both of us are the creation of MCA. So what I feel that both of us have to work in tandem with the purposes for which we were created. Our roles are different, roles of NAFRA are different. So we'll have to have a strict line on which both of us work, not to intermingle with each other's work. In my opinion, madam, we have to work in consonance with each other and ensure that the investors, see, NAFRA is also doing honest job, and ICAI, I told you, was set up an Act of Parliament. I am the 73rd President of the Institute. 76 years we have been rendering government services to the economy at large. So both of us have to work in our domains and ensure that we are able to effectively service the citizens of India and the corporates.
That's a fair point, Mr. Nanda. I would also like to understand, moving away from this topic, that on the role of artificial intelligence. Now, we are seeing a lot of shift is happening because due to this AI, especially in the financial world. Now, how ICAI is preparing chartered accountant with this shift? Because we have seen a lot of layoffs is happening. Because of the new system which is in place, how you are preparing CAs for that?
Madam, technology is now the basis of growth. ICAI is focused not only towards artificial intelligence, but blockchains, Internet of Things, data analytics, which is very important, cyber security audits, information security audits. Some 15 years back, we took a call that chartered accountants can only prosper if they are technology savvy. And now our impetus is largely on artificial intelligence. I'd like to tell you, we have a committee, AI in ICAI, Artificial Intelligence, in the Institute of Chartered Accountants of India. 1st July 2024, we launched a certification course for chartered accountants. You'll be happy to know close to 25,000, they have done, maybe 30,000 chartered accountants have done that course. We did a conference in Pune, and it was on 18th and 19th. The registration has to be closed 1.5 months before, because so many people were trying to do that. Now we're doing one in Jaipur.
Okay.
So, madam, on 17th, I asked all my council colleagues to get training on AI. Tomorrow we are doing an employee training on AI. So artificial intelligence will ultimately give us a benchmark on which you are able to effectively assess all your services and see how time is saved. You have to do only analysis, let the other work be done by AI.
But do you think that with AI and it's expanding so fast, will that impact the overall CA profession?
It will.
Okay.
It has to be enabler to us.
Okay.
See, there will be two classes, people who know AI, who don't know AI. So people who do not know AI will have a fear of losing on certain jobs or on certain strategies, but people who know AI will scale with newer heights. People are afraid that AI may make them lose lost jobs. It is not so. Artificial intelligence can never displace original intelligence. We have created artificial intelligence, but that has to be harnessed for getting monotonous work done, for putting down the time frame in work is done, and ensuring that no silly mistakes are made and the results are actually correct, which can be used by the management or by the stakeholder for taking decisions.
So using it wisely is what you are suggesting.
Yes,
and the way,
yes, you're correct. You're correct.
Yeah. So many students, and it's a very popular question that many students still find the CA course is tough. Now, do we see any changes there to kind of make this entire journey manageable?
Madam, there is, as a student I used to listen, that in Churchgate it is written, God never fails. Somebody has written, then let him try CA exams. See, madam, CA is difficult. But over the years, we have produced such great professionals who have effectively added value to the cause of this nation. Our beloved President Shri Abdul Kalam, APJ Abdul Kalam very rightly said, Indian chartered accountants are partners in nation building.
Absolutely.
I feel in times to come they will be partners in global building. 42,000 of our chartered accountants are all across the world except in India. And they have been contributing largely to the economy where they work. So, madam, we do not want to make systems easy. We want to train our chartered accountant students so that they clear this and are launched with great fanfare. Once a chartered accountant comes to work with his, coupled with the training which he takes and the technology which is imparted to him during his training days and the certificate courses he does before coming to have the certificate of membership of chartered accountancy, these things ultimately pave a way where we'll be acclaimed as world leaders.
I'm sure. In fact, the recent India-UK FTA has opened the door for, opportunities for chartered accountants. So, how do you see this is helping, Indian CAs to go out and access to those and tapping to global market? How are you seeing this move?
Madam, free trade agreement is a great shot in the arm of both the countries. It will change the thought process. And to put it very aptly, there will be growth in businesses. Business today is $60 billion. By 2030, it should double to $120 billion. There are relaxed visa rules. Those relaxed visa rules have ultimately encouraged the Indian skilled workforce to go and render services in UK. Chartered accountants, they can practice there. Their people can come and practice here. We are also now going to set up a new MRA, Mutual Recognition Agreement, with both the countries and with the Institute of Chartered Accountants of England and Wales, so that we are able to effectively recognize whatever services can be rendered. This is a great step towards recognition of professional qualified people.
Tell me quickly on the point, sir, and I'd like to wrap with that how you are kind of working to strengthen the ethics of chartered accountants, to kind of avoid a lot of instances in the past where the red flags being raised on CAs. How to kind of ensure and strengthen the ethics for CAs?
Madam, I'll tell you something which will be very interesting. Number one, we have a global or international code, ISBA. Indian Code of Ethics is more stringent compared to ISBA. We have certain things which ISBA doesn't have. It is more liberal than Indian Code of Ethics. Second, when you take cases of instances, you'll find India is having meager instances compared to the other world. We are very mindful of the fact in India, a chartered accountant who's been served with a disciplinary notice always faces a stigma. So all chartered accountants work diligently. But in spite of that, we have a continuing professional education where we have made every year study by every chartered accountant on Code of Ethics. Our Code of Ethics is one of the best codes in the world. Our self-reliant measures which we keep, even which is not mandated, is something which is the largest in the world. So we at the institute level make it very pertinent to train our members right from when they were students, so that they understand the value of ethics and work in a very ethical fashion. So to summarize it, Director Discipline takes a call whether the person is guilty or not. If he is prima facie guilty, there are certain clauses which will go to Board of Discipline and other which will go to Discipline Committee. At the Discipline Committee and BOD level, proper inquiry, detailed inquiry is conducted. I have a meeting even today at 3 o'clock. So we go ahead and conduct the meeting, and if he is found guilty, proper action is taken. Financial penalty is proposed and his name is removed. So we take financial penalty up to 5 lakh rupees and permanent name is also removed. So this is a great deterrent for chartered accountants. I want to tell you, a disciplinary notice or a notice from ICAI is a nightmare for them.
So you think that the process at present is robust enough and no tweaking or changes is required?
100% robust, madam, 100% robust. People do not know because we do not tell how many cases we have put people guilty. Now we have started publicizing that. If you want, my office can give you a copy. How many of them have been held guilty? The moment you read the data, you'll understand, oh my God. People think we don't advertise that these are the people who have been held guilty, name has been removed or have been. inflicted financial penalties. So people are not aware.
How many of the chartered accountant charged for the disciplinary action in the recent past? If you give me the annual number.
It was close to 254 chartered accountants.
Okay.
Who were awarded punishments, if I'm correct, because offhand I will not remember, but I was telling somebody some month back, so I have a freak idea of that.
Okay, so do we see more such public information coming out?
We are very keen, madam. We are very keen. Any issue we take cognizance the moment we see any news in the press, or if anybody wants to make a complaint. We want to follow that. We want to see that justice is meted to every complainant who makes that. At ICI, we want to keep our standards very high. My entire council comprising of 40 members, I am one of them. They work in tandem with the international best practices. We have so many responsibilities and not a single person letters from the job which is assigned to him.
No, absolutely, because you being one of the very key and crucial stakeholder for all the government decision as well. And that's the wrap of this special conversation. Thank you, Mr. Nanda, for taking out time for us.
Elaborate discussion.
Thank you so much.
Thank you so much. Thank you, madam. Thank you.
Let's start our big market conversation this morning. Prateek Agarwal, MD and CEO of MOAMC, joining in. Prateek, always a pleasure to have you on the show, and thank you so much for your time. Since we've been talking about all of the new issues opening, and it's a buzzing week for IPOs. I think 14 issues and 12 listings, or 12 issues and 14 listings, one of the two. But it's the primary market definitely on top of it. Is this something that you're looking at all? Do you see value in some of these, and should value investors actually look at some of these issues very closely?
Some of them are good. So each house looks at a space differently. We are finding some of the issues attractive, and you would see us participate in a few years.
I mean, obviously you will not tell me which ones, and I will not ask you which ones, but what is the kind of criteria that you're applying?
We are growth in earnings focused managers. Now, in our house, we work through themes, spaces like the pharma, GLPs, retail, where you are seeing unorganized to organized moves, online, new tech, are spaces that we believe will offer longevity of growth. And if there is an offer in that space and valued okay, then I think we are interested.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बार वो खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you
The tenure of Suresh Narayanan, the managing director of Nestle, has been one of growth, managing challenges, and finding new venues and growth areas for a brand which is synonymous in so many Indian homes. Just think about it from a shareholder perspective. During his tenure, the shareholder return or the stock price of Nestle has gone up nearly 300%. That's in the last 10 years. Now, very interesting times to be speaking with you, sir, and thank you so much for your time to us here at NDTV Profit, to look back and I think also look forward to what is happening with the space.
Thank you, Tamanna. Thank you very much for your for NDTV to take the time to come and talk to me. I think it's been a very satisfying journey, and yes, you talked about some numerics. I mean, the last 10 years, the turnover is up by turnover is up 2.5 times. The profits are up 6 times. The market capitalization is up 4 times. The number of shareholders is up 7 times. And the return on equity has gone up from about 20% to a mouth-watering 89%. But more than that, Tamanna, what gives me great satisfaction is the tone, tenor, culture, and the people in the organization. I think people make the organization what it is. And I'm very proud of the fact that we have some of the finest people who work at Nestle.
So, as you see this landscape changing so quickly, what is it that Nestle is right now doing different? And we'll come to the rearview mirror in a bit, because I know there's so much that you have seen and experienced we want to know about. But in the here and now, right now, when you have a giant like Nestle and you have regional brands and homegrown brands nibbling away, how do you make that shift?
Number one is to keep our brands relevant. Maggi is still a huge brand. And Maggi continues its journey because of its relevance. The relevance to the consumer, relevance in terms of consumption occasion, relevance in terms of consumer insights. Same applies to Nescafe, Kit Kat, Milkmaid, and many of the other brands. Incidentally, Milkmaid is one of our oldest brands, and yet it is one of the most engaged brands in the digital space. So that tells
because you have the recipes online.
You got recipes online, you got different activities online, you got festivals coming up, and Milkmaid being part of it. There's so much of association. So therefore, I think keeping our brands relevant is one. Number two is the pace of innovation. Today, we are innovating at a pace that is 3 to 4 times faster than we have ever innovated before. Today, about 7-8% of our sales comes out of the 150 new products that we've launched in the last 10 years. There are many more new ideas across categories that are on the anvil. Some of them addressing new consumption opportunities, some of them addressing existing consumption opportunities. So that is happening. There are new consumption spaces being opened up. I mean, the whole extension into Nespresso or into breakfast cereals or into Purina Pet Care, right? Or Dr. Reddy's Nestle Health Science joint ventures. All of this is getting into new business spaces, exciting business spaces with differentiated propositions to build both a premium journey with the consumer, because the consumers are increasingly premiumizing, to build a digital first connect with the consumers, and also to help our current brands, which have relatively low levels of penetration, accelerating the penetration-led volume growth as we move forward. So there are multiple actions. I think I would say that the opportunities for Nestle are immense, and probably the best will be the future.
Yeah, best is yet to come.
Best is yet to come.
You sound so excited about everything that's going to come. Is it difficult to have the end of your tenure? And of course, you would have retired actually 5 years ago. It's an extension. Is it difficult for you personally to sort of get off that treadmill?
No, I think, Tamanna, every organization needs... I've been at the helm for 10 years. It's the longest stint of a chairman and managing director of Nestle India. I'm probably one of the first CMDs to retire from the company. Most others have been transferred or moved on to other things, but I'm retiring from the company. I think every organization needs a leadership inflection point, a need for change. And the wise leader always goes when people ask why rather than why not. And in corporate world, I think it's important to let go when you have to let go, rather than cling and hang on and cringe and make yourself a nuisance. So I think the organization...
I'm sure your team would not agree.
No, but I think the team deserves a change. They deserve a change, a new perspective, a fresh set of eyes to look at the business, new skill sets coming in. My successor comes in with new skill sets. All of that is going to be vital. So it is not that I'm getting bored with what I do. I'm getting more and more excited. But the way I look at it is that this is a time to step off the pedal, to do something else different in life, and leave it to Manish and the team to take this great company forward.
So Manish Tiwari, of course, is going to be coming on board, previously at Amazon, in the same space, but very, very different experience. from a staples FMCG company.
But he comes with strong background in Hindustan Unilever.
Yes, strong background in Hindustan Unilever. Why do you think he's the right choice to be your successor, and what is that one word of advice you've given him?
Well, I think he has a compelling track record and background. I mean, apart from being at Amazon, which is a tech company and a dynamic organization, he's had a very good experience at Hindustan Unilever, both marketing and sales and in international operations. He is a lot more savvy on the latest technology initiatives because he comes from a tech company. So he comes with a best-in-class of technology being adapted to the consumer into an organization that is wedded to the consumer and that can do with greater doses of technology applications. And I think he's enthusiastic about the role, and the board is enthusiastic about having him on board.
And your word of advice to him?
As I mentioned somewhere else, I think crisis is the only thing that will not change in business. Yeah. So you keep preparing yourself and be on your toes. And I think the opportunities are there for you.
You know, speaking about crisis, an interesting factoid is Mr. Narayan's tenure started in the midst of one of the biggest crises for the company. We're going to take a Maggie break because on the other side, we'll speak about that crisis, the Black Swan event. And I'm going to also ask the chairman of Nestle, what's the best way to make and eat Maggie? When you took over, this was in the middle of a huge controversy. What's in the Maggie masala, FSSAI action. I think I saw a story where they were compacting packets of Maggie, you know, in cement factories because you didn't know what to do with it. It was a bad time to take the top job.
Well, yes, Tawanna, I think in life, sometimes, crises find you. And this is one of those cases where I was happily in the Philippines when I got the call to come to India to help the company. And
you got the call after the crisis broke out? Okay. So you were the call that, you make when you need someone to come in and fix things?
Well, I think it was a call. It was a request to come and take charge of a situation that was spiraling a little bit out of control at that stage. And yes, I mean, I did what any professional should, which is to address the call of duty and to come and do the best for this team, because I owe a lot to the Nestle India team. Now, I've worked here before. I was a sales director in 2 stints, and I have very fond memories of this organization. And yes, it was an existential crisis. I didn't have the answers. I had only a few questions, and I didn't have the solutions, but had a few leads. And yes, I had a great organization that stood by me. I think it's, leadership also needs followerships. Otherwise, it doesn't work. So since I had a past credibility in this organization, there were people willing to kind of listen to me and to follow the path. But yes, I mean, there's not only events and circumstances that followed, but also I am spiritual by nature, and there is a huge hand of God as well in this that helped me and the organization come out of what was a bruising crisis and what might have turned out to be a catastrophe for the company.
Did it require you and the company to go back to the drawing board on factors like disclosures? What are we printing on the packet? What are we telling people? And those were the early days where awareness about what we eat was just beginning to grow. I would say, relative to now, where, now there's a lot of awareness about read the back of the label, know what you're putting in your mouth, healthy, unhealthy, etc. Did it cause a rethink?
No, look, I think some of the allegations that were made, one was on the level of lead in the product, which was completely later on set aside because of the testing procedure and the way it was established. Secondly was on the addition of monosodium glutamate, which was also established beyond a shadow of doubt that there was nothing there, even remotely resembling monosodium glutamate. And the glutamate that comes from the onions and spices that is used in the product. So therefore, there was nothing there to feel. One of the things, Savannah, is companies can defend themselves provided they are on quality and safety and ethics absolutely squeaky clean and straight. That was the strength of Nestle. I mean, if I was able to stand there, coming out of this crisis has got less to do with any magic that I might have done, but the painstaking number of hours and the sheer discipline in maintaining quality and safety of our products. And I think that is what was vindicated as a result of this crisis. So no, we didn't have to make any changes in any declarations. In fact, the product, we said, because the consumers loved us. We ran a whole campaign because consumers came to us saying that we miss Maggi. In hundreds and thousands, people came. So we had a campaign, the only one of its kind, where there's no product on the shelf, but there is a feeling of the brand being around. We said, Maggi, we miss you too. How will you do that if you don't have the trust of the consumers? And I think this trust was built over, at that time, almost 40 years. So I think if the organization is ethical, honest, and clean in terms of its fundamental practices, it gives the backbone to the chief executive to be able to take a confident, transparent stand, a humble stand, but a transparent stand in front of authorities and the media, people like you, to make the statements that he makes. If I had something to hide, I would not be able to tell you with the confidence that I'm able to tell you then, as I can tell you now, that there was nothing wrong with the product, one bit.
And it's come back with a bang.
It's come back with a bang, and it has been a huge learning lesson for the company, because companies sometimes also go through periods where they feel everything is very comfortable. When I said that crisis is the only thing that doesn't change, I didn't mean it in a negative sense. I only said that you have to be on your toes all the time. You can't take the consumer for granted. You can't take the regulator for granted. You can't take the environment for granted. And crisis, incidentally, Tamanna, doesn't come with a calling card. It just lands up at your door. You think that this is a minor one. It turns out to be a major one. Sometimes what looks to be major turns out to be a damn squib. But it comes, and it comes unannounced. And I think that is the challenge of our times. And therefore, leadership needs to be not only competent at what they do, but must have the moral compass and the emotional compass to be able to stand up and be counted during a crisis. And I think that is something that I don't think too many business schools teach you that.
Yeah. Crisis management. We're having this conversation about Maggi, and we'll get to the other crisis, the other opportunities. But can you settle one debate? What is the way that one should make Maggi? Should it be soupy? Should it be dry? Should it be with cheese in it? What is the actual way to make Maggi?
Make it the way you like it. Because Maggi is one example, Tamanna, and I can't think of too many brands in this world, which gives you the benefit of mass customization. You like Maggi your way. There are some people, and I met some worthy gentlemen of the Indian Army who, when they were training at the National Defence Academy in Kadakwasla, used to make Maggi with immersion rods in a mess tin. And it used to get burnt. And they loved burnt Maggie. So there was a brigadier whom I met once who told me that in Siachen, he and his people would be having burnt Maggie on a bitterly cold afternoon. But that's how they liked it.
How do you like it?
I like mine plain masala. I don't like any other stuff to be added to it. Yes, when I am up in the hills, there is everything to believe in something called Pahadon Wali Maggie. There's something about that Maggie which is magical. I don't know whether the water does the trick or whether the chef's hand does the trick or sheer practice of having dished out thousands of plates does it. But it gives a unique taste in that cold weather.
Yeah, so all the ways you can have Maggie. And what's the best way to eat it? Is it something that should be slurpy, wrapped around your fork? How do you do it?
I like it wrapped around my fork. There are some people who like it slurpy because that's also, to me, I think the slurpy thing is a bit of an acquired taste. Either you like it that way, but the Maggie that I like is typically the one that we're having in front of us.
That's the Maggie story. There was another, I would say, crisis more recently on baby food. And in age of social media, then it expands very quickly. And then it turned into this whole thing about, is there more sugar for Indian babies versus European babies? Tell us about that.
Look, I think, any formulation that is done for any category of human beings at Nestle follows a global standard and a understanding and appreciation of local regulatory requirements as well. So it's not that there is one single stuff that is made and bandied across the whole world. It is made to global standards, made to global specifications on nutrition, in terms of the energy, the protein, the fiber and other nutrients that go to make it. But there is a local appreciation of the regulatory environment as well. The Cerelac that we sold in India is a Cerelac that has got all the specifications that are vetted by the FSSAI. And the FSSAI incidentally doesn't do it idly. It does it with Codex and with other organizations, and they're pretty stringent about it. It's a very scientific body that I respect a lot because they apply the principles of science in determining the standards. Our levels of sugar were at 40% or less than 40% of the permissible levels of sugar that were allowed as per law. Right? So there was no excess sugar or there was no sugar issue as far as Cerelac was concerned. Even internationally, there are products available with no refined or added sugar and products available with refined sugar. As a consequence, and in fact, we had started to work on this even before because we came out strongly with our statement, and I remember having spoken to you as well on this whole controversy. It was done in real time. When we say respond quickly in a crisis, that's probably one of the examples that I would like to quote. And very soon, we came up with Cerelac and Ceregro, which were both products with no refined sugar at all. Today, the consumer has a choice of either having a product with less than 40% of the permissible levels of sugar or no refined sugar in the product. Both are nutritionally efficacious, but some consumers are more sensitive to the sugar word, and there is a no refined sugar variant that's available as well, which has got off to a great start.
It's also maybe, was it a wake-up call to the fact, and we're talking about babies, where this level of awareness, but we are going into a world where packaged sugar, all of these are supposed to be very, very bad things. And if you look at the swath of product profile, then a lot of what Nestle sells will come in the sin goods category from a health perspective and what the trend is right now. Do you think that this is something which will pass over or will need to be addressed at some point?
Look, I think there are two parts to it. One is, most respectfully, I would like to submit from the world's largest food company. There is nothing called good nutrition and bad nutrition. It's all about balanced nutrition. If you wolf down 6 packs of Kit Kat or 6 packs of Maggi in a day and expect yourself to remain healthy, I think you're in a different world. Whereas if you take in moderation, nothing is harmful to you. Drinking too much of water can also be harmful to you. Right? Excess levels of hydration is also not good for you. So in a similar vein, there is nothing called good nutrition and bad nutrition. It's all about balanced nutrition, which is what the company advocates. Nowhere have we said, please go and binge eat any of our brands relentlessly over a period of time. The second part is, there is a lot of fake news on nutrition that is making the rounds.
Yeah.
Nutrition is, apart from politics and religion, probably one of the areas where the maximum amount of fake news is going on. Therefore, we have a site, which I would also like your listeners to know about if they don't, called Ask Nestle. Ask Nestle is fundamentally using all the nutrition knowledge and facts that we have as a company to disseminate to consumers in terms of help and support in planning the nutritional profiles for their children, diets, recipes, nutritional facts, all of it scientifically validated. So you can go on to Ask Nestle, which is one of our most visited sites, for consumers to check and see whether that information that they're getting is validated by science or not. Excessive play on emotion and less on facts leads to very destructive paths for decision making. And that is something that we can avoid. I mean, at least the hysteria doesn't need to be there on a scientific fact. Hysteria can be there on something else on social media that we have got in any case all around us. But on nutrition facts, there doesn't need to be hysteria. There doesn't need to be